It is May 15. We're going to be streaming stocks, options, futures. We're going to technical analysis, trading the SPY, BBBY, whatever comes our way. Keep an eye on some runners from last week, like top. Sub up, like up, comment down. Happy money sticks around. This is a live stream, so I'm going to get set up here. Thanks for joining, though. Got a little Yaz one. I'll tweet out the stream here. Get you guys on Discord as well. Okay. Doc. Morning, Isaac. Good morning, Damien. FRC got bought by JP Morgan from the FDIC. Morning, Mazamis. Mozamus. I'll put our Twitter link in the pinned comments today. If you guys haven't followed us on Twitter, do it. Buddy, is it doing stuff again? Yeah, it's looking a little jumpy pre-market. I actually picked up one share of top. My only account that I could buy pre-market before 7. I need to fund this Weevil account more. I never really realized the power that was at my hands, my fingertips, and my grasp. Yeah, this one is looking solid. Buddy. I was looking at first or Fisker. I don't remember what happened with this thing. What made it rally? Cleared to make deliveries in Europe. That big of a rally for that news? Impressive. This was a big move. Ah, Mullen. Mullen. I like it. I didn't get too much of Mullen. That's okay. CCP stocks moving. Yeah, GSN's holding all right. I was like in top with this pre-morning action, but kind of got shut down. Let's see, I mean, it is holding this level. Kind of interesting. $65 kind of as a support. See if that fails or holds today. Might be picking up some more shares if it holds. BlackRock, was that what it was? Oh yeah, that's right. I'm not seeing that on here now. Wait, is that it? Because this is saying it ripped because they're now selling in Europe. Vehicle deliveries in Europe in sight. Not to say that's true as far as why it ripped, but I'm not seeing stuff on BlackRock. I don't remember that though. Maybe it was both. I don't know, I was just looking at the cash code put screener and Fisker was on there. A great day to sell those. I'm sketched out about most EVs. Pac West is on there. Yeah. Which one's next? Pac West? Silvergate. Saw a post of Wall Street Bets post. This guy was up like 60, 70 grand on FRC puts. That was his weekend. Everyone was like, "We should close, dude. See what happened to What was it, SVB? He didn't close. He still has it, so he might be. Yeah, that might suck. X-Bang. I think Fubo's at a nice spot. Go along. Too soon on Carvana. That could. We'll see if it holds this support here. It's like 650 range. If not, yeah, I mean you've got a pretty big range down here to come down to. A lot of these charts I'm looking at are all kind of near support, so could be close to big breakouts to the downside or bouncing. Any good news? JP Morgan bought him. So that's good news for the company, I would imagine. Alright, yeah, Damien. IGF. Gross. China? China. There's a post-market runner, huh? Wait, is this one? Did we watch this one? Can't remember. Maybe not. This is a good one to have on your radar, though, honestly. This could retrace today. Good eye. Mazimus. Keep an eye on this one today. Recent IPO. Okay. Up 63% still pre-market. Nice build. Nice. This one might be one to pick up pre-market. Not a whole lot of volume, but the spread's not crazy, at least. Spread on top is awful. It's over $2. About adding to my Mullen. I like the catalyst for this one. Mullen Automotive acquires B&R Eccles Transport. Let me throw YGF on the watch list. Yeah, we'll see what happens after market open. If top can hold that support, it might be a good pickup. The thing, the price action is not very sketchy on it. Ugh, which is nice. But the spread is, you know, I mean, the whole day yesterday or whenever on Friday, it is, yeah, I mean, it slowly went up, like halt up, and then a slow top, and then slowly started coming down. Like the entries and exits wasn't a whole lot of rug pulling at all. MEGL's holding this level too. Upset his gold. Is it a website just like showing position holdings and stuff? On our Discord under trading tools, there's a lot of actually good resources. It's not organized all that great, but if you just kind of cruise through each of these links, some of them kind of tell you what they are. Like you don't need that. This is good. It's good. Good Economics is a great site. Squeeze Metrics is cool. Import Yeti is really interesting. Get a lot of info in here. Open Insider, Shift Search, which that actually might be down now. Badoofa dates. Ufta. Option Scanner, Stalker C is good. Conoverse. Yeah, there's a lot of good stuff in our trading tools. Baby boomers make up 39% of home buyers in 2023, displacing millennials from the top spot. Oh, you saw it on their 13D? 13D? I don't see any article like headlines on it though. Unless I'm just missing it. HKD is down 10 pre-market. BBY is bounced a little bit. Yeah, we saw this RSI divergence here. That would have been a nice short after their earnings. Still could be good. Drop below the 50 moving average. It's got a little bear flag here. Might bounce off that 9 though. Look how well it respected it back here. That's on LMT. HD still looks bullish. These candles are big the last like 3 weeks. Big range, big candles. This thing moves interesting. Mullen rocket today. Yeah, FRC is suspended. It's not like a haul, it's suspended. That's why it's done in pre-market. JP Morgan bottom, so it could be suspended. We don't really know how long. HLP. Yep, certainly. Ripping back up to VWAP. Where were you 15 minutes ago, Mazimus? I guess we could just look at the scanner on here too. Look at other stuff. HLP with QH. The Chinese one. Yep. We have SNTG. China. Ah, JZ. I've traded this one before actually. One of the Chinese education rippers. Morning, kitty daddy. Going up now, in fact. Oh, I lag. Yeah, it depends on the deal. It's all negotiable. So there was a time when I would just look at pre-market, like top pre-market, I don't know, 10. And I would just put the resistance of the high from pre-market. And I'll just put alerts on all the highs from pre-market. And if it broke that, I would just go long. It was actually surprising how often it worked. Buys moving up here. See if it makes it back up to VWAP. But yeah, if it broke the pre-market high and it was already like running pre-market, you know, sometimes it would just be a little false break, but oftentimes it could break it and kind of maybe even retest. Good little morning trade. Not to hold too long. Good like that for a long time though. NOx. Yeah, I mean, we could do it today. Like, I don't. Back when all my accounts were above 25K, so it was each just a day trade on whatever I wanted. These are such big pre-market moves though. It's almost maybe not even with some of these. DXAI. Getting up to that resistance a bit. Nearly 1 in 4 millennials plans to rent forever, up from 1 in 7 just 3 years ago. There are a lot of movers this morning. I don't know what's going on in the Chinese market. They get their cyclical pump, it would seem. SNTG, also Chinese. Yeah, HLP, looks like HLP might be the top as far as pre-market percentage so far. Projected VWAP there. We could do a little morning day trade on one of these. UH. APLM had a big move. We've got almost an hour. We could trade these little pre-market. These might have pumps before the market opens. Still have my short in the futures from last week. I was expecting a pump into close. Not sure why I didn't close my short and wait. This actually would have been a great long come into close. Right, power hour basically, or even that last this move. Pretty large. Yeah, that's a huge move. 0.3% on the SPY. Did that in like 30 minutes. JP Morgan CEO Diamond expects banking consolidation. Oh, you're doing it. Also says bank failures this time was nothing like 2008, 2009. U.S. is one of the worst countries in the world as far as corporate governance, Carl Icahn said. So that, I actually didn't watch the interview with Carl Icahn, but I guess the one where he's got that clock in there, the actual interview, he's covering the clock and then he's like, he moves his chair and shifts and the clock gets exposed that says 1:47 Monday on it. And right as that happens in the video, it's at, I guess, 7 minutes and 41 seconds. I didn't check to see if that's true, but that's what I heard. JP Morgan says we did not seek out this deal. FDIC invited. Hasn't changed the odds of a recession, but has stabilized the system. 3 out of the 4 largest bank failures in history have occurred in the last 2 months. Wow, that's insane. That's crazy to think about. Super Mario movie is estimated to top 1 billion in global ticket sales. 10th animated film to reach that milestone, the first since 2019. Oh, First Republic. I didn't realize First Republic was bigger than SVB. Wow, that's a huge deal. I remember SVB was the second biggest. That was First Republic. Yeah. The top 3 are the... Yeah, basically what that stat said. 2, 3, and 4 are all from the last couple months. Wild. This is confusing. We were talking about it last week. Maybe it's a misprint or something. This date on May 1st, a new mortgage structure is in place. 620 FICO score will have a 1.75% fee. 740 FICO will have a 1% fee. I thought the lower FICO score was getting a discount. Maybe it's typed, I don't know. Weird. Very confusing. I just went up to VWAP there and rejected. People spent 20.7% more at restaurants than they spent on groceries in 2022. What? And that figure rose to 29.5% in the first 2 months of the year, according to Commerce Department data compiled by JLL. And yet, in the last 2 months, we've had 3 out of the 4 biggest bank failures in history. A little disconnect there. People going out to eat, banks failing. No big deal. Jack Ma of Baba has resurfaced in Japan and has joined the University of Tokyo as a visiting professor. School says he will do research and give lectures. Was he like disappeared? Had he disappeared this whole time? JP Morgan Chase will make a payment of $10.6 billion to FDIC for FRC. Bullions is pulling up RC's letter to BY board from a year ago. There's some stuff I didn't really I don't know. I guess I didn't remember that he said that a sale that can lock in substantial premium for shareholders and provide Bed Bath & Beyond flexibility of the private market could be an ideal outcome for customers, employees, and investors. Essentially, he's talking about, OTC market and taking it private. I don't know, Boyd shared the whole thing earlier. Past 10 years have shown that Bed Bath faced a difficult existence in the public market. The market is not giving the company nearly enough credit for Baby's value. A sale that can lock in substantial premium for shareholders and provide Bed Bath the flexibility of the private market would be an ideal outcome for customers, employees, and investors. So taking Bed Bath private and maybe spinning off or IPOing Baby. We believe Bed Bath presently satisfies financial sponsors with interest in specialty retailers with recognizable brands, niche assets and sub-banners, and margin expansion opportunities. A private market participant with a long-term vision could unlock meaningful value by running the core business for cash, initiating a public offering for Baby at the optimal time. After stripping out the sizable cost of being a public company and setting a more focused strategy, we suspect Bed Bath's core business, excluding Baby, could generate attractive earnings. I think shareholders going into OTC trading is already written in this letter. Why did he sell then? 56% of Americans think that going to college is not worth the cost. Morning, Mohammed. Maybe he just sold profit. Sold for the squeeze. Thought it was overvalued at $30 a share. Just trade it. Wonder if Silvergate will make it. Might want to pick up some Express shares, actually. Have that on my notes. MEGL going to 5. Lots of companies trade on OTC. Lots of traders just trade OTC. MEGL does look like it's starting to make its move. Might grab a little pre-market trade on this thing. Just broke those resistances. Trading pre-market's a little sketchy. I don't want to close before 9, that's the thing. Oh yeah, I'm gonna wait. Not enough time. Want to mess with it for the next 30 minutes? Neo died. Yeah. Not necessarily. Still made that divergence. HLP's coming down still. They're crazy ones. UH. AZ. Where's my ending? What do you mean? MU, man, look at this thing. Those big swings. Handles are big. It's relative. I don't. What was I even talking about? Sorry, I was slow on chat. We're talking about OTC. Ryan Cohen. You know, I had a 30% rise in deliveries. Nice. X Evolution. Whatever, whole Gene. Whatever. Probably haven't even liked the stream. Only got 7. Oh, thank you guys. Appreciate all 7 of your thumbs ups. 8:58, 2 minutes to 9. We get some levels drawn up. I'm gonna get some on BY and SPY. We get a little pump in the morning here on Bed Bath, and it's at a resistance. I will probably be closing. Some handy news. I got the exposure for over the weekend, so I'm happy with that. Didn't have a huge gap down from chapter 11 to chapter 7, or whatever other bearish thing they could think of. So that's nice. Friday we did break our low though, which day-wise is not looking too good. Kind of building the support here, and got flushed below it. Like 11 cents or so, yeah. Okay, and on SPY. Might just get kind of choppy now until Powell. So we're gonna be careful not to force new trades, of course. New big breakouts will probably be false. Oh, we actually broke that high on Friday. Look at that. Yeah, this move end of day was crazy. And the whole day was quite bullish. And then that big volatility. Oh, Mullen has options. Looky, looky, looky. Maybe it'll get back up into the price range of them. RC is suspended because JP Morgan. SI is still trading. There's still hope. Marking some levels on the futures. Well, I should look more at futures and set it up trading. Okay, hopefully we'll get just at least futures charts. I just want to look at it. I don't have to allow trading. They have it. You're gonna fly today? Wow, you're all over the place, Rick. Up in deliveries. It only makes sense. Big rejection on VWAP there. HLP new low. .905 and big candle. Good data this morning. Going to check with our handy dandy bot. It's AI, guys. It's AI. I input equation and it gives me an answer. Okay, manufacturing PMI 945, construction 10, ISM manufacturing 10, manufacturing PMI 10, some bond auctions later in the afternoon. Happy May, everyone. Yeah, it doesn't look like much day today. Tomorrow we have job openings, and then of course PALs on Wednesday. And then jobless claims on Thursday. So be kind of mellow these first couple days. Morning, Riley. You love them or you hate them, or sometimes you do both. Gonna be May? Going to be May. Started watching the new Mandalorian. I like that. It's like, I remember it from last season. It was like the show's designed, it's like written and created as like a cartoon. It's kind of cool. Just how the episodes are short, and each episode is like a quest or a mission. It's not like our more traditional shows we get now that are an hour, or that have just this ongoing soap opera feel, ongoing underlying story, but just like these little side quests and missions. It feels like either a video game, like a campaign mode, or like comic. Each episode's like a comic. I don't like how they made him like suck in this season so far though. Episode 1, or no, maybe 1 and 2, it keeps just like he fell into the trap of that big spider thing. Like, dude, what the heck, man? You suck, Mando. And then earlier, it keeps getting in trouble. I'm like, they just have to make the girl look strong, I think. So here's the, oh no, here's a spider. Ah. Boba Fett Mando guest appearance. BBY's getting a little bounce up here, a little inverse beta on Le Spy. I don't know why they made him like weak in this season so far. Yeah, we'll see. I like it though. It's a cool show. Oh, that's a good point. Is that what they're trying to say? That's interesting. I didn't even think about that. Not enough tension. Yeah, that's funny. They didn't. I mean, of course, they mentioned him taking his helmet off, and maybe they're trying to portray that. They got trapped by that spider thing. But I mean, the chick comes in and she never has her helmet on. She just wrecks. Thought the year was the day? Uh-oh. Byron Days. Sell him on a bounce. Pedro Pascal. Oh, that's the guy's name? Yeah, he's pretty good. Haven't seen Jedi Last Order yet. Alright, getting a little inverse here. Spy's coming down. You guys make a little move up. We have 20 minutes. Sink or swim, I can't tell my cost basis. It's very annoying. Okay, cost. Whenever I buy shares do it, it just reverts to wash sales, so it's showing what I'm down overall on it. I just want to know when to sell from my last purchase. I won't even know when I'm profitable. Unless it's there at the trade price. Okay, maybe this is it actually. Very confusing. Oh, it's a game, Jedi Last Order. Nice. JP Morgan bought FRC through the FDIC. FDIC shut him down, and JP Morgan bought it. So it's suspended. It was another bank failure. That's it, Spy. Let it out. Let it out. I don't know. I would be surprised if it happened that soon on top. That being said, I did buy a share this morning. This setup was looking nice, and then it got shut down. Kind of looking to see if it holds 65 level. If it breaks that, at least a hold of this level from before. Friday is low. What? But whatever rallies there are on it, I expect them to be smaller. I expect them more to be bounces on the way down. So making profits quickly. Halted. Still halted. I don't know if you own shares, but I'm not sure what happens, honestly. Depends on the wording in the contracts, I suppose. Let's see, JP Morgan. Yeah, I don't know. You're probably, most likely you're screwed, yeah, but maybe not. They paid like 10.4 billion for it, so that's what it said. So I don't know, maybe you're in good shape. The market cap as of close was 650 million. Yeah, I was looking at CXI pre-market. Oh yeah, it had a big bounce. Watching a little earlier. I started streaming like 8 today. Yeah, I had that run on Friday. Right, we actually jumped in. Closed out and it broke level or this, I can't remember. Hmm. I mean, it still kind of looks like consolidation up here at this high level. And all of this is based on hype, so it's very sketchy. The much safer player to be going short on this thing. In fact, I was even thinking about that. Taking a short on AI. Wow, this thing's already come down a lot. Yeah, in like longer time frame, a few months, maybe a year. But this has already sold off quite a bit. But probably could come down more. Broke through this support, now it's consolidating. Friday did give an engulfing candle though. We've got a nice green day to get a short with some time. I mean, this company, I mean, it's legit though. It's not just. I think they have like revenue and stuff. Yeah, so this is probably one of the least. I mean, I guess if you consider like Microsoft and Nvidia and those, but as far as strictly AI stocks, is probably the least sketchy of them I know of. This thing, where's it over here? Oh, sick Al. Sorry, mate. I bet Kevin brought back some diseases from Mexico. Diseases. Federal regulators have seized First Republic Bank and sold to JP Morgan. AMC Gen Z visitors rose to 15.5% from 14.4% last month. Okay, I've got about 10 minutes to go. I'm kind of bouncing on this level still. Any of you viewers talking about selling May? What's that, Rick? So that's true. See all these IPOs? Oh, never mind, those are earnings. That makes more sense. Yeah, these real sugar. Cane sugar. Guys on about. I heard these guys pre-market before.
President of Bianco Research. Let's start the convo there. Jim, does it look like this is just a company with a similar business model like Silicon Valley Bank, or is it representative of some systemic risk that might be making its way through our financial system?
Well, it's kind of a little bit of both. You know, all regional banks are highly concentrated either in a particular business line or a location. But we've had the second, third, and fourth largest bank failures in American history in the last 2 months. So at some point, this starts looking like '07, in that, you know, first we had BNP couldn't price their funds, then we had IndyMac, we had Washington Mutual, we had Countrywide, we had Fannie and Freddie, we had Bear Stearns, and we kept saying bad management one-off, bad management one-off, and eventually we started to realize there was something more going on here. And what is that something more going on, I believe, or what is the legacy of this, is I heard it described well, is it's the right side of the balance sheet. It's liabilities. It's not about assets. Liabilities are bank deposit. No one wants to keep their money in a bank that's giving them no interest rate. They're going to move to a money market fund with 5%. And that is causing the banks to continue to bleed assets and bleed assets and bleed assets. Now, there probably won't be another bank failure, but check back in the fall, when hundreds of billions of dollars have been shifted from banks to money market funds, and they're going to have to start cutting back on lending, and that's going to be a problem for the economy.
Jim, the cutting back on lending, how do we separate something that is naturally occurring in slower portions of the economy, a basic kind of recessionary indicator and cycles, from something more calamitous, as if the economy does slow down, and I think it is, there's not really much of a debate, right? We should see credit start to contract and things tighten up. How do we separate what is natural from a cyclical standpoint and what might be unnatural?
Well, that is going to be very hard to kind of separate those out, because you're right. As the economy slows, there should be a pullback in lending. In fact, Jamie Dimon said it on the investor call this morning about First Republic. No, we're not going to be pushing out any more jumbo mortgages. They've got enough of those. Thank you very much. And that is part of the natural cyclical move in the economy. But I think what you might also see is more and more banks are saying, look, you got a good idea, you got good credit, I don't have the balance sheet to give you the money because of all of these withdrawals. And that's going to be up to the Federal Reserve as the primary regulator of a lot of these banks to kind of separate those two issues out. But I do think it's all pointing towards a slowdown.
Hey, Jim, thinking about the similarities
how many banks have to fail before they realize it's systemic risk?
The bank sector is under quite a bit of pressure. Regional banks last week made new lows for the year around FRC. 2, 3, and 4. So we've gotten a big sell-off here in the banks, even without a big sell-off in the market, which is sitting near elevated levels at 4,200. You know, if we kind of line up maybe the bank sector with 2007, 2008, when JP Morgan took Bear Stearns, and when JP Morgan buys FRC, I mean, any way to kind of like overlay those and see maybe where we are, you know, because it started to at least maybe begin the end when JPM bought Bear Stearns, like an early part of the beginning of the end stage, maybe, if that makes sense.
Yeah, let me start off with a bold statement here. First of all, banks are very complicated to understand. And I've often joked that whenever anybody asks you a question about banks, there's only two answers. The answer is, I don't understand them, or you're making it up. And that is part of the problem with the banking system. You could see that in the last couple of weeks. We look to market signals, and what have market signals been in the last 2 months? Completely wrong on everything. I mean, even last week, going into earnings, First Republic stock was stable at around $18. There's nothing here. We're out of the woods.
Talking about
then
your
they report
Mexican
their earnings,
soda,
$3 in 2 days. Well, that means that the market completely misjudged them, like they completely misjudged Silicon Valley, like they completely misjudged Signature, like they've completely misjudged a lot of other things. That's what happened in 07 and 08. We completely misjudged it. Oh, it was over with Bear Stearns, but then we got IndyMac, we got WAMU, we got Countrywide. Oh, these are just one-off things. Don't worry about it. Don't worry about it. And then September came, we got Lehman, and things fell apart. So I have been very skeptical of market moves. The market has shown time and again it really doesn't understand the banking system. And why should it? It's too complicated to really understand. It's really hard, and it shows up all the time in market signaling.
Okay. And to your point on the calendar, if this is the JPM Bear Stearns, of course, there were still some big dominoes and chips to fall. So, Jim, how do you expect the Fed is going to fit into this? I mean, it seems like the irony here is that the only thing the market is concerned about broadly is the path for interest rate hikes, and is able to spin this whole incident and fear, or whatever it may be, into a positive, with asset prices the highest and financial conditions the loosest in a year, basically since the Fed began its hiking program. Where does that come into play here? Is the market right? Does Powell have to soften his tone, or will things really break hard if he doesn't?
Well, the market's playing the same story it's been playing for a year now. It's been, hyperventilating, excited about that the Fed's going to pivot. The Fed's going to pivot. Now, I guess if you keep saying it long enough, and after 15 rate hikes, eventually you're going to be right, and that the Fed is going to pivot. But that's more of the same. But let's back up now. Quick word on Friday, the Fed put out a report on Silicon Valley. They put out some source material. On February 14th, the Board of Governors of the Federal Reserve was given a presentation about unrealized losses in banks. And on page 4 of that presentation, they were given an example of a bank that was teetering on the edge. Silicon Valley Bank. Jay Powell was told 3 weeks before it failed that it was on the verge of failing because of higher interest rates. And what did he do? He went March 7th and 8th and said, I'd like to raise rates 50 basis points at the March meeting. They failed 24 hours later, and then he was forced to back off and go 25. So what has he shown? He don't care about the banks. He don't care about the economy. He doesn't care about anything except inflation. And inflation is too high. He's raising rates, and he's going to keep the door open for more rate hikes. Shouldn't expect anything less from him. Is it a mistake? Yeah, I think it's a mistake, but it doesn't matter. That's the way he looks at things. It's about inflation, and you can mouth words about banks and the economy, but all I care about as Jay Powell is inflation, and that's why he's going to hike, and he's going to leave the door open to hike again.
Okay. Hey, Jim, is there anything that stands out as a way for investors to thread this very complicated macro needle right now, or should folks just be...
All right, we're going to back to our gas for a bit. Market's about to open. I'm keeping an eye on BBY this morning for potential pump to close my shares. And that's all I have planned for the morning. I do have some short futures that I'll probably close to, or at least set a stop limit if we get below it. Oh, I'm sorry. Sorry. Wakey, wakey. That is the bell. Morning bell. I usually don't have TD, the desktop open that early. That's why we don't usually get that morning bell. So yeah, these ones we put on our watch list: HLP, NNOX, YGF gapped up, CXCI now too. Mullen opening up 8%. SPY's moving up here. Snail's up 7. Get this market to wake up a little bit. Never heard this song before. Ace. Ace. I'll do a little poll, see what you guys want. BBBY is moving up a little bit. There you go. There's your poll. See what you guys want. 16 likes this morning. Thanks, guys. I appreciate it. So yeah, it's better than nothing. Yeah, HLP is halted. Jeez. Yeah, CXAI up 17%. BY up 6. It's to one of the pre-market highs. Next up, like 12, 15, around there. $12.15. Do I hear $12.15? %10 on Bed Bath. Go 13%. There's 12, 18. Put it for yes. Is that the rejection on the day? Is that it? See, let's give it some time. Usually it kind of consolidates for a little bit before it fully rejects. Considering a stop loss or stop profit or whatever, but I think I'll just wait. It might get kind of wicky. It's not like take them off. It's just, I don't know. Hey, Olivia. Eyes moving up. I've just I guess I've been playing it more honestly the last like couple weeks, I guess. Before at one point I'd only play it during power hour. I'd play it just when I was quiet or wasn't talking or couldn't talk. Mullen's kind of coming down. HLP still halted. SPY's ripping up. Green now. We've seen this before on BBY. Consolidating above VWAP here. We'll see. Looks like that is going to be the line to break. If it breaks that, that's very good. If not, probably going to see new lows today. That would be my guess. Like new all-time lows. Excuse me, sorry. No, volume's, I mean, relatively it's not big yet. It's less than yesterday. Friday. HLP resumed. XI still 15%. Thank you guys. Blessed all the demons coming out of me. If you didn't realize that's what you were doing, you did it. I don't believe in that, so. Oh, it's looking like a repeat. I don't know. It does this. It does the bull flag and then it rejects. So it was our bull flag and then it broke through. Or it's just gonna totally flush through. Little morning liquidity pump for shorting's sake. And it might be over. Trappy's neighborhood. It's okay. It's okay. I'm curious if we're gonna get an update on BBY being delisted, because so far I don't think it's shown up anywhere, like on brokerages or delisting warnings or notices. I think if it is going to get delisted, it needs to show up on those lists probably today. Maybe they have till tomorrow. Okay, wig, now it's above VWAP. Eyes ripping. Wrecked on my futures. McFeely? That green candle and SPY. So Friday actually made a new high. From this last, like, I mean, we made a new high since February. Friday. Kind of wicked up there, but it was a new high. It looks like it wants it again, maybe. I know, Mr. McFeel. I don't remember that reference from Mr. Rogers, but I got your neighborhood. I like that. I like that reference. Go up like this and trading back down all day long. Hope it's not this. Probably, given the low volume. Yeah, I'll close out. Like I'm at the casino, baby. Whoa! I just won like 12 coins. The mailman was Mr. McFeely. So I'll look for a low again today and maybe try and repeat tomorrow. Unless if we rip. If we start ripping, I'll just buy back in. That's what happens when you have a lot of shares. I had like 30,000 shares. Or no, I don't know what I had. That's a lot. It takes a lot of fills. You selling me out, Rick? I can't answer these questions for you, man. Tried. Can't do it. It still looks good though, honestly. The chart, like, still bull flag. Everything's good. The lack of volume, a little concerning. Like I said, I'll get back in if we break some levels. Starting with this first level we just built this morning. So many. Bing, 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 bing. I actually might even consider shorting it today. Heavens, no. Oh, I'm out of day trades on here, never mind. I won't do it. I'll do it on this account. And SPY. Casino, that was my casino. I just won the jackpot. 5 tokens and a free car. SPY, don't do that. Flip is too long. Don't make me do it. I can short on it. Oh, maybe I can't actually. I should be able to. How are you gonna say I don't have a margin account? Porter jackpot. Preferences. SPY, kind of rejecting that high there. Upside down. Yep. Maybe bouncing on that support. Actually picked up a share pre-market. Just one. All it takes. Only. Probably because I'm like under a margin call I can't short. I don't know. Weird. Okay. Neo chart. Give her a little look. Down 1.5%. Looking to bounce here. This is what you want. You want to don't to break this level. Cutting losses might be merited, but not looking too bad yet. QH certainly is. No, it's not doing things. It's halted. Stopped doing things and halted. SPY, new high there. New high, wow. Wow. Is that legitimate? Buy the breakout? Scary, man. Patient. Full flag, broke out. See what happens here. BBY is holding up pretty good, actually. Still hasn't sold off yet. HLP halted and resumed. BBY, right at VWAP. Just melting up. Okay. Not even melting, that's just like a breakout. Yeah, SPY's ripping. Back into it, man. Back into this bull rally. There's just a little short trap here. BBY is tempting me. It's tempting. I wonder if we're gonna get some shorts closing before OTC, or if OTC is even a thing. That's coming or not. Succubus. Don't do what? Don't go back in? I mean, I'm not. Like I said, I'll wait for a break. FC, FSC. This is a 1 minute candles I have here on SPY, so it's looking extra crazy. Looking to see if I should flip, and it seems like I should. This thing's just hanging out up here above this breakout level. Yeah, it's not even, yeah, it's just melting up. Dang, man. It sucks. Where are, I mean, where's the next level on here? 460. Maybe I'll just wait. Like the tippity top. You see what happens OTC? Well, you don't have to be interested. You can just go look at some OTC stocks. I mean, BY will probably be similar. There it is. There it is. One of the strategy would be squeeze it in OTC. Most retail got shaken out. Paper-handed. Maybe. I mean, it definitely, things get squeezy in OTC, but they also lose a lot of value before that happens usually. Like we looked at last week, we had every example we looked at, stocks going into OTC lost like 80% the day of. There you go, SPY. You almost got me, SPY. You literally almost got me with BBY. Look at that, positive beta. Yeah, a lot of the EV companies move in sympathy with Tesla. I'll have to wait till tomorrow. If we do the same thing tomorrow, try and catch the short and catch on the way down. This thing's going back to 10 cents. Oh, really? Just consolidating. Okay. Wow, SPY. Congratulations, call holders. Look at this. Just rocket out of open. All right, I'm just gonna ride it because we've got enough catalyst this week to get us back here. Mullen, I do like Mullen. I picked it up on Friday on the news they're fighting shorts. Little gap up, came down some. I guess up 5%. Fundamentally, I'm sketched out about this company, so not thinking of holding it long term. But you've got an RSI divergence on here. It's good, and it's starting to show its bounce. So we'll see. But I like it on the catalyst. HLP selling off. See, here's OTC squeezy, 30% up on party Q. But the thing is, this was down to 4 cents. So it's like, this is probably what BBY will look like, something like this. But I don't know. Maybe there'll be more volume. Maybe it won't be like that. I think it will, though. Top halted up. I mean, it doesn't take much to halt this thing. I mean, it does, but for how this thing moves, it's going to be halted all day if it's getting halted at all. I might grab some more shares. I think I can day trade on this account. Yeah. Cars are nice, has nothing to do with the fundamental company or the stock price. 30% one candle. That is 30%, isn't it? Including extended hours, it looks so small, but these are, yeah, 35%. Yeah, it looks interesting. Oh, wow. Look at that rip out of open. Yeah, that's interesting for sure. I was just talking about how this would be a good short. Maybe it'll bounce back up to 2080, 2050 resistance. Tesla's down 1.5. Interesting. They're mad nice. Yeah, no, I've seen them. They're cool looking. Soon top comes back, I might grab some shares. Ah, BBBY, bull flagging again. This so far a repeat of yesterday without the sell-off yet. So that's good. This candle looked like it, but look at that, it just wicked. We're holding up longer than we did yesterday. Yesterday it really started. Oh, never mind, we got about 10 minutes. See what happens. Let me know when halt resumes. Or yeah, let me know when halt resumes is basically the right thing to say. HLP down 50%. Yesterday isn't Friday. If I said yesterday. Yesterday with you internet people. FCL. Nice. 13%. Bounce off the low. $2. Bounce off $1.70. Nice, consolidating above VWAP there. Looking bullish still. Yeah. Bad pickup on FCL. BBBY coming down. We'll see if it wicks or if it actually makes a candle. Nano, it's up 50%. Top still halted. Halt still halted. UONE is up 5.5%. That's interesting. SPY down to VWAP here. That's still at 4, but 10 seconds and this will be a candle body closing down here, which was the first sign yesterday, Friday, of it not making a move to the upside. Whoa, whoa, SPY, what the heck? What was that? Some news just came out. Something just came out. Chapter 11 filings numbered 548, up 79%. Highest since 2018. That's not it. Something just triggered that though. That was like it actually gapped. Look at that. That's on the 1 minute. You have a you have a gap during trading hours of SPY. Oh, construction spending. That's right, it's 10 o'clock. ISM, April manufacturing. All right, it's 10. I didn't realize it was 10. Manufacturing, ISM April manufacturing PMI 47.1 versus March was 46.3. U.S. construction spending was plus 0.3% in March. Consensus was 0. So is this interest rates increasing type sell-off? Because construction spending is still up. Wow, that I've not seen it move from this data before like that. That is sensitive. FRC resumed? FRC is being bought by JP Morgan through the FDIC. They are done. DXAI, nice consolidation here. Eyes bouncing back up from that crazy candle. So good. Stop playing again? Oh. And some levels for top. I mean, okay, big wick out of there. Spot don't occur. Molly, a little wiki. Wiki. Yeah, there is big wick. That was during that data, right? Right here. No, never mind. That's on this candle. BY is coming down. I think a test of 10 cents is pretty likely. Maybe we don't make new lows, but quite possible. It's not Friday, so the Friday sell-off is extra bad, but the fact that we did break through that support, now below it. Yeah. Halt unhalted? Nope, it's not. Where's the options 5K? It's a no-brainer. FRC is suspended, so you can trade the options on there. Eyes below VWAP. Extended. Not a whole lot happened. Halt unhalted. Oh. Oh, there is that gap there. Maybe a little 107 gap fill. Philly? Morning, Experienced. Anyway, so yeah, it might not make new lows, but then Friday came along and we did. I'm still probably going to buy the dip on this. On BBBY. For a little liquidity pump come tomorrow. Or maybe after hours. Or any news. I feel like there's a lot of potential news catalysts that could make it rip. Nano X halted. Whoa. We were watching this one pre-market. Received FDA clearance. Huh. Are they gonna let a top trade again? Oh, there it is. Hey, yo. I gotta see extended hours in this thing. All right, well, it's at that one of that highs from pre-market. Oh yeah, little rejection there. Probably halted down. Ooh, I almost bought shares. Not many though, real small amount. I think that's halted. Oh, it's still trading. I like this stream. Thanks, Experienced. You can buy Mullen. You can buy Mullen. Almost bought 10,000 BY when it hit 10 cents. Yeah, you should have. You would have made like 20%, I think. You sold at the right time. Yeah, this isn't gonna have the run that it did yesterday, just that clean halt run. I mean, maybe it will, but I guess it's less likely this soon from when it just happened. If it does, also, I think you're gonna probably see a lower high. I mean, that was like textbook double top right there. Retrace the whole move. All his halts not getting attention, just moving to OTC. Yeah, I haven't tried, but I checked on TD. On TD I can buy OTC stocks. I have to sign a disclosure or something. As far as trading very actively, you are paying a commission. I think $7 a trade. So you don't want to be doing too active of trading without much profit. Buy, moving up. Might leave top alone, at least for the time being. All head and shoulders here. Come on, do it. You almost bought it at 10 cents. Yeah, the 1001. 10001. Why would you have picked that number? That was literally the low. If you timed it perfect, it would have been 21%. Give yourself some margin for error, say 15%. My average from Friday's buys was 1095. So right here, I sold, I don't know, 4 or 5%. Take it. That. And that was with me being impatient with my entry. I was assuming it was going to bounce here, and it didn't. So I got some here and then averaged down here. Good top, just trading. Oh. Wants it. Spread is stupid though. Look at my one share, it's green. Whee. I should test buying. Party. I can buy a single OTC. Show you guys. So PRTYQ. This one's actually trading pretty. See, look at that spread on there. That's wild. This one was trading pretty similar to BBBY, and then this one went pink sheets. It is, so yeah, day trades, got it. 0 day trades. Looks like I can. I want to make sure not get filled here though. Yeah, no problem. Oh my gosh, Rick. Average 135 and it'll be at 65. Wow. If you're just averaging down, to me, I would wait for OTC because, like we've looked at all the examples we looked at, which was like only 3, but they all dropped like 80% the day they went to OTC. Unless if you're planning on trying to scalp it and get out before then. Like this was OTC on Party City. $60-something%. What was the other one that did? Looked at. Oh, box D. %. Did it show up in Hertz ticker? I don't know. It's been a while now. Yeah, this is like a new ticker. What's Sears? Sears is like BLQK. That's been so long though. Not gonna see it on there. Nano's resumed. Head and shoulders on Neo. Let's see. Said it needs to hold this support. You want it to hold this support. So far, it still has. But if you don't want to stomach that, then you can close out here. Because basically, I'm saying to close out down here to fully break through that support. But so far, it's holding that support. So SPY above VWAP. BBBY is still kind of in a bull flag here. You're counting it from yesterday, especially. Excuse me. Yeah, that's 50%. Bye. Oh my gosh, this thing's gonna make a new high again, isn't it? Do a double top, you can do it. Yeah, that's too bad. The dates, you mess up the dates, that bad. Dates on options are important. New high of the day on SPY, there it is. Wow. What happened to that data being so bearish? Ah, we don't care about that. Your head and shoulders. I don't know what time frame you're talking about. Not really. Zooming out, there's still this divergence, and you're still holding the support. So the problem is you have wait. You're getting a theta crushed, or IV crushed, or yeah, theta. That theta is just burning. So that's the problem with options. If you're long on them, and it's a problem with them if you're out of the money and don't have enough time. Ready to drop it. You keep telling yourself that, Ace. No, I know what you mean though. That is valid. I consider that too. So it's a good point. We've dropped since the news. We've dropped down like 80% or so. So compared to those other charts, I mean they also dropped into it, but maybe not quite as severely. That drop. If you look on the longer time frame, Box D definitely did. SPY ripping. So just to say it can't drop more because it's already dropped. Party Q definitely dropped a lot. That was an earnings gap, and then this is maybe delisting or chapter 11. Maybe that's, or no, yeah, that was OTC. So yeah. It's no problem holding through. It's like, I guess my only reason for holding over that period of time would be if I couldn't buy it in OTC. And then OX consolidating up here, nice little bull flag though. Not be topped out. Oh, Revlon's another one to look at. That's right. So here was OTC, I believe, yeah. This one had volatility before. This was something I was hoping for BBY. And we did have, I guess, some of these moves. But they were much for OTC. This one's kind of closer to that date, but this dropped on OTC 47 or so percent, but it continued to drop, so it's not like you couldn't have gotten a better deal. You know, it's 90% below. And is it still going down? Yeah, so without fundamental catalyst, I mean, you know, that's 97% from to where it is now. I was just looking at the actual initial gap, but a lot of them continue to drop. Box D is at 0.0022. That was it. Or no, it was up here. Never mind. This was more recent. Yeah, so the initial drop on this one's 80%, but it's continued to come down. Now it's 98% also. So I mean, it's where stocks go to die. Like, it's where they get seller box. It's where they become zombie stocks. Just how it is. It's not to say it can't change or it can't be an outlier, which Hertz was and American Airlines and some of those. Bad day is good for the market. I think that's starting to shift. I think bad data is actually bad now. More recessionary reactions to the data. The raising of interest rates and stuff, I think that is having less of an effect now with the bad data being good data. SMX. Thought I got out of that one. Eyes coming down. DXAI. Not bad. Yeah, a little double top there on SPY. Why hit down so quickly? Bigger red on SPY. DEX. Oh, yeah. GME is down 2%. Hey, Jan. You guys see any updated posts from Linux? Did he sell for profit? With GME's 3% pomp. BBY not selling off quite like yesterday. I mean, yesterday by 10:30, you know, we had come back down to the kind of open. So it seems like it's getting there, but I'm assuming it is. But yeah, not too bad. Still up 3%. Holland's coming down. That's good volume yesterday on Mullen. Your dream was bumping. Alright, SPY's moving down. The XAI still up 14.5. Look at Express. What was there? They had a bullish catalyst. Oh, they bought something, didn't they? Oh, Bonobus. That's so weird that was bullish. We are sure for the end of day listing limit. That's what the filing says, so yeah, I mean that's what we have for now. So that's gonna happen until it doesn't. Well, yeah, a lot of Chinese pumpers this morning. I mean, you've got the pre-market was like 10 or 15 Chinese stocks are all up 30% to 250%. None of them really had continuations yet. All kind of come down. Consolidating up here. And this might. It's actually trash. 1 through sit. But it's looking good and cheap. Reverse split? Oh yeah. Yeah, whatever your risk tolerance allows. This is down 1%. It's been climbing since open. Jeez, coin cannot catch a break. So much for pre-earnings run-up. This had a pre-earnings sell-off. Not a huge sell-off yet on BBY. Look at the low volume though. Pretty low. 46 million this morning. Very low. Yeah, I mean, it might be slowly dying into OTC. Volume this morning is less than half of yesterday. Oh, not less than half. A little more than half, I mean. More than Thursdays, though. So far. Oh, sorry, not more than Thursdays. About on par with Thursday. This still says the float's 465 million.
Yourself, the upside being that as a business, you should operate on generally a higher margin. Is that a fair description?
Almost. Thank you for that. Yes, we won't be running any capex, but we do control the quality of the flow. So we have a direct relationship with the suppliers. Our parts are curated by us and submitted to the contract manufacturers, and then the completely built up units, or CBU, is then exported to our customers. So that is the way we can control the technology and the quality of the end product.
Okay. Swin, let's definitely be in touch. Very exciting product company for us to follow. I think it's certainly a market that deserves some reinvention. So very cool to see it happening. Appreciate the insight.
Great. Thank you.
Absolutely. Swin Chatsuwan is the founder and CEO at Zap. And that's the ticker, ZAPP, with a debut here in the public market. Might have to wait a little bit to get one here in the U.S., but give it time for us to adjust to the moped model anyway. All right, I'll definitely want to cruise one around in Italy, though. That'd be pretty sweet. Maybe the streets of London on the Zap. Looks pretty cool. All right, Chartmasters coming up. Let's talk some earnings ahead.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Into cloud, but we've also seen it start to slow a lot lately as well. So we'll see what the spillover effects
are. Just consolidating around here, huh?
EPS is $1.35.
Look at BBBY, it's going to barcode.
Year-over-year growth rate. Revenue on $1.31 billion is a consensus. That's about a 50% year-over-year growth rate if it's going to hit that number. But what I like to do, Oliver, also is to look at sort of the high and the low estimates to get an idea of, how volatile is this thing potentially going to be versus where analysts think it could go. It's relatively tight. $1.29 to $1.38 is the range sort of where analysts are on that front. And then on revenue, it's just about as tight, 1.28 to 1.33. This is going to come down to enterprise data center resilience and potential cloud strength supporting these numbers if they are to come in strong on the top end. But a couple things that we need to kind of keep our eyes on, Oliver, is sort of the lingering supply chain component of this most recent sort of downturn we've seen in some of these tech names, and how they manage the cost and how that's impacted gross margin. So it's going to be a good one. Analysts really like this company. 64% are buy, 36% are hold. Another thing to think about too is AI spending ramping up. Potentially that's going to plow into some of this infrastructure spend as well. Names like Meta and Microsoft are pretty big customers of this company.
And we know that Meta still is trying to cut back on some of that spending. So the question is, does the market fully have its head around it, right? To your point about some of the cloud slowing. Even though the cloud numbers slowed in all the major players, the market was fine with it for Microsoft, maybe a little bit less for Amazon, so it does kind of seem like a real challenge right now of how well each company has signaled that. On the chart, Rick, it's pretty decent looking, right? So, I mean, maybe the bar here is a little bit higher going into this report.
It's hard to find too much wrong with this chart from a bullish perspective. I mean, we're up almost 80% off the yearly lows.
Wow.
We recently made yearly highs as well. We're down about 6.5% from that point there. But you can see that one thing that did happen is this blue dash trend line here was going upward. We broke through that to the downside. Now we've formed more of a downward sloping channel here. And the way I created this channel was I just drew our normal trend line going across the highs, duplicated it, and extrapolated it to the lows. So this can can be a good way to project some potential support when you're in a downtrend. It lines up pretty cleanly on this one here. You can see as well that we are breaking above our yellow 21-day exponential moving average. We're right near the right near the top of the channel today, but we backed off a little bit here. RSI, our measure of momentum, was in a downward trend for quite a while. We dropped below that 50 midline here. However,
I'm curious what happens if it does put OTC
and the 50 midline recently here.
And
so
if it trades differently.
An encouraging sign for the bulls once again, because it happened at the same time that we closed above our yellow 21-day EMA. Also seeing some price acceptance here based on these volume nodes around these levels. So keep that in mind as well. 149 to the downside represents some old highs that we saw here, but first we have our 63-day EMA coinciding with our trend line right around the 151 level. If we break to the upside, look for the 165 level based on these old highs.
Okay, and before, as part of this upward trend, we did get a moment of oversold kind of downside as well, so this isn't unprecedented to see a little bit of a drop off. In fact, that's kind of been one of the key parts of this chart. It seems like it's a little bit of stop and go with more go than stop.
Definitely more go than stop here, and I think that probably many bullish traders would be looking for a break above that 165 level for some continued enthusiasm in this name.
Okay. Also seems like as long as we hold the 149 that you've got up there, the green dashed line, I mean, the kind of gappy nature from 150 up, even if things go south and it sells off, no reason necessarily to panic until we get below that 149, that green dash line. All right, like it this afternoon, Aristonet, we'll talk about it for sure on Market on Close tomorrow morning. We got booze.
So, I mean, it's a sure thing until it's not.
Let's start with Pfizer here, Alex. As the stock has been trying to tell a story about its
if you get plane tickets,
momentum. Market hasn't quite been fully buying it, I don't think.
And
I think that it illustrates that the market is just trying to figure out where this stock
that's what's happening until
goes from here now, as sort of COVID is potentially more.
They have a filing for this. I'm assuming they can cancel it.
A drug spending standpoint.
Get out somehow.
Let's think about just the one thing about this one. We're just talking about Arista Networks, $50 billion company, respectable size. This company is massive. It's about 4.5 times bigger. You're talking about a really, really powerhouse company within the pharmaceutical space when you're talking about Pfizer.
It's not like up to them either. It's the NASDAQ that's
EPS
forcing
is expected to come in at $1. That would be about a 40% decline, 38.3% decline year over year if it is to hit that mark. 34% decline in revenue.
I don't know what an average is.
16.96 billion, so just below 17 billion. But we talked about those ranges.
Only
this
held
is a very
Sears on
wide
OTC.
range. Analysts don't know how this company is going to report. You've seen
to get out, it was,
low estimates as low as 72 cents.
At a small amount, it wasn't a big deal, but the lack of liquidity and just
window there that analysts are kind of in different camps here on this one. On the revenue side, 14.6 to 18 flat is sort of where that range sits. On the analyst front, buys and holds and sells, 50-50 buy and hold. This is going to come down to how is the COVID sales doing. Consensus for the quarter one sales would be about 2.9 billion for Paxlovid, which of course is the COVID antiviral drug, and then Comirnaty, which is the vaccination. Is 2.6 billion for that. So it's going to come down to how is that market doing. Their forecast is calling for 7 to 9% forecast sales growth, not including those drugs.
So someone was saying OTC and pink sheets are different.
What else it's doing, and then hope that the COVID
PP stream,
sort of
which I don't know. I guess maybe those are different.
And so that's going to be the story. I think that's where all the focus will be.
It's a tough one to kind of assess because fundamentally there's still a lot of different avenues for revenue, of course, but when the drop-off of growth is from 100% down to flat, you can see why maybe the stock struggles as a result. Where are we at here, Rick? I mean, we just cut the new lows last week.
Dropping.
Yeah, the chart does not look super promising for anyone of a bullish perspective on this name. We're down about 29% from those yearly highs that began here. And we can see that we had quite a downtrend that began from this point here. Trailing down all the way here into March. Brief upward channel here that was stopped right around here at our yearly linear regression line. That's our line of best fit based on closing prices in blue there. Since then, we transitioned into another downtrend that took us into the yearly lows, like you said. Now we're trading back above the 39 level, but we still haven't broken above that downward sloping short-term trend line there. I also chose to include standard deviation channels on our chart. We take standard deviations above and below our linear regression line to help us gauge whether prices are at a fair value, which would be the linear regression line, or an an extreme level, which would be our standard deviation. So that can help us guess where we might expect to find some support here. So perhaps around the 37 level, you might see a slowdown.
For participating in the poll, everybody. Appreciate it.
We can also see, based on the volume node here on our volume profile study, we saw some very heavy trading near the 40 level, almost rivaling that of the volume profile point of control, the area of heaviest trading, just about a tie almost there. So that means that traders were accepting these low prices here, perhaps suggesting that we could be in for further downside here because this is now a potential area of resistance. RSI, we broke below that oversold area very briefly. We came back out of it here, but as I said, we're not out of the woods yet by any means. We're still in the bearish side of the territory here. One final thing, standard deviation channels are useful because you can see just at a glance which direction the trend is going. In this case, it's trending down on the year here. Just an easy way to help inform your trading, engage the overall trend.
Boy, the fact that it's forming new price nodes down below $45 all the way down to 40 kind of feels like it's getting pretty comfy down here.
Yeah, exactly. That's kind of the thinking behind these nodes, is that traders are willing to make plays at these levels. That means there's some conviction behind the trading.
Are they going right after plus 13?
It's a big chunk of trading.
Yeah, it's
here, Rick. I think you might have missed the vaccine pattern.
They need liquidity and they pump it, and then
let's talk
they've got it. They dump it
here. We got tap on deck too. Alex,
completely controlled stock.
What are we looking at here?
Yeah, about for first off, analysts about
preparing
a quarter say buy, quarter say sell.
All right,
the other
Julian,
half
sounds good.
say neutral or hold. EPS looking for about 26 cents, which would be an 11.25% decline year over year. Revenue is expected, however, if it were to come in at this $2.23 billion mark, about a 1% growth year over year. Notably, though, this is quite interesting if you break it down by segment and you compare the Americas segment. That would be about a 2 to 3% growth that's being expected right now versus an 8.5% growth in this same quarter the year prior. So deceleration in the Americas segment, but not as quickly as you're seeing in the rest of the world. The Europe and Asia Pacific markets, you basically just combine the rest of the world into an international segment. Revenue is expected to fall between 5 and 6% versus the prior year. So this is going to come down to, if I were to sum this up, Oliver, we're looking at a story of cost management and then hoping that the Americas sales volume can just stay robust enough to offset the declines internationally. What we're seeing is really the operating margins are expected to remain flat. If that's to be okay, it'll be because of the SG&A expenses basically being more under control. It's not going to necessarily be that they've been able to pass on prices to the same extent. We're watching deceleration here. But if they can bounce back from the underperformance last quarter, you could see a stock that, I know you're going to get into the chart, maybe reflects fundamentally more what we've seen on the chart.
Okay. The inventory buildup here is a pretty big issue.
Get back in
so even with the kind of reopen,
you got to wait for those. When they come, you just got to strike.
Kegs. What are we looking at here technically, Rick? A breakout?
Quite strong price movement recently. We're on pace for a 17% gain in only 16 days, 14 to 16 green days in a row. This white dashed line here is the start of the controversy with Bud Light. You might think that that would be a reason, just kind of based on the price movement, that's what's happening here is that Molson Coors is making some hay here off of the Bud Light controversy. But take a look at this comparison chart. We can see, once again, the white dashed line is where this began. Bud has barely moved since then. Now, Molson Coors is up significantly, but you would think there might be a corresponding drop-off in Anheuser-Busch. Constellation Brands and Sam Adams, Boston Beer, didn't really make much of a move either. So I'm thinking that it's kind of hard to justify that argument there. I don't really buy it. So, however, looking at the chart more closely here, we can see we're almost at +3 standard deviations. So that's quite an extreme value for this stock. Making new yearly highs today, closing in on that $61 level where we might expect to find some resistance at this red line here. So once again, RSI, very strong looking. Firmly in the overbought area, no signs of really slowing down today either. So all in all, looking quite strong here. Look for some potential support at the $60 level. Below that, we've got our +2 standard deviation channel near the 58 level.
All right. Nice move here. I mean, just day after day, ripping. I didn't even realize that Molson Coors was going nuts like that. So Pretty good stuff. All right. Appreciate Rick. Nice looking at the chart. Thanks, Alex, for the fundamentals. Markets are firm, but we do have some lagging tech trades. We'll talk global payments when we come back, getting hit after earnings and shares of NASDAQ.
Dang it, new high on the day. Yep. This was a bull flag, it looks like. Can't go long on these highs though. I'm not gonna do it. Wait. So IBRX has a PDUFA date for May 23rd. Might pick up some shares of this for that, actually. If it gets a little PDUFA run up. Oh, this is one of the ones we actually already played, I think. Look at that wick. Do it. Did ask, the answer is 1001. I don't think that's the answer, kitty daddy. Look at that bounce on the 50 moving average though for Bed Bath. These biotechs. PDUFA dates. Alright. Oh. A fair. Why is that on this scanner? Those earnings. You may get some gas from this little spy breakout. Yeah. This is the high, 416.72, and we're at the high. Just can't bring myself to go long here. Ubo 6.7. $71 are on the RSI on the hourly. There's reading at 420. Really? That high? Yikes. Would they be waiting up there? We're at the resistance. Wait up here. We're there. 20. Before JPOW? That much exuberance? This one, bank. Yeah. Meat up 4%. Got a nice little trend. To Yogi Bear. I like that, 12.5. Oh, it's an earnings play. Still some earnings coming around the mountain. Firm. Right, it's actually held up pretty well. Bitcoin. Yes. Yeah, Bed Bath still hanging out, up almost 2%. I think I need to go long. Bull flag, consolidation, a breakout. I don't see a whole big move coming today, but I'd be wrong. Little V. What V? V for victory. Like this move. Is Tupperware gonna go bankrupt? Is anyone up on any Tupperware news? I remember some of you guys were hyped on this the other day. Bubo's up 6.5. Last one on the 1 to 5 minute. The RSI divergence there on the 5 minute on SPY. Bearish. Oh yeah, Bed Bath. Bounced off the 50 moving average. Pretty good. Her fate was sealed. Oh! You heard their fate was sealed. New high of the day on SPY. Doing it. On the 5-minute. Oh, this right here. Coming down, bouncing off the support. I don't know. Wait, where's my VWAP? Oh my goodness, that is what I'm flying blind. I don't know where VWAP is. There. Yeah, Bed Bath actually holding up pretty well here. Looks like it wants to move back to VWAP also. Yes, there are definitely still shareholders of BBBY. I mean, this channel that it's been in, as aggressive as it is, it has not changed. Crazy. I mean, it hasn't broken this aggressive up move. Crazy. Proper short squeeze. MC's popping a little bit. BBY is too, actually. Little green candle. AMC's up 2%. Bought some at 11. I don't think you can buy OTC on Robinhood. Archer. All right. Only watched like a season of it. Probably not enough. BBY acting different than yesterday, at least. Given that was a Friday, though, a Friday dump almost always prevails. So, at the beginning of the week, we might find some kind of trading range like we did last week before we flushed. I mean, that's the plan. NASDAQ said they have to go OTC. They are out of compliance. Yeah, Tupperware. You guys know anything about Tupperware other than its phase sealed? I'm moving up. I flipped. I hate flipping, especially the highs, but whatever. The aggressive uptrend is not letting up. Vickers Vantage. What is this? Pharmaceutical. Room. Been a while since I've seen this ticker. Weekends don't exist. Just let me say yesterday. So much easier than saying Friday. You internet bots. It was yesterday. Bots don't celebrate weekends. Kind of wicking. Top is actually flat. And the week ends exactly. Yeah, no volume day on BBY, relatively. I kind of went down here a little bit. Still in this second bull flag. Don't like that RSI divergence for the long side, but price action still looks bullish. I see a retest of UOP. Engulfing candle setting up.
too surprising. But I think it's also, kind of a symptom and just a noticeable mark from the Fed's tightening cycle. The fact that we're now, past a year from when they started raising rates,
right.
You tend to start to see things break. I think that this is a part of the breakage. So, there's, to me, not that there's nothing more than that, but I think it's pretty emblematic of the the environment that we're in now, post-tightening.
Without a doubt. In the meantime, tell me about the week ahead. What are you watching? Obviously, we have Fed, we have jobs, and we have a lot of earnings.
Yeah, well, it's interesting because you have jobs after the Fed. So if anything, maybe you'll get a little bit of a hint as to what they're looking for on the labor front. Maybe that helps us, inform us on Friday when we do get the jobs report. But yeah, I think labor is front and center, and particularly as it pertains to what the, Powell himself in the presser notes about labor. But I think also the inflation data that we got from last week, I'm curious to see, I think, the reaction to that. The fact that, you're starting to see a more favorable downtrend in the headline metrics of CPI or PCE or even PPI.
Right.
But at the core level, you're starting to kind of stabilize at a bit of a faster rate, kind of that 4.5 to 4.8% range. I think that is more of the focus, or that's where more of the focus should be, because that's what the Fed is ultimately targeting. And I think Powell will probably be more pointed in his language around that, because you're getting a lot more relief on the headline front,
right.
But a lot of it is commodity and goods driven. So I think that he'll probably shift more so on the services side.
Yeah, because there were parts within the reports that still showed an inflationary environment, and basically the disinflation's not happening fast enough for the Fed. And I liked, in your notes, you had the phrase, don't, forget what investors are thinking, what the Fed may do. You said it's what the Fed says.
Yeah, and it's what they say they're looking at. I think that's the key, is that you have all of this, kind of bullish talk about, well, they have to ease or pull back because you're starting to now see headline CPI decelerate, markedly. That may be the case. That's great. We all want to see that. But at the same time, you have to look at what they're targeting. So not headline CPI, not core CPI, not even core PCE. It's core PCE services X housing, all of those components together, which is a mouthful. But, that itself is what they're looking at, what they're targeting. And it's important because that is what they think has the tightest correlation and relationship to actual wage growth. And wage growth in particular, as evidenced by the employment cost index that we got on Friday, and then something like the Atlanta Fed's wage tracker, which is more of a median measure of wages.
Right.
That has kind of stabilized again at a tighter range and a stickier range, which they don't want to see. So I think all of that, you put that into focus, probably keeps them in the hawkish camp.
And that also has to do with how many jobs are available and the tightness of the labor market. So wage growth will slow some if you just don't have as many jobs available.
Yeah, absolutely.
And we saw that in the JOLTS last print, right? I mean, we saw that. And even on the earnings calls, it's my understanding that there's a lot more talk now about layoffs or possible layoffs than there is about skilled labor needed.
Yeah. And what you want to look for too is not just layoffs kind of at the higher end and the upper end, the kind of higher paying sectors. You want to see how much it translates into the lower paying sectors. And right now there's still a pretty healthy enough split, I would say, between the two camps, where you're not seeing a lot of that pressure in firings at the lower end, which is great for workers, great for the economy, but from an inflationary perspective, I don't think anything that the Fed wants to see. So I'd look for that in earnings season, but also as we kind of morph into the middle part of the year, I think that'll probably be more of the focus on the labor front.
And we've had some beats on the earnings, and obviously we've had lowered expectations too. So, you got to take that sort of with a grain of salt. But I do think that investors sort of get frustrated because after 2022, where they got walloped, and they were hoping you were looking at the average stock. What is it that you're looking at?
Well, it's the average stock now doing much worse relative to the cap-weighted index. So if you want to take the S&P 500, I mean, one of the worst trends this year has been the equal weight versus the cap weight. And that's really just, speaking to the deterioration in breadth statistics, this narrow leadership that we've seen, the 5 largest stocks contributing to 70% of the S&P's gain this year. A lot of that's been kind of a flight to quality, flight to safety, flight to what's been known to kind of, hold steady when you have all of this stress that's been going on in the regional, banking sector. So, a lot of headwinds, I think, for the economy suggested by deterioration in something like the Russell 2000 or some of the cyclical parts of the market. But if you don't see an improvement there for equal weight relative to cap weight, you continue to see that deterioration at the same time that the market continues to move higher. That disconnect to us is a bit more worrisome of a trend underneath the surface, suggestive of more economic weakness, i.e., more market stress too.
I mean, there's still people who are really waiting for a recession. I don't know if it's mild or, you know, deep and long. I mean, basically, but there is this talk of recession, right? And there are people talking about, as you said, the Fed cut end of this year or new year. Or
someone was mentioning Hootie in here.
In the meantime, here, any final thoughts on anything else in the big picture? I mean, I was thinking about the other central banks, really, and what kind of message are we getting around the world, and what does it mean for us?
Golden support there so far.
To your point about cuts, you know, that could be the right view from the market. The expectation
could wake up.
Of the bond market that the expectation
Hourly,
that the Fed cuts aggressively this year could be the right view, but only if we're in a recession. And I would add to that maybe a little bit more of a severe recession, because this is clearly not a Federal Reserve that wants to pivot right away from rate hikes to rate cuts because of the inflation problem. So unless you had some indication that inflation was easing considerably, you had much more of a loose labor market, both of those would be consistent with a pretty deep
This chart
recession.
actually looks nice
so
on the
that's why I think
daily.
that the view could be right, but it may not be, you know, the scenario that we want to be in. But if that's not the correct sort of unfolding for the economy, then I think that the view is probably still off base, that you would have a Fed that wants to stay at more restrictive levels for longer. And not just the Fed, other global central banks, as you mentioned, too.
Look, and then we go into election year. And the Fed doesn't love to do too much ahead of elections.
I know.
So that'll be interesting.
It's going to be a busy couple of years, I think.
I know. I'm sort of excited.
Yeah,
I don't know.
Exciting.
I mean, I love, you know, I'm the kind of person
who's
excited on Fed Day. And I mean, I just do. I think it
Is she excited for a recession, she said?
Kevin Gordon, thank you so much.
See you.
Great to see you. Kevin Gordon, Charles Schwab.
Ubo 7.32%. On is also up 7%.
CEO of IBEX. Tech stock coming off a record-breaking.
Mullen kind of gave back its gains. All right, I didn't tell you guys, but I flipped back short in this engulfing candle. The chop got me. Oh, that I should not have been going long on the high of the day. I said high of the day, then I said I'm going long. So still that RSI divergence that I liked, and then that engulfing candle sealed it for me. So SPY back down to VWAP here. Something to talk about. Brands holding? What's the ticker? I don't know. You want me to check, Damien? IMF chief says inflation not decelerating as quickly as sought. He's just saying this now. I wonder if that's actually causing part of the sell-off. World economy still has scarring from pandemic. Managing Director Kristalina Georgieva says there may be more vulnerabilities exposed in the banking sector. San Francisco has ranked second after Los Angeles for U.S. metros experiencing the most retail theft. S&P hits highest level since February. That's what we're looking at. Looky. Now it's selling off. Now it is. Little false breakout. Okay, that makes more sense. And all your guys' chatter talking about 420. Get the heck out of here with your 420. Americans could see promised Social Security benefit cuts by 27% in just 10 years. About 67% of millennials who want to own a home at some point in their lives have no money saved for a down payment, and 18% have less than 10 grand. An employee at the The Society for Human Resource Management reportedly asked to go remote. Her CEO says he outsourced her job to India instead and saved 40% of labor costs. Big flush there on SPY. GM cut several hundred contract workers over the weekend. SPY is flushing. BY is getting a little volatile too. California financial regulator takes possession of First Republic Bank. Since 1928, June and August show solid average returns of nearly 1%. Are both up nearly 60% of the time, while July has delivered an average of 1.67%. What is this talking about? Fed swaps show around 2 and 3 odds of June pause after May hike. Southwest won the award for the worst airline in the U.S. Just kidding, there's no award. Wallet Hub said they're the worst. I think Spirit's much worse.
Etsy, of course,
I don't know what that wick was from.
Some of the ups and downs.
Happy Money Monday.
Let's talk about it. It's at 97
Welcome.
And change today. What are you thinking?
So in general, earnings are a difficult, and you could almost say a coin flip type of situation. But so what you can do is put the odds in your favor statistically. So one, we haven't seen Etsy go in at these technical levels to earnings in quite a while. Usually it's been an outperformer. Now it almost looks like an underperformer. So you do have that, and then you have their performance, which that over the last 2 years have been generally good. There has been 1 or 2 bad earnings here, but again, at higher relative valuations than the rest of the market. So the way that I look at it is,
jeez, coin's getting wrecked.
That you have a nice cheap calendar to the upside. You have a very solid base. I mean, if we lose this 95 level or 96 level even, then it's kind of like all bets are off. So I am thinking upside here with the calendar. We have very the time structure of implied volatility is in severe backwardation. It's a perfect shot for a calendar, and really, I think that you're just kind of betting against a lot of things by taking the put side of that.
And so, Truist has a buy on Etsy. They lowered their price target to 125 from 150, but they are with you on this, saying buy and see some bullish upside potential. Ben, what do you think here?
Nicole, you were talking about the ups and downs of their consumer base, and Mike was talking about how this stock has underperformed. I think that what we're seeing, the price activity, is a reflection of both of those fundamentals. Here you can see a very well-defined trend environment. This is an hourly candle chart. We're going back to the highs that we saw up around 150. And look at the high conviction, not only trend to the downside,
SoFi
but
beat estimates
vertical
and
nature
selling off
associated
today.
Price activity as of recent. Let me just show you some of these areas
beat
of
on all fronts.
consolidation that
That's weird.
formed on the way down. Top left corner started out around 146, 132, 120, and then you can see over the last few weeks we've been kind of hovering around 107. Mike mentioned 95, 96, and if we get below that, there's some open space to the downside. I think the fact that we've been failing around this 107 level is key, and an indication of some of the longer-term weakness we've been seeing. Speaking of longer-term weakness that we've been seeing, this chart goes all the way back to the beginning of 2022. We're talking December 2021 when shares were up around $308. High conviction on the left side of your screen. Sideways consolidation off those lows here. You can see no rejection of this lower level. And I mentioned the 107 area. Again, you can see the significance of it as we've been kind of teetering around it, holding below it right now. So under pressure to say the least, right? Longer term trend to the downside.
intermediate trend to the downside. Taking a look at where things stand relative to the 50 to 200-day moving average. This is a stock, if you take a look year to date, we're talking down almost 20%. But RSI, the one thing I think the bulls have something to hold on to here, price is breaking out. We're seeing some new lows, but RSI is yet to join in. So let's keep an eye. Let's see if the relative strength indicator participates. But yeah, you can tell the weakness here. 150 down to this breakout here below 100.
Yeah, and you're showing the death cross right there. I mean, that's what people were talking about in late April, that the death cross has appeared for this one, and that can be a bearish sign, you know, with the 50-day and 200-day.
Death cross can be a bearish sign, that is true.
Your thoughts?
Well, look at eBay. Look what eBay did on earnings, and you know, that's as close as that you're going to get to a positive correlation. And so looking at that, and again, you know, earnings are a coin flip. You can have good numbers that come out, stock goes down. You can have bad numbers.
Yeah, that's what we're seeing on SoFi.
And
it's like they beat on EPS and revenue.
And so I'm purely looking at this as a risk reward type of scenario. And there's enough things that are pointing in this way to make it worth as a trade. I'm not saying that, you know, this is, you know, a buy and hold, and my goodness, you have to buy this at every level. Not at all. But for this earnings, I like this play.
All right, good to hear, and thank you for that. Let's get to the next one, and that is Dick's Sporting Goods. I mean, it certainly was a pandemic favorite, and as summer and spring come, tell us more.
Flushing down. Is there news?
You know, exactly. You know, cyclically, it makes sense.
It was just this IMF chief talking.
It makes sense. Fundamentally, it makes sense. And so what we've seen is a small pullback index, and so you know, one of the indicators that I use is it really doesn't matter, but it's a whole reversion that when you have a strongly trending stock looking for a logical place to get in, as opposed to just buying highs. I hate doing that. So I am bullish here, and I'm kind of bullish at any price, but you know, as a trader, you have to draw your line in the sand and say, okay, where am I going to get long? Here's where I'm going to get long.
Understood. All right, and you're bullish here. Ben, what do you think about the Dick's Sporting Goods chart?
You know, I like the chart, and I like the breakdown Mike just provided in terms of trying to find a place to position yourself, because what I try and do is determine trend. That's one thing, right? And then you can rule out one side of the trade if you're looking to participate in the trend, in this instance, the upside, so you're favoring longs. But what we don't really talk about is where do you look to get into that trade. In this instance, let's just begin with the first and foremost well-defined migration of value that we see to the upside. So what traders that look at this method, this strategy do is they look for tests of the lower extreme of a balance that we're forming, or in Mike's instance, he talked about having to buy breakouts to the upside, because sometimes in a high conviction trade to the upside, you don't get the tests of the lower extreme to buy into lower level. You have to take that really initiative response to a move up. Now, we see a few of those playing out. Most notable in the beginning of March. Look at this run up that we saw in reaction to earnings, that imbalance that came after rotational price activity. So you get high conviction trade to the upside, and then that sideways consolidation. So acceptance of the move up we saw.
Thanks guys for your thumbs up.
April,
11:30. It's
we'll say,
thumbs up
sideways
and
around
subscribe.
140. Trend
half
here
hour.
on the 4 hour.
That's right.
And a trend
on the half
here
hours.
on the daily
We check
time
to
frame,
make
right?
sure
We're going all the way back to, we're
that
talking
red
June of
subscribe
last
button
year,
has
and
been turned
you
gray.
can see areas of
Thank
consolidation.
you for your 23 likes,
Five of
guys.
them, in
Appreciate
fact,
it.
77, 95,
We got some I'm
118,
going to show you with little
131.
earnings
Currently
crush.
balancing again, as
Maybe
mentioned
crush.
a minute ago, around that 140 level. So this is a pretty well-defined trend up. And again, what the bulls are looking for is a test of the lower extreme of this range right now. So they buy into that, hoping it doesn't take out the middle of the prior area balance that we formed. Or again, Mike, sometimes I'm sure you can attest to the fact that in a really high conviction trade, you only get that opportunity on the breakout. So you kind of have to just buy with both hands, close your eyes, and hope it continues, right? Hope it doesn't retrace. But I do want to point out where we are relative to the 50 to 200, a complete different example than what we're talking about with Etsy here, right? Look at this. A nice well-defined trend holding above the 50, basically going back to the summer of last year, holding above the 200 as well. One dip below. RSI is
pretty big
rolling
reversal
over
here
a
on
little
SPY.
bit, but we're still in a very bullish trend at this point, very much so. The working assumption that we're forming value at higher and higher levels remains a valid one.
All right, so that's a good sign. As he said, he's showing you all bullish things that are happening there, Mike.
Yeah, just figure out where you're going to get in. That's it.
And you might have to, take a lot and hope, right? It sounded like, sometimes it's just no real clarity, but if you still think the trend is the right one. Let's get to Wolf Speed. What are you thinking here?
Yeah, so this one is a fade of, well, I guess it would be under exuberance or over exuberance to the downside after earnings. These are in general pretty good trades, especially to the downside, that everybody panics and sells out. And are we able to hold those levels? And we did.
Close my short.
On that would have been Thursday was
I think
earnings.
that is the top, but
and actually
I don't want this
we
to happen
opened
again.
up. We opened up higher on Friday, and we held the lows. So that means that the appetite to the downside, yes, it was not a good earnings report. But that, from a trader's standpoint, it's like, okay, well, if we define the lows, then let's take advantage of that, sell the downside potential, which is what I'm doing on this. And then you could either, on this one, you could either sell a put spread, or you could just, where I put together, sell an iron condor. So you could either sell a put spread, and then as we rally, sell a call spread against it. Just for simplicity's sake, I'd put out an iron condor. But mostly about about selling the downside.
I see. What do you think of that, Ben?
Cole, Tom had me with appetite to the downside. I think that's what the chart's telling us right now, and that investors are still hungry for this trend to continue to play out. We have yet to reject it. Just starting off here, actually, with the 15-minute, a little bit more granular look, complete opposite of the two names, Etsy and Dick's, both trending higher. In this instance, taking a look here, weakness from 60 down to 44.25. Went ahead and identified some of these areas of consolidation. And, we always talk about it on the bigger picture, the hourly, the daily, the weekly charts. Here you can see it even plays out, and it applies on the granular time frame, the more intraday charts as well. 60, 57, 54, 49, 46. This is a method that day traders use because, again, it helps you determine very well-defined trend here. Intraday traders use this as well, taking away a step away from this 15-minute time frame, looking at now an hourly candle chart. So just kind of working our way into the more intermediate time frame. Look at this, all the way back to beginning of February. We were up around 88. There's that low we just looked at in April last month, down to 44. But here you can see, again, in this instance, it's not just the 15-minute. I've got a very well-defined staircase-type pattern. Whoops, I didn't draw this one. But basically, this is a 58. We formed an area balance there. 46. So you can see we're currently balancing around 46. The bears, that is, don't want to see this one get up above 58. But the bulls, anything below 58, still indicating that working assumption that we're trending lower is a valid one. Let's step another move away from this intraday look and move in light speed to WLF on the daily time frame. The candles 125 down. RSI opening the door to the downside. There's a lot of momentum here lower. You can see we're below the 50, below the 200. A stock that's currently trading down 32% year to date. I mean, this is one that's come under pressure, to say the least, from 125 to 44, and no rejection as of yet. Vertical out here right now. We'll see if we balance at this lower level.
All right. Thank you both for the big three. Mike, did you have a final quick thought?
No, I was just saying that that's the trade, and that's why you get paid to take on that risk. And remember, this is not any sort of buy and hold type of thing, that this is the place to get in. I'm playing it just in the very, very short term, just for a couple weeks, that we hold these, well, let's just, be very plain about it, bad levels.
All right. Look, you got to call it what it is, in your opinion. That's why we have you on, to tell us your thoughts. Mike Short, Prosper Trading Academy. Ben Lichtenstein, great job with the charts. Thank you both for the big three today. Appreciate it. Coming up next, we're going to spotlight IBEX. We'll be joined by the company's CEO, and we'll talk about the company's record-breaking year.
So BlackRock said something funny. They said Americans will have to live with high prices for years. That's because of BlackRock. That's one of the reasons. Thank you. Business travelers are now younger and more likely to fly in economy class, with about half earning less than $50K a year. IMF chief still talking. Transparency on China leading to EMS is a problem. Nvidia hit 1-year high. Are you kidding me, dude? Oh my god. Thing just continues to break out. So on SoFi's earnings, they beat, but they're coming down. So this is the thing with earnings. Even if they beat estimates, they still sell off. And even if both those factors are right, say they beat estimates and it's rallied and you got calls, you can still lose. I'm gonna show you here. These June puts say, oh, it's gonna go down. I'm gonna be safe, even I'm gonna get more time on my options. To get June, I'm gonna get a whole month out. See what these June puts cost before their earnings on Friday. These are trading 22 cents up to 26 cents. They even beat earnings and the market sold off. And these puts are still down. That's the IV crush. Stock's down 11.5%, and you'd be losing money on these puts. Now, potentially the shorter dated one favored better. Let's see. Oh. These are what they cost on Friday. Stock sold off 11%, and you're down on them. It's all about what the market maker is pricing in.
Well, we're having a treat.
For a look at developing stories this morning, I'd like to bring in Kevin Green to take a look at the earnings from Norwegian Cruise Line.
Yeah, we are seeing the stock up about 5% at this point in time here. They beat both on the top and bottom line here, Nicole, and it's just showing the strength and the resiliency coming back to the experiences part of the economy here. The company reported revenue at $1.82 billion versus the street's estimate of $1.76 billion, and the adjusted earnings per share came in at a loss of 30 cents, so they're still not profitable, but the street was actually expecting a wider loss at around 43 cents here. The sequential occupancy improvement actually improved to around 101.5%, beating the company's expectations of 100%, and total revenue per passenger cruise day actually increased 18.3% if you compare it to the same quarter in 2019. Their outlook also matched the street's expectations as well, which is why we are seeing a little bit of enthusiasm for the stock, and it is showing that consumers continue to try to spend for experiences, and if we are seeing this type of rate of increase when it comes to the amount of occupancy increases, align that with the price increases that they've implemented over the last year and a half, Nicole, there are analysts on the street that are very optimistic on this name if these trends can continue.
All right. Well, it looks like people want to keep cruising then. And the stock's up, as you said, over 5% today. A nice move. Kevin Green, senior markets correspondent here on the TD Ameritrade Network. Thank you. It's time to spotlight IBEX. Stock is up over 30% in the last year. Let's welcome in Bob Decken, CEO of IBEX. Thank you for being here. So tell us a little bit about the company for those who don't know that much about it.
Sure. Thanks, Nicole, and it's a pleasure to be here on your show.
1775.
So IBEX is in the customer
There's actually another gap,
experience
little one down here
industry.
at 1688.
We have 35,000 folks approximately around the globe that service some of the best brands,
I don't think it's done.
the large blue chips that are digitally transforming some of the
Spy moving up.
disruptors of the new economy, and we deliver great experiences for those clients and really enhance their brand.
I see, yeah, and I see. I mean, it's tech platforms. You have digital marketing, consumer, everything to help the consumers with their lifestyle, economic platforms, fintech, health tech, and you're growing your consumer base. So how is it that you're growing the consumer base? How do you woo them in? You talked about the new consumer base. You have over 50 new clients. How is that happening? What is it that they want?
Sure. What they want is to really enhance their experiences with their customers. Loyalty with their customers is paramount. It's the number one objective on the CEO's desktops. And so those priorities are what they're looking for as a partner that can enhance those brands. And what IBEX does is we bring a lot of technology into that equation that helps us deliver better experiences than they've had prior to engaging us. And so when we contract with our clients, we usually do a really good job, get out of the gates fast, do a fantastic job for them. And then, what we like to say, we do a good job of landing and expanding, where we continually expand the services that we do for those clients. We grow that business, and most of it is digital. Most of the experiences we're growing our digital experiences, and those land usually in our very high margin regions. So we have a really good combination of top line growth and then EBITDA improvements and performance.
Yeah, you said that your team has proven resiliency. I know you went public in 2020, not an easy year to go public. These steps that you've taken as a team have been working. You're reporting record revenues now. Tell us a little bit about the resiliency that was needed. And to a certain extent, when people, during the pandemic, everything went online, that sort of helps a business like yours. People want to execute and do it in the best way, right?
Nicole, that's a great question, and you're exactly right that during the pandemic, everybody was doing transactions digitally, and so there was a big explosion of that. And our clients, because of the pandemic, many of their captives, their centers that they operate internally, those are offline, and so they needed capacity. They needed a whole lot of talented agents that could service their customers, and IBEX really delivered for our clients and new clients that we won. We launched remotely. We were able to get those programs
BY's
going.
coming down here a little bit.
We were really resilient
I almost
through
made
the
it to
pandemic, but it really didn't stop there. And in today's market, it's a challenging market, with today's economy and those headwinds. And quite often in that environment, our clients also look at that time as outsourcing and offshoring as key ingredients to help them manage their cost structures. And so we've been extremely resilient through kind of today's market. And we highlighted that with our most recent quarter, where we had roughly 13% growth, strong growth, but our EBITDA skyrocketed about 450 basis points to about 18%. So we feel like we've performed extremely well over the last 2.5 years.
And as you're boosting customer loyalty, conserving costs for
Coinbase down
these
7.
folks as well, and you have what you're offering to them. Can you give us maybe a little color? I mean, you don't have to say the company, but a happy customer, an example of a happy customer. What did you provide to them that they in turn said, thank goodness IBEX was there?
Sure, that's a great question.
The news on MEGL, is it still good?
I'll say one thing we're proud of is our client base are typically, they're number one or number two in their respective verticals, their positions. So we're servicing, as I said, some of the absolutely fantastic brands there. Now, what they're looking for is net promoter. They're looking, at the end of the day, how can IBEX enhance their net promoter, their loyalty as they measure it with their customers. And so we typically get engaged. We'll raise the ceiling of where they've been operating without IBEX. We'll drive those numbers significantly higher. And we do that also with the and factor, and you highlighted that, Nicole, where we also can do that at a much more cost-effective rate. So it's a great balance of and quality and cost.
Bob Decken, thank you so much of IBEX. Good to see you. We appreciate you coming on the show today.
Great. Thanks, Nicole, for having me. Bye.
Coming up next, the disruptors, and George Sills is standing by. He'll be taking a look at On Semi. Now, the stock is trading higher after its earnings. He'll break down that report for us and show us a way to trade.
Poland's now down 1%. GME's down 3%. Could have taken a short up here when we broke that support. The run kind of accelerated. Is it finger looking good? Yeah, I mean, it's not usually a good idea to go long on such a high day, up day, but might be kind of double topping here too. Chart does not, yeah, it just doesn't really trade. Might go back short here on the ES. It's just bear flagging. BBY coming down, down 1% now. From green to red, 10.57. SPY moving back up to VWAP. BBY is coming down. Whoa, big flush on BBY. You see that? The 10 cents just snapped. 2.5 million on that candle volume. What the heck? Bunch of stop losses, I bet. That was crazy. That was wild. Well, hopefully I can I'll have some day trades tomorrow. I'll be able to short this thing. Would have been a nice short top to bottom. There's a 10% swing right there. 10% both ways. That is neat. Not the floor, we just hit 10 cents. That was crazy. The amount of stop losses that got triggered in there was like... You're just hanging out, then flush. That was 1.5 million on the candle. Where are those orders? I gotta look through here. What was that? 1147. That was crazy. Just so many orders. It wasn't like one huge one or anything. 10,000 order there. 84,000 order there. Where's the million? Couple single orders, 10,000, 20,000, 27,000. Where'd all that volume come from? I don't think those add up to that. 20,000, maybe. Oh, they're 52,000. That was 1148 though. There was 2.6 million volume on that. Okay. 10 might be the floor, might not be. I'm not gonna be impatient about it like it was on Friday. I missed out on another 3% or so. Yeah, you and everyone else were setting up limits at 10. A lot of trading. Stop limits and buy limits and... No, it'll be whatever it is here. I mean, most stocks we've seen sell off when they go into OTC, but yeah, I can go over $1. Sure. Oh wait, under zero? What do you mean under zero? Quite the flushy flush. Wish has earnings in 5 days. Or sorry, 3 days. BBBY, is that a 20% swing? That is great opportunities. Almost, yeah, 18%. From the high to the low. Play the up and the down, you're getting almost 40%. I almost made it to VWAP, kind of rejecting now. BBBY kind of bouncing a little bit. We'll bounce off of that 10-cent low. GME down 3 1/4. 67. I don't know why Weeble's showing these like double earnings. It's doing on a few tickers. It's just like an error. And BBY moving back up a little bit. See if it rejects this prior support. Flips it to resistance. 1030. Options and OTC are going to get really illiquid. As far as I know, they're going to just get super liquid. Look at like yeah, not good. Rev's been in here for a little bit though. Have options. Yeah. Your spread, like there's people holding them. Like if you want to have options to exercise, I think you can exercise them in OTC. I believe, I'm not sure. But as far as trading them, it's just not really the way. Roll. Now that looks like a distribution phase. Wyckoff. With the little head and shoulders even in the middle. He's really selling off though, huh? Let's see. BBY up above that level now. It'll bounce. And it's rejecting. I can be your GME buddy, Holding. Oh, bouncing again. Dropping again. Yeah, right on that support line. Wow, UWMC kept going. Got covered call assigned. $5? That kept moving up pretty good. Sucked into BBY lately. Ah, we suck again. No, there's nothing to look at on GME. Just boring and flat and down and low volume. It's gonna keep doing this until it hits support. 16 something. Top bouncing? Yes, I'm green on my top. That is neat. Certainly is. 94 bucks on that thing. Woo. Tempting. It's actually crazy. It held support here. $65. This is a huge move. This is 10x where it was a couple days ago. For it to just hold that as a support is wild. GME on the wagon, over steroids and coke. Does have that gap, 107. It is 2.0, the company's making money, exactly. BBY is much more exciting. Huge amounts of debt. Cash burn out the nose. No, GME is a good trade still for sure. Selling premium on it's not as good anymore because it's gotten so low. But for me, I know so much about the stock and a lot of you guys that, you know, I mean, it's a good trade. It's a well-defined trade. Because it's boring. That's good for trading. Probabilities are increased. Gavin May's most recent LA Wave Theory video. Alright, top's making a little cup and handle. We'll be back. We're back for you. BBY hit 10 cents. If we retest it or make a new low. A lot of these stocks are like selling off into their earnings. There's profit cutting expenses. Yeah. Payroll, stores. And just selling out of inventory that they'd already bought, already on their balance sheet. So they didn't buy any, like, I think they didn't buy any new inventory in that last earnings. So that expense was like pretty much totally gone. They'll see once they need to start buying inventory if they can have enough margins and have enough sales profitable. But yeah, no, I agree. Gaming disc, I mean, I don't really game much anymore, but I definitely like the idea of discs still, just because of how big games are. It's stupid. SPY is ripping, actually. Good thing I got out of that short. Jeez. Above VWAP now. It's doing the same thing it did the other day. Let it buy it for you. You've got it on like recurring purchases or whatever. Doesn't that mean you're not in book share and you're in plan share then? And then it's held by Seed & Co. and really not out of the system. Oh, we stream it every day. Yep, relocate. We have been. You have been busy, my man. GFAI, 14%. Yeah. Was AI ripping earlier? That was. I still want the short on AI. Not a retail inventory guy. GME had a bad customer satisfaction prior. I mean, I know I didn't like them because they didn't give me money for your trade-in, so it was pointless to go there, but I guess that would reflect on customer satisfaction. But that's what they had to do to make money and have margins. A little head and shoulders, maybe building on SPY here. We'll see. Might take another short on the ES. If so. Yeah, I'm thinking if you have a recurring buy on, I think you're probably in plan. So maybe it makes it kind of pointless to even have them directly registered. Nice little intraday head and shoulders would be beautiful. We have yesteryear. Yeah. I just turned in 30 games for a new one. Yeah, I honestly never really went to the store, like, very seldomly. And I just remember trading one time and I was like, that totally wasn't worth it. But I was just trying to figure out why there was negative customer satisfaction before. Might start scaling in here. Little, like a little head and shoulders is forming. Take advantage of customers. Oh yeah, I could see that too. They were very pushy. I don't feel like that's changed though. If they still push you to get on memberships and stuff. I agree, Holjing. I agree. I picked up a couple more shorts up here. I try and slowly scale in case we get some more rippage. BY under that, kind of under that little support level we have. 1030. I don't know how to lock it. A lot of earnings still coming up. All these small caps. I like the neg chart. I don't know how they did on their earnings, but chart looks nice. Well, that's because they're not retail traders or retail investors. They're not retail. They're household. Heck yeah, pop in the stream and talk about tinfoil. You can even pop on voice on Discord. Or is that what you meant? I love it. All the tin we've been getting has been BBY tin, but GME down.
Yeah, that was good, man.
Yo, what's up?
Hey, Happy.
How's it going, man?
Oh, it's going all right, man. How about you?
Good. I see you moved a few months ago, and you've been just busy since then, huh?
Yeah. So actually, I just recently got back into the job force.
Oh, you just took some time off.
Yeah. I was just taking a little sabbatical, just trying to like reset and refocus and everything.
Nice.
So yeah, I think I'm in a pretty good spot now, though. And like I said, I'm re-entering the workforce. It's like the same pay that I was making in my last job, but way less responsibility. So I'm stoked for it.
Nice. And you're in a new location.
Absolutely, yeah. I moved up to Washington State.
Okay, yeah. Cool, man. I've lived in the Pacific Northwest before.
Yeah, I lived there for a few years beforehand, and then I moved back to Texas for a little while. And then here I am again.
Yep. So what do you got? What, GME 10 or we've been doing a lot of BBY stuff, so
yeah, this is some GME tinfoil.
Okay.
So basically, what I've been thinking about was the fact that the timing of everything, really. So we were talking about on stream or on the stream in the chat and everything. Everyone was talking about how GameStop historically has just had bad customer satisfaction scores. I think a lot of that is actually manufactured. Because I think that the majority of gamers actually enjoy the products and services that GameStop actually provides. And most of the dissatisfaction comes from people who aren't actually gamers. Like, it's going to come from parents who are mad about the fact that their kids aren't getting good value for their games when they're trading them in. But that's because the parents care more about the dollars than the experience, and the kids all care about the experience more than the dollars. So it's not like the actual customer base who cares about GameStop is dissatisfied with the business. It's more the people who want more from it are dissatisfied. So,
well, there was whoever's brought that up. They were saying before Ryan Cohen. Are you saying it's still that's still the case?
Oh, yeah, no, I'm saying before Ryan Cohen. Yeah.
Oh, okay.
I'm talking like starting back in like 2014, because that's really when I think they started to get a bad rap. I mean, you can kind of see it in their chart too. So like the price definitely followed, but I think it starts all the way back in 2014.
They weren't doing it on purpose. You're just saying that it was just that came about just because it was the non-gamers and the parents or something you're saying.
Yeah, like that.
Yeah.
Like they started that basically they started that trend, and then hedge funds. What I'm positing here is that hedge funds are the ones who looked at those dissatisfied customers and they tried to make them louder. Does that make sense? So like,
oh, I see. Okay, yeah.
Yeah. Like they basically just bolstered the dissatisfied populace instead of, being ethical.
And you're saying that more before Ryan Cohen, or still? Probably all
before Ryan Cohen, like, because like after Ryan Cohen, they had a complete paradigm shift. Like GameStop, when you go into a GameStop store now, it's completely different than it was before Ryan Cohen. Like even just 3 years ago, before Ryan Cohen took over, like it's been wildly different.
Really? Because last one I went to, let's see, I went to one like a year ago, maybe a little over a year ago. It was in a mall, and that was the first time I've been in a GameStop in years.
Mm-hmm.
And the one I went to prior to that was not in a mall. And I don't know, the one in the mall, I guess the last one I went to, the only thing I noticed was different products more. You know, like the collectibles.
Mm.
They're all, like, I guess like the PC, kind of the PC hardware and stuff, which wasn't there before.
Mm.
What else have you noticed that's been different?
I have noticed that there's not as much of a push now for just numbers, like just getting their sales numbers, like you would see in most retail stores. Like a lot of retail stores are still very metric based.
Mm-hmm.
GameStop now seems to care more about the customer experience over anything else.
Mm-hmm. I do have to say I wasn't pushed to sign up for rewards when I went in there.
Yeah, exactly. Like they'll ask if you have it, and you'd be like, no, and they'll be like, okay, well, if you want it, it's cool, but otherwise, it's whatever, man.
Yeah. Yeah. No, that that's interesting. So you think they kind of made those customers loud at the customer satisfaction? I see.
Yeah, and like I was saying, I think that starts all the way back in 2014, because if you look at the and I think it really stems from hedge funds trying to attack businesses that expand into malls.
Mm-hmm.
Because when you look at e-commerce as a business, like the fact that it can serve a much wider customer base than a mall ever could hope to, that makes it much more appealing for a long-term investment than a business that can just sit in a mall, right?
Yeah.
So like they're basically trying to pump their bags by destroying every business that ever sets foot in a mall. That's why that is also part of my tinfoil, because that's why I think COVID lockdowns even happened in the first place.
Okay, we're digging deep now.
Dude, yeah, I've been thinking on this for a hot minute.
So you think that? Okay. I don't know if I'm gonna go to that political realm, but
okay, yeah, no, that's cool. And that's not even. I wouldn't even say that that's necessarily a political route. I would say that that's more of trying to maximize fear. Like that's how hedge funds make money. They make you scared. If they make you scared to even go to a mall, they're gonna make a fuck ton of money off of pushing all those other businesses down.
Yeah.
That's my take.
Yeah, no, I mean I think it's not saying that there has been a massive short against mall stores, and definitely brick and mortar, but specifically even just mall stores. You know, and we've seen them go bankrupt kind of one by one. And whether COVID lockdowns had anything malicious against them, it definitely did accelerate the anti, of course, going out. Yeah, because people were scared, exactly. So it accelerated the online shopping. Sure.
Oh yeah, for sure.
Well, like, what do you think about Bed Bath & Beyond relocate?
So for Bed Bath, I'm personally invested in Bed Bath. I'm still holding it.
Wait, you actually bought into this?
Oh yeah. I bought it. So like here's the thing. Here's the thing. I'm a little salty about my Bed Bath play because
you're just a little salty about it.
Yeah.
You've got a lot of love if you're just a little salty about it.
I mean, it's just money. That's the way I look at it. Like, it's just money. I know how to make it. I can get more back if I need it. I'm not too worried about it. But basically, I bought into Bed Bath when it was at like $4 a share, and it sold out at 30.
Oh, no wonder you're not salty. What the heck?
And then I bought back in at 21.
Oh.
And I've been holding since then. So that's what I'm talking about.
So, okay. Real quick.
So I have a fairly sizable position in Bed Bath.
The first time. Or the second time.
Oh, the second time. I actually have a more sizable position now because
that's what happens.
I sold high, bought lower, and then of course it just kept going lower. So I'm like, oh well, I'm already in the hole. I'm just gonna hold it.
Just keep adding. So yeah, let's see. Kitty Daddy says in 2017, the employees were enforced to enact a program called Circle of Life. Maybe that's what you're talking about. He says GameStop employees revealed stories of how the policy has led them to lying to customers. Many more claimed that the policy had led to poor working conditions and emotional distress. So, I mean, whether that's true or not, that's kind of the point, is that the media, and which is controlled by hedge funds and big money.
So yeah, that did happen,
basically.
but then 3 weeks later they ended up changing that Circle of Life program.
Okay, so you're familiar with Circle? That's funny.
Well, no, I just looked it up. I'm just now learning about it. Yeah.
Yes, but what you're saying is they, yeah, they basically, and I remember seeing the stories of, oh, these unhappy employees are walking out of the store and quitting, and so yeah, the media will just pump the narrative they want. Like, sure, there's some outliers or whatever, but that's not necessarily what's happening across the board.
Absolutely. And I think these kinds of decisions, I think it comes from even above the hedge funds pay grade. Like, I don't even think
that could be.
I don't. Yeah, like I'm looking at the central banking system, but I've been looking at them for a long time.
Yeah, that's true.
Because I mean, like, if you're controlling the flow of money, then there's nothing you don't know about if it involves finance. That's the way I look at it.
Yeah, you have to.
Exactly. Like, yeah, if you know where the money is moving, then you know what's happening. Like, you just know what's up. So there's like this entire. It like hurts my heart to say secret organization, but that's basically what it is.
It's yeah, no, I know what you mean. I mean, it's maybe not even that secret.
Yeah, exactly. I mean, yeah, you could look at all the central banks; those are the members.
So why did you back to BBY? Why did you get into BBY? Because of Ryan Cohen, or?
Yeah, actually, I bought in because of Ryan Cohen.
But you didn't buy in right away. You waited till it came down to $4. You practiced excellent discipline.
I did, yeah, I did. So like I will admit that I did buy a little bit whenever the news came out that he bought in.
Yeah.
But then I waited because I was like, it's not gonna run just off of the news of him getting in. Like, it's not gonna have its biggest run just off of that news. So I'm gonna hold off for a little bit before I buy in more to the position and just keep adding.
Yeah, that's smart.
So I waited.
I didn't know that. I just thought he bought in. I'm like, well, I'm not gonna buy it now.
Yeah, yeah.
But yeah, I mean, $4 was the low. That was like the all-time low for, not all-time, but that was big major support.
Yeah, because it got down, I think, to like 287. I think that was, or 285 or something. That was its low before it ran up to 30.
I'm showing 438 was the low.
Okay, so like I pretty much.
Yeah, you bottom ticked it for sure.
Damn.
And because that $4 level was a support from 340 was the low from like 2020.
Yeah.
But it was basically right in that $4 range. So yeah, you got a lot of salty people in chat now that since you sold out at 30, they all wish they sold out at 30.
But I bought back in.
Okay, good. As long as you're holding heavy bags,
yeah,
we'll accept you.
I got heavy bags, man. I got heavy bags.
Yeah, I didn't I actually didn't buy it at all on that first news of Ryan Cohen, just thinking, it's gonna die off and then I'll jump in. And once it got to like 4 whatever, I started looking at it. I got a small position in options. I don't know if I got any shares. I don't know, around between like 4 and 6, somewhere once the trend started moving up.
Right. Yeah. Once it started confirming that it was.
Yeah, the move was kind of confirmed. Yeah. The volume was picking up. But it was of course still really early. But my position was like, it was small. So
yeah.
And then I didn't want to add to it. I didn't want to keep. I felt like I was chasing because the thing just went crazy. So
yeah, it went insane.
Yeah, so I just ran that, and I don't even know if I didn't play it right, of course. I didn't sell, and then I did sell. I don't even quite remember what I did, but I didn't make as much as, of course, I wish, because my position was small. And then I remember the news coming out of his intent to sell, right? You had that filing of intent to sell.
Yeah.
And I'm like, oh man, that doesn't seem good. And then and then I'm just, and you're in the euphoric phase, the greed phase, and everyone's hyping it up like, no, this doesn't mean he's going to sell. This is bullish. This means it's going to squeeze to 100 and then he's going to sell. That's why he's saying this. I'm like, they're right. It's an intent to sell. He doesn't want to sell it now. Why would he sell it now? He's intending to. When it squeezes, this thing's going to go crazy. I want to buy more.
So, like, why else would he have those $80 calls? Like,
yeah, exactly. Yeah, all that stuff. And I'm like, oh my gosh, dude, this is sick. He's intending to. That means he knows this thing's going to rip and he's going to sell it. He's not going to hold it because it's going to be so high. Not that it just went up like 8,000% or whatever. And then so the next day it dropped on that news. I think that was like 8:17 here. I'm kind of looking at the chart, and I sold cash secured puts. I sold a lot. I sold a ton, like way more than I should have. I used my long-term account too, which I swore not to touch. You know, that's like my money tree. You don't want to shake the money tree.
Yeah,
and
exactly.
I used all the extra money. I used all the margin, and I just sold a ton of cash secured puts. And it was in the $20 range, and I sold them. I can't remember which exact day it was, but I sold them for like $13. So I'm like super far out of the money, and it had 1 day of expiration. Literally, it was the next day it was expiring, and they were like ridiculously far out of the money. And then the news came out that he sold, and then it gapped down, and then they were in the money, and I'm like, oh my gosh. So that was my first kind of entry into it, and I've been kind of trading it back and forth since. And the next big loss I made was actually that loss, that cash secured put. I was able to roll. I kept rolling. I think made it out break even on that. I literally rolled that from August when it dumped. I just held it and rolled it until we had that move up to $5 here in January. And I think I was break even on it, or really close. I actually I rolled it for whatever, 6 months or whatever that was. I don't know, 4 months. Yeah. And closed out break even.
Dang, man.
And I was so stoked, right? And then
that's patience.
yeah, just roll. And then I closed out here, and then it's coming down. I'm like, wow, I actually timed that one perfectly. I remember that exact day. I'm like, I just got to close these. I'm not going to try and squeeze them. So I closed them out, and then it came down. And then all the bankruptcy, like rumors and all that stuff was coming out, and that was around February. And then I can't remember why it actually ripped this one day, but it ripped. And at this point, it was still like, like on February 6th. I don't know if you're looking at that, but I had this crazy rip, and then and it was still like maybe gonna go bankrupt. So I was like, well, or no, their debt. What was it? I can't remember exactly. But basically, then the next day they came out with that crazy debt restructuring with the preferred shares and the warrants and all this stuff that I didn't understand. But I'm like, it seems kind of bullish. Like they're trying not to go bankrupt. They're trying to offer shares.
Yeah, they're trying to stay afloat, but I think the way they're going about it is bad.
Yeah, well, I didn't really know a whole lot. I'm like, I don't. It seems good. It seems, I talked to some people. I talked to Don. It's like, this is basically pushing off bankruptcy for at least a couple quarters, which is how I interpreted it. Not to say I traded it right on that news, but the fact that all this FOMO was building up this whole time, coming down from like $5 down to $2.50. I'm like, I'm not FOMOing coming down, but once it had that big rally, that $7 day, like this thing's gonna go crazy. So I patiently I didn't buy any of that going up to 7 from the 250 or whatever. And then once that news came out, I was like, all right, I'm in, I'm doing it. And it was like, I bought in after hours. Like I literally did it in extended hours. It was like, it's not going bankrupt, I'm buying. So I went in heavy there again.
Oh man.
And that was with a ton of margin, and that wasn't cash secured puts. That was like shares. And I mean, it wasn't a terrible cost basis. Like it was probably $5 or something, $4. It was like somewhere here in after hours.
Yeah.
And I actually closed that out. I closed it out like the next day. It like broke through the support, and I'm like, oh, that's not good. But but it already come down like, I don't know, 30-40%. And the problem was I put so much into it on that one, like way more than I should have. My position sizing was really poor risk management. That loss was big enough to where, like my position sizing now on it, like I would need a very high number. I don't know, maybe like 3 or 4. But you know what I mean? Because since I had so much into it there, I'm not putting that much into it now to get back to that, right? So it's like,
and I don't blame you for that.
Because I think on that drop, I think I lost. I think I was down like $50K on that drop alone. So
yeah, and now what we're waiting for with Bed Bath is news. Like we're just sitting here waiting on news. Like we just have to sit in our hands, and then that's it.
Yeah,
that's just kind of where we're at with Bed Bath.
Yeah,
that's my take. But I saw. Okay, so Collard Green. Do you mind if I steer it back to GME because he mentioned something?
Yeah, no, that's fine.
So it makes sense for people who hold the stock to go and support the business directly by buying products from them, because otherwise, like, buying the stock doesn't actually help the business side. All you're doing is looking at the finance side of it, and all that's going to benefit is you and yourself. If you go out and actually purchase things at the store and provide revenue stream for the company, your investment will grow. So it's like you're already contributing, you're investing in your investment whenever you buy things at the store you're invested in.
Sure, yeah.
So it makes perfect sense to go and shop where you're invested.
For sure.
Like that. And adding to your dollar cost average, when we're talking about a play like GameStop, it's not gonna matter, dude. It just won't matter. Like that's the whole thesis, right? Like your dollar cost average is irrelevant.
Yeah, I mean, if you're thinking like in squeeze mentality.
Well, for sure, yeah, and that may be like, and it may even be, I don't know, when that will even occur. Nobody does really, but
yeah,
that's like
watching SPY here. SPY's kind of moving up. I grabbed these shorts, look like little intraday Head and Shoulders. I'm not sure now. Getting nervous.
Yeah, Kitty Daddy. I'm working on doing that right now. Actually, replacing my entire wardrobe with GameStop merch.
I want to point out to you guys that are curious about OTC. Here we have AVYA. This thing was trading normally before. Now it's in Q land. Oh look, so this has a 1,350%, 1,350% move today.
So
it's from it's from 0.0002, and it moved up to 0.002. Like, yeah, you can have huge moves, 1,300% in OTC and pink sheets or whatever, but it's like, from what level? Like, once these stocks and market caps get so cheap, thousands of percent move doesn't mean much.
Yeah, that's true.
I think AVY, that's crazy. Actually, I was just trading AVY. I didn't know it.
Well, so like, yeah, thousands of percent move. Well, thousands of percent move will matter depending on the size that you put in it. It's just the reason it's so risky is because it can move thousands of percent in either direction.
Yeah.
Well, I guess it can only go 100% in one direction, but it can go thousands of percent up.
It can. Yeah, SPY's been went up here.
But with it being, so my take on the OTCs, so like I actually did a little bit of reading about this whenever I was learning a lot more about seller boxing. So the Q, you obviously know about the changing the name of the stock to have a Q at the end of it, or a W, or whatever. So like whenever for chat, this, like whenever you see a Q, it's a liquidation holding. So usually what that means is the company has been bought by a liquidator and they're trying to flush them out, essentially just squeeze out as much cash as they can. You also have tickers like Sears, I think it's SHLDQ, if I'm not mistaken. The Sears holding liquidation company.
Is it a holding company or liquidation company?
I don't
even know. They've had a couple different. They've had a couple different tickers in. They've had like BLQHD or whatever.
Yeah.
Doesn't really matter.
I think that one is actually a holding company.
Yeah.
Because while Sears has filed bankruptcy, they do still have a couple of locations open. And
whoa, SPY's ripping.
Oh shit!
Sorry.
Oh, dang, yeah, it is. No, you're good. That takes precedence.
Yeah.
Active plays, man.
Yeah. So, yeah, go on what you were saying though. It was interesting.
Oh yeah. So this Sears liquidation company, I do believe that is actually a holding company. If I remember right, whenever I was reading about it, it was a while ago. But I tried to get in on that whenever seller boxing was starting to become like a popular concept in Super Stonk.
Right.
So like just whenever seller boxing was starting to get known and people were starting to learn about it, I dove deep. And started looking at all these other companies that had been seller boxed out, like Best Buy, Sears, Fuddruckers. Even they weren't really publicly traded, actually. Fuddruckers.
Wait, it was Best Buy? Because they're traded now. Did it come?
Or not Best Buy. I'm sorry, not Best Buy. Blockbuster. That's what I was thinking.
Yeah.
The other yellow and blue sign.
Yeah.
But even Blockbuster still has a location in Bend, Oregon. Like they still have their home location.
I guess you go visit. You're pretty close.
Yeah, I could go visit. I probably will.
Yeah, when Sears was doing that, I think we were both trading Sears. I remember buying into Sears when.
Well, no, so I had tried to. That was the whole thing. Like I had tried to.
Oh, you weren't able to?
Right. Yeah, I had gotten approved for OTC trading, but they still wouldn't let me buy anything. Like I was gonna dump $150 into Sears liquidation holdings, and then like I was trying to get everything set up
that
day to do it. Yeah, and then it ran like 1,300%. I'm like, man, I could have had $2,000 off of that.
Yeah, I bought in then. I don't even.
Yeah, I tried.
I'm gonna go back. I gotta find that tweet because I bought in. That's when all of that was circulating around Superstock.
SHLDQ.
Yeah, because it's Sears Holding Liquidation Company or something.
Yeah.
That's actually probably a long ways back there. But when all that was circulating, we were just learning about seller boxing and all these, how Sears was maybe tied in. And I don't know if it was around when Brian Cohen was tweeting that, but how do I search on my Twitter feed? Does anybody know? You know?
There's not an easy way. What are you looking for?
Just looking for a tweet I made.
Okay, let me see. I'll see if I can help you find it.
Twitter. It was one about Sears because I tweeted when I bought it.
Oh, okay.
And I made money on it, and then it was literally like the next week, maybe even sooner, that's when the SEC or whatever came out and said retail is not going to be allowed to buy this anymore. It was like right after that, and then I was getting all nervous. I was like, well, I don't know if we'll be able to sell it, and I was gonna just hold it. Like, I don't know, I'll just hold it. And then I just got nervous and I closed out.
Yeah, yep. I don't blame you because like that was like already gonna be risky to begin with. Like
for sure.
Nobody in big finance wants us to even touch OTC because it moves hundreds and thousands of percents like on the daily. That's how they find liquidity, is through those channels. That's like the whole point behind seller boxing.
Well, why are you just trading OTC then?
Well, because I don't know which moves they're gonna make. That's like playing an extremely sharp position in chess.
Yeah.
Where like if you move a pawn, you could fuck up your entire position and get checkmated. So it's extremely difficult to even figure out the pattern for which one they're gonna pump that day.
Yeah.
To find liquidity.
Yeah, it's a lot more risky for sure.
Yeah, and you're a lot more likely to get margin called because a lot of brokers will require margin in order to even trade OTC.
For sure. Yeah, it doesn't. It's the commissions are like pretty high on it too.
And that's some bullshit in my opinion. Like you should be able to trade OTC with cash. What's the problem with that? The problem is they don't want you to make money. That's the problem.
Oh, because you need cash. I see. I'm just saying the commissions to enter and exit trades. At least on TD that I saw, it's like $7 a trade.
Yeah.
So that's I'm not used to that. So what's your
like tiny gains, but that's like the game behind high frequency trading, right? Like if they're doing $7 a trade and they make 1,000 trades a second, you know.
Well, they're not paying those fees.
I mean, yeah.
High frequency trading algos, no, and even like individuals and whatever people that trade more often, you get much better rates. They're not paying those brokerage fees.
No. Oh yeah, they're no way, because they're like the brokerages need them to trade so that they can accept PFOF and then they can use that to pump their books. Like that's the whole point behind being a core
It's funny talking to
It's
you,
all
man.
connected, man. It's so dumb.
All the old GME DD just like spilling out of your veins.
Yeah, it's ingrained. It's ingrained.
No,
And
yeah, I mean,
the thing
I
is,
agree. It's just I haven't heard it in a long time, and I haven't like read it in a
Mm.
while. It's just like it's like an old dog. I just I forgot all this stuff that came out from GME.
yeah, like, and I haven't even been reading any of this. Like, this is all just stuff that
That's what I'm saying.
learned
It's
and
all like
retained.
that OG material.
Yeah, man.
What's interesting is a lot of the BBY guys, like a lot of the people invested in that, aren't like even that familiar with GME and kind of what's happened.
So like this is the whole thing. Like like if BBBY keeps making this trend downwards, we're gonna see what I've been talking about. Like we're gonna see it being seller box. We're gonna see it turn into a liquidity cow for hedge funds. Like if management doesn't pull their head out of their ass, that's what we're gonna see. Because like it all comes down to what leadership wants to do with the business.
Yeah. I mean, that's why I'm like, I'm not really looking to hold into OTC. Like I might buy it once it's in there, but I'm just the stocks I've looked at. I'm like they all dropped like 80% day of. Like that's fine. I'll just chill.
Yeah.
But I mean, a lot of people are thinking, not a lot, but there are thoughts that it's not going to even get delisted, where they're going to just do something crazy in the next 2 days, I guess, and it's not going to go delisted because I guess none of the brokerages have contacted people saying that, and I don't know where it's somewhere like there's a you're supposed to get notified basically, like the notification of delisting, like what's getting delisted, and I guess it's not on there.
Yeah, well, and they have some time before they're delisted anyway.
Well, they're talking Wednesday
to be delisted.
Yes.
Or to start the process.
Pre-market Wednesday. It's so Tuesday post market. It's it.
What the hell?
Yeah.
That doesn't sound like anything that's ever happened before.
Relocate. Oh my gosh! I'm glad I'm telling you this. SPY is ripping here. So I closed my short. That head and shoulder definitely failed. This is insane. This move. Hey trader. Or Jimmy 10. Duke Grove is compromised. We don't know. But yeah, check it out. BY is there. So that was the cause of this huge sell-off. Relocate, or one of them.
That's absurd to me because.
So this first one on the 21st of April, that sell-off was from Chapter 11, and then this huge gap down 425 was delisting on May the 3rd.
So I thought standard practice was that it would have 6 months to try and turn that around.
No. Well, you're talking about the dollar threshold, I think.
Yeah.
Well, that's one thing that keeps them out of compliance, but that's not 6 months. No, I think that's 90 days. Either 90 or 180. Yeah. Which is it? 30. I think it's 90. Which I guess 180 would be 6 months.
Yeah.
But yeah, and then they have to get it over $1 sometime in that time frame or whatever, and then they can file an extension at the end, all that stuff. But I think since in Chapter 11 now, that's another reason why it's getting delisted. So, regardless that it's below $1, I think it's still getting delisted. Some, I believe, I'm not sure, but some stocks, I think once they file Chapter 11, they can literally immediately they can suspend it, and when it resumes, it'll be OTC.
Okay.
Now with BBY, they gave them a warning. They said, by this day. So, to me, it was a good thing. At least we had a time frame of like how long we'll have. But that being said, I mean the tin with BBY is heavy, and
yeah,
there's
you got me thinking now.
Yeah, I mean there's like crazy speculation that goes around with it. And it's like the worse it looks, of course, the gnarlier the tinfoil is going to look, because it's like for you to believe that it looks, talks, walks, and acts like a duck, and it's not a duck. Like you got to be on something. So
yeah, for real.
The tin's got to be crazy, and it is. Like, but I don't know what's going to happen. But they're saying like, well, the board has done a lot of weird stuff. Like they've called for the reverse split, and then And then the whole, like, the debt restructuring that they did, they totally changed that. They've amended a lot of their filings. Like, they've put them out and they've amended them, then they've canceled them, and then even their earnings, like, but I don't know. There's just a lot of weird stuff that the board has done as far as, like, it seems like they're totally incompetent and don't know how to, like, run a company at all and, like, how to do timely filings. Or they're trying to hide something, like that would be bad news, I guess, like trying to basically fleece retail, or there's some player behind that is trying to buy it up and it's, you know, super bullish. So
yeah, that's what I'm thinking about, because like like the whole thing, the thing that would save them is Bye Bye Baby. But the problem with Bye Bye Baby is that it's locked behind an asset-based loan. So it's like they can't spin it off, they can't sell it, they can't do anything.
In Chapter 11, aren't they free of that obligation?
Yes. Yeah, and I think that's what's critical about Chapter 11. So we'll see. I guess we'll have to wait and see what management decides in the next couple of days, because they're gonna have to do something with Bye Bye Baby. Like, that's
right. Yeah. So Sunday they, I guess, open the bids up for the whole thing. I don't know where we're gonna see if there's been any bids or, you know, highest bidder. Some people.
I think it's gonna.
Yeah. What do you think?
I'm thinking it's gonna end up being a bidding war between Icon and Cohen.
Yeah, I mean
that's my take.
So you don't think they're you think they're opposing parties?
I think they're opposing parties for who gets to slap their name on it.
Okay.
But I think they have the same vision.
Yeah, I mean that's of course everyone's hype and hope is that it's one of those two.
Well, I mean, why else would Ryan Cohen take a friendly picture with Icon like that? You know, because like if they're gonna actually be opposing entities, they're not gonna stand around and take a picture for Twitter for Ryan Cohen's account, no less.
Yeah, no, I'm not.
That's not gonna happen.
Yeah, I mean, I think they could be. I mean, I don't know. I guess that, to me, that's irrelevant of BBY though.
Yeah. Like it is irrelevant for BBBY. I agree.
Right. And actually, what's interesting is kind of when they took that picture. I mean, supposedly when that was posted, that's when
was that August,
Icon,
July?
That I can't remember, but that's when Icon had is a huge short position that he made public on GME, or around that time. So I was thinking potentially, and it's not to say they couldn't hang out, like they can't be friends, they can't take pictures, even if he has a short position. It's not this like friend or foe, like you know, like what kids think in the stock market. It's all emotional. It's like they definitely can still be friends, like they can still have opposing opinions, whatever. But
and it's like the beef between Gates and Musk. Like Gates has a short position against Tesla, and
yeah,
Musk doesn't like
I think they are more emotionally involved with it though.
Oh, for sure, yeah.
But no, what I was thinking at one point was maybe that was Ryan Cohen visiting Icon to like lay out his company for him and show him what's legit and why he shouldn't be shorting it. You know, like check this out.
Yeah, and I think it didn't dissuade Icon, but I think at the same time Icon was able to. I think Icon gave Cohen a reason for his short position, and that's why Cohen doesn't have beef with Icon.
You think Cohen gave him a reason for it?
No, I think Icon gave Cohen a reason for his short position.
Sure, yeah. I mean, there was a good reason to short GME.
Yeah. And now the fundamentals are starting to flip for GME. So because now like we're seeing it be more profitable. Like the last two earnings call.
Right.
Those have been
last
crazy.
one, right?
Well, the
I guess cash flow positive.
Yeah, because the one before last was cash flow positive, and then this one was positive EPS.
Positive. Ace wants to know what you think about the Wu-Tang album. They're trying to pull all the tin out of you, man. Who was it in that picture?
I'm pretty sure that was Cohen.
It must have been, right?
Yeah, like the if you compare, I'm also looking at his stature compared to other people in the room that I have seen in other pictures with Ryan Cohen. So, like, you know,
you've literally compared, like, You were that guy that you posted that thing on Reddit about like measuring his shoulders and like.
Well, no, I saw that after the fact, actually, after I was like, oh yeah, that's Ryan Cohen right there, because I had seen some of those people in other pictures with him, so like I already knew his relative size to those people.
Right.
Plus, yeah, that hoodie, that like Ace is saying, that hoodie is like famous on RC.
Yeah, that is true. Well, what came of that? Like, that's still like nothing.
That I think is, I think that ties into the NFT marketplace. I think that's where the Wu-Tang album comes in.
Oh, it's just we haven't heard about it. That was like a year ago at least.
Sure, yeah. But GameStop also haven't actually released their wallet on every mobile platform, right? So they're not finished.
Yeah, so that could still be. After I just said that, though, I just remember that they have music now, I guess, on there. I haven't kept up with it, but that was their big release.
There's music.
Yeah, that was their big release yesterday. Was that music, whatever, music NFT. I guess their platform's ready for it, but
yeah, it can definitely handle it. Like there's not a problem because they have the compression streams. Like the code that they have for their wallet is fucking solid.
Oh, really?
It's awesome. Yeah, man. Like it works so well for an in-house wallet like that, because when you think of GameStop, like originally you don't think crypto. Like crypto doesn't into your mind with GameStop, but the fact that they're breaking into that scene and the way that they're doing it, I think is very intelligent.
Yeah. I mean, the timing on it sucked, but they couldn't really help that, I guess.
Yeah, I mean, yeah, the timing sucked, but I think the timing only sucked because of COVID.
COVID, I mean, the kind of the whole crypto crash, and I don't know if COVID. I don't know why COVID.
Okay.
Because I mean, crypto was doing its own. Like, crypto has been pumping since COVID, like every other asset.
Sure. Yeah.
Until a year ago, I guess. But
so, what COVID did was set up the biggest rug pull for crypto we've seen yet. So what we've seen from the advent of COVID and the popularity of crypto, we've seen a lot of essentially crypto ATMs.
That's true.
Yeah, so like that never happened before, but we've had crypto for over a decade.
Yeah, that's so weird. I remember seeing it at a gas station. Right? I was like, what the heck?
Yeah, so the fact that there are even ATMs for it now means that central banking wasn't ready to try and jump into the saddle, and control crypto and try to make that the next big thing for fiat. Okay, so the way that
that's sorry, hold on. Those are my noises, guys. I'm picking up some BBY here, actually.
Oh, sure.
I've been day trading it, actually, so I'm just trying to find the lows, and then we get that liquidity pump sometime the next day. So like 10% swing or something both ways. I'll take it.
Hey, man. Yeah.
I don't know if this is the low or not, though. It's basically barcoding down here. We'll see. Just little nibbles here and there.
Yeah, what's your time scale? 5 minute? Yeah, that's barcoding for 5 minutes.
Yeah. I don't know what 1 minute looks like. Yeah. We'll see. It might make new low. But yeah, so you think crypto? That's interesting. Yeah, I guess. I've not thought about that before. Crypto killing or COVID killing crypto.
Yep, and it wasn't like direct either, because I mean, you've seen how much crypto has been used in online marketplaces. Like you've got things like Lolly now. You've got like Honey, like things you can put on. Like these are extensions you can put on like Google Chrome, for example.
Oh, they use crypto now?
Absolutely, yeah. You like
Makes
the
sense.
purchases you get back. They're in Bitcoin because they have margin against it.
Right. Yeah, that's funny. I had a Lolly, or not Lolly, but a Honey extension like years ago in Chrome. But I guess it makes sense they're using crypto.
Yeah, and but if you don't know, don't use those things, because don't use those things if you're investing into crypto. Because if you're investing directly into crypto and then you're using like extensions like Honey or Lolly to gain more crypto that way, you're not actually double dipping. What you're doing is betting against yourself because those companies have margins, have huge margins that are straddled for it. So you're essentially handing them ammo to punish your position.
Interesting.
Yeah. But the way it relates to the NFT marketplace is now that we have these crypto ATMs, you're more likely to pull out that cash, and COVID lockdowns are over. Like that's the whole thing. Like it's a combination of things. So we've got those crypto ATMs. We've got COVID lockdowns being lifted. I don't think COVID lockdowns are going to come back, even if we see a resurgence. I think we're just going to see more of a push for more booster shots, because
sure.
At this point in time, the economy is so unstable that they have to get people out of their homes and going to spend money. But the other problem that we're seeing is inflation, making it more difficult for people to spend money, and pay isn't coming up with inflation, and it hasn't for decades. So like it's getting harder and harder for people to actually spend money and support the economy as it currently runs.
Right.
So I think that would necessitate a crash for it to even reach equilibrium again.
Crypto, you're saying?
Yes, crypto.
Yeah.
And the reason, because the way it all ties back into the NFT marketplace for GameStop, since we are not going to be seeing COVID lockdowns, everything's moving more towards the central banking digital currency. You know, everybody's heard about the CBDC by now, I hope. These are the mechanisms by which these entities are trying to destroy decentralization. And that's bad for the NFT marketplace, and that's why it's had such a hard time getting off the ground. It's just been a slog either way, because you just have these massive forces pushing in either direction, because you've got like the populace behind GameStop, and then you've got finance against it.
Yeah.
So if I were to relate it to a chess position, I've been obsessed with chess recently. To relate it to a chess position, it's like you're playing as white and you're fighting over the f7 pawn, or the f2 pawn. So that's like your weakest pawn in the entire structure at the beginning of the game. That is the pawn by which your opponent could potentially four move checkmate you. So it's like that is the biggest weakness in the position is currency. So trying to flip the script and control which currency people use, that's going to determine the success of something like an NFT marketplace, because because with the NFT marketplace, the whole heart of it is decentralization. So the entire point of the NFT marketplace is to attack the central banking system. It's to attack fiat currency.
Right.
So that's what we're seeing. We're seeing a battle on those two fronts, and we're just seeing like, and it's essentially a very high level chess match. That's what it looks like to me.
Yeah. Yeah, I don't know. I don't know if it's the whole rollout of what they're doing with it's been slow, or it's just this big battle going on in the background, like you're saying. Because it has seemed like just slow progress. You know what I mean?
I think it's slow because of the battle in the background. I think they're having to be methodical in their approach and how they're releasing news about it, and what features. I mean, even comes down to what features they add to the platform. They're just. Oh yeah.
Kitty wants to know or does nobody want to work? Are we at full employment, or does nobody want to work anymore? Which is it? We have to look at like the day that you're getting for employment. First of all, that's all messed up and skewed. And then who are the people working? Are they Are they legal? Are they registered? Is it someone that would even show up in that data set? When you pump a bunch of money into the system and tell people to stay home and then pay them to stay home, they're gonna develop habits. They're not gonna want to work. So until they get to their last credit card that they're fully maxed out on and they can't get another balance transfer, they're gonna be lazy. So
yeah, like, see, the way that I've been doing it, I'm not even like relying on credit right now when I took my sabbatical. It's literally all just the savings I've built up.
Yeah,
like,
no, that's good.
I've got a good cushion, and I still have cushion. I've just decided now is the time.
Yeah, no, that's good. I know it's crazy how, I mean, our like Americans, I think it's like all-time high in credit card debt right now, or close to it. Like outrageous.
Yeah, because if you look at the debt to savings ratio, it's insane.
And then the savings exactly is like not all-time lows, but it's some of the lowest we've seen.
Yeah, so that's what's making the ratio like really pop. Like that's why it's so significant.
Yeah, that's not a good sign. But yeah, what do you think? Pepe coin dipping from the NFT crowd into crypto. Oh, was that NFT before?
I don't know anything about the PP coin.
That one pumped the other day.
Yes, Kitty, that is correct. Americans do not have savings. That's kind of like built into the culture, though. Like
yeah, that's always been
consumer culture.
Americans. It's just really bad right now.
Yeah, it's just very, very much highlighted right now because of how bad inflation is.
Yeah, it's that mixed with how much debt people are carrying and putting on.
Yeah. No, Kitty, I do not hold PPs.
How could you not hold PP? That's crazy. Wow, SPY is still going. Yeah, dang, man.
So as of right now, the only crypto plays I'm in, I'm holding some NFTs that I didn't pay for, and I'm holding Loopring coin. That's pretty much the extent of my crypto because I'm waiting for the bottom for Ethereum, because I do believe I'm one of the proponents of Ethereum, and I do believe that there will be a great flippening between Bitcoin and Ethereum, because I think Ethereum will show that it actually has real world application. More so than just as a currency, and I think that Bitcoin is just a currency. Like, it's the difference between silver and gold, right? Silver has a lot more real world application and is more finite than gold is. And it's the only reason I would say it's more finite is because it's harder to recover than gold from materials.
I'm kind of in that boat on crypto. As far as Ethereum and flipping and there being a bottom at some point. I've not gone long on it.
Yeah, no, I'm waiting to go long, especially while the CBDC bullshit is coming out. Like, I'm gonna wait for that to settle before I even start looking at buying into crypto.
Yeah.
Because I don't want anything I own to be backed by a digital currency owned by any kind of central bank.
Yeah.
I don't want that.
Yeah, makes sense.
While gold is more useful than silver, it is also in more abundance in the world than silver is. And it is much easier to recover than silver is. So silver is a lot more expensive because it is not as recoverable. So, like, for example, whenever you have silver in electronics, that silver will eventually, it will oxidize much more quickly. Like, gold pretty much won't oxidize. It just won't do it. Yeah, I do think a silver squeeze could occur.
Another silver squeeze.
Yeah, man.
That's interesting. Yeah, I've not thought about that with silver compared to gold. And I always thought silver was used more than gold. Is that not the case?
It is used more. It's used more, and it's harder to recover.
Okay, yeah.
Like, gold is just has its value because of the way it looks.
Well, it's I mean, it's from beginning of time, right?
Exactly. Yeah.
Yeah, that's interesting. So where do you think a bottom is on Ethereum then?
Ooh, so bottom for Ethereum. I'm gonna have to pull up a chart. Hold on a
I
second.
know, yeah, anyway. And when you say flipping, you think there's going to be maybe even like an inverse of Bitcoin and Ethereum, or?
I don't know. I don't think an inverse, because I don't think they're directly correlated. I just think that with the advent of Web3 and with Ethereum 2, like it's the applications are just too staggering. The applications that it could be used for are too staggering to ignore. That's my opinion.
You have Bitcoin on BlockFi, you're gonna get it back? I don't know, is BlockFi still a thing? It working? Did they close down? I don't know. Go get it back. Looks to be working.
Yeah, Bitcoin and Ethereum are always going to be, at this time, they're always going to be the main focus in crypto because those are the two biggest players, right? Like those are the ones that control the biggest market cap in crypto. Those are always going to be talked about. All right, let's check out this chart here. Change my timescales.
Gold is a better conductor.
Yes, gold is a better conductor, but silver is a better resistor, and resistors are more important than reductors or conductors, excuse me, because conductors you can have copper. Copper is a perfectly fine conductor. There's nothing wrong with it. Aluminum is also a great conductor, and it's incredibly cheap. Like you need resistors though. You have to have resistors in any kind of circuit because without resistors you can't control the flow. And if you can't control the flow, you're not going to have a stable current. And if you don't have a stable current, you're going to burn your your components. Resistors are absolutely necessary.
BlockFi's website's still up, but no. You ever still not letting you withdraw? How long has that been?
And conductivity is not the same as reactivity, by the way. What were you saying?
Kitty Daddy says he can't withdraw out of BlockFi.
Oh, whoa.
That's been like months, hasn't it?
Yeah, I think yeah, since November. You have to submit a withdrawal request, and they may require up to 7 days to process it.
Months. Yeah, Kitty, did you hear what Relocate just said? You have to submit a request. It might take a bit. Have you done all that?
Yeah, exactly, Daniel. And we're also seeing lithium. Lithium is another resource that we're running low on. And we will continue to run low on it until we find better battery technologies. However, better battery technologies are here. We have access to salt batteries, like sodium batteries. Those things are rad. And then we also have batteries that are made from cubic zirconium. That's awesome because cubic zirconium is super cheap to make. And actually, cubic zirconium, I would rather have cubic zirconium than a diamond because a diamond is arbitrarily expensive and cubic zirconium is the same basic chemical structure, so there's functionally no difference.
You're waiting months and you submitted it? Jeez, man. I don't know. I'm surprised that's still a thing.
Yeah, especially if you submitted the request months ago. Okay, so Bitcoin bottom, or sorry, Ethereum bottom. Let me look at that.
GNS is up 18%. Ever fill its gap? Oh, it gets close to filling its gap and then just rips.
So far, the lowest we've seen for Ethereum is what? Just under K, just under 1,000? Yeah, like 900 and some change. So.
Oh yeah, I was just saying on this last, like, most recent sell-off.
Mm-hmm.
Last year.
If I'm going off of my Bollinger Bands that I've drawn out here, at this rate, like I've got Bollinger Bands, I've got Fibonacci levels, I've got a few indicators that I'm using to try and predict. I would say the bottom is right around 400-ish.
Oh, okay.
Yeah. I would say though anywhere between, for Ethereum, anywhere between 700 and 400 is probably a pretty good buy.
Yeah. Yeah, you've got some resistance there around 400 too, or support.
Yep.
Yeah.
Yeah, pretty strong support too.
Mm-hmm.
Like it looks good.
You probably should submit that, Kitty Daddy. I don't know how much notional value that amount of Bitcoin is, but yeah, it's if it's not worth the $10 to submit it, then it's probably not even worth talking about.
So yeah, it actually looks like, oh, actually, okay, so from a little over a couple of years ago, we saw a low of about $300. So yeah, I'm thinking, and it bounced like 4 times off of that level. So yeah, I'm thinking like somewhere around 400 is probably the bottom. I don't think it'll get back down to 300 again, even after like a big crash, because I think there are just too many people holding it.
Yeah. Yeah, I like that for
And I think a lot of people are going to be looking at Ethereum for a store of value instead of the US dollar, because the US dollar is just going to get incredibly weak.
Right. Yeah, well, I mean, I think we've already seen that with Bitcoin, at least. I haven't been tracking Ethereum really, but when all the banking crisis gets crazy, it gets heated up, like Bitcoin starts ripping. It's basically been inversing the regional banks here the last, 2 months? So yeah, I mean, if you're thinking that and the dollar getting weak because it's not being traded around the world anymore as much, you might not even see that low of a low on it.
Yeah, because didn't Saudi Arabia talk about like rescinding the deal that they struck with Nixon for trading all their oil in US dollars?
Yeah, yep, they've talked about it, but there's been countries that have already stopped trading in the dollar.
Yeah.
I don't know, like 2 or 3 of them.
But well, the thing is though, Saudi is like the biggest one.
That would matter the most for sure.
Yeah. We are an oil-based country, y'all.
Yes, we are. That is right.
And that's why like so that's another reason I'm excited for alternative energy sources like geothermal. Like I talked to you a while ago about Quaise Energy. Do you remember them?
Quaise?
Quaise.
Quaise. No. I mean, I've looked at geothermal and some of the ones that I guess the professor was talking about.
I would recommend looking them up because their tech is really cool and it actually involves repurposing old coal plants.
Old coal mines, you said?
No, plants. Literally coal power plants.
Oh, coal power plant. I didn't. You kind of cut out there.
Yeah.
Oh, I see. Huh. Yeah, the tech that I've thought was pretty cool, at least for battery. I don't even know what you call it, but basically just gravity.
Oh yeah, I've seen those. Those are cool.
Yeah, like
those are also like that actually requires a lot of frequency manipulation. So we're gonna have to like go back to the Nikola Tesla days to even be able to fathom how that would work.
Interesting. Wow, QUAISE. Oh, okay. Yeah, maybe remember that. I'm not sure. That's been a while.
Yeah.
Been a while.
Yeah. Well, like they're talking about using a specific type of drill to go deeper than we've ever done for geothermal, and like that could provide 99% of the power for the entire world, and it wouldn't be a problem.
Yeah, I think maybe it was. I'm not sure. It was a professor. I don't know if I remember Cog, but he
I definitely remember Cog.
Yeah. He was all about the geothermal for power, and I remember reading some stuff that he shared.
He was trying to get me to go into a science or engineering field.
Oh, really?
Yeah, he said I had the mind for it, and I was like, okay, yeah, cool, but that's a lot of effort, man.
Yeah, I haven't.
I already know computers.
He hasn't been on Discord for like a year. I don't know where that guy is.
Yeah, it's been a hot minute. Like I see him online every now and again, and like he's playing League sometimes.
Yeah, he's playing some games. Like this
Yeah.
guy. Yeah, that's funny.
But Cog's really cool. I like talking to Cog.
Yeah, he's a cool guy. Can't see Ethereum falling that low. Those are how I think it's just mixed.
Yeah, I don't blame you. Like it's difficult to think that Ethereum could go below 800, but when you look at it in the context of not just a crypto winter, but a crypto crash due to the rest of the economies around the world crashing, like we're looking at like the 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 health of the overall economy of the entire world is so tenuous right now. That's why we're seeing China and Russia start to try to do land grabs, because if money is short, if money is bad right now, then real estate is great.
That's true. That's a good point.
Yeah.
Yeah, it is hard to imagine them going that low when they've pumped so much, but that's
that's when you got to zoom out.
Yeah, you got to. That's what I was gonna say. You got to look back when it was $300 and $50 and $60. No one could imagine it being $1,000.
Yeah, and that was at the time, like right at COVID, right? Like that was during COVID. It was at $300, and then after COVID, that's when we saw Ethereum skyrocket.
That's so weird. That was only COVID,
right?
That is so weird.
There was a bit of a COVID run. That's what got us up to the $300 level, was the COVID run. But then after COVID restrictions were lifted, that's when we saw an explosion.
Mm-hmm.
But that was also at a time whenever a lot of people were talking about debt restructuring. They were talking about there were a lot more content creators that came about because of COVID, and we had a lot more information being spread because of COVID. So COVID was both good and bad for retail investors. It was good because it gave us time to learn, and it was bad because we were learning.
Yep. Now that's true about that. It's around money.
Yeah, I'm on Twitter. It's the same as my username here, I believe. Yeah, just relocate, and I've got the diamond and the hands emoji.
I'm on Twitter too at Happy Money YT. We're talking on Discord right now though, but yeah.
Yep.
These are similar to the Spaces calls I'd have at times. I guess, I don't know, did we ever do those relocate? Did you ever come on? You came on Spaces a couple times, right?
Yeah. The first time I came on Space, I couldn't get my microphone to work on Twitter. Do you remember that?
Not really, but
so like I was like listening and just typing, and
the super IT tech nerd guy couldn't figure it out.
Yeah, and then Nighthawk was talking to you for me.
I've talked to Nighthawk a few times on there. Nighthawk's a pretty cool guy.
Yeah.
So with your sorry, back to BY. I'm curious. So you think Ryan Cohen is still in this play?
I don't think he's directly involved. I don't think he has any holdings.
Yeah.
I think
a logical mind would say that.
Right. Yeah. I think he still cares about the play. I think he still cares about the potential for the company.
Mm-hmm.
And I mean, he's just frustrated with leadership because they're showing their ass, like they're showing to be incompetent.
Right. And then your GME position, have you just been adding to it over the years, or what do you do with that?
Yeah, I've been slowly adding. Just slowly building it up. I have 5 shares in Fidelity, and the rest are in book holdings on ComputerShare.
Oh, that's right. You said your ComputerShare.
Yeah. Like I'm not making plays on GameStop. I'm investing in GameStop. That's my idea.
Right. So you haven't been doing like covered calls or anything like that on it?
Not yet. I mean, now that I've re-entered the workforce, I'm gonna have some cash flow. I'll probably play some covered calls or cash secured puts on it.
Mm-hmm. Yeah.
But I'm not gonna do anything that requires margin.
Right. Yeah.
Not for GameStop. Not for GameStop.
Sure. Yeah. So, and you're still thinking there's a huge underlying risk of a massive short squeeze on it?
I do. Yeah. Yep. And I could be wrong. I'm okay with being wrong on that because I still believe that it's a good company to invest in long term.
Sure.
It's one I'm going to be holding well into retirement. I'm sure now that we're starting to see positive EPS, and if that trend continues, it'll become a dividend stock.
Back to a dividend stock.
Yeah, exactly. Yeah.
Yeah.
It'll become a dividend stock again.
Right. Yeah. That it could be. I mean, being that it's such a growth company, I don't feel like that's really what they're trying to do at this point, or even in, I don't know if that's ever really what they're, you know what I mean, since they're with what Ryan Cohen's trying to do. But yeah, I guess maybe eventually back to more of a value divvy play. Yeah, I guess for being on GME, I feel like since I don't know if it was the split or somewhere around there, the brokenness of the stock that was the most obvious tell for me that it was some underlying problem. It just kind of went away, and it seemed more or less fixed ever since around almost a year ago now, kind of around the split, just after the split. And
yeah, after the DTCC fucked everyone.
With the dividend
because they mishandled it. Yeah.
Yeah, and I don't know if I don't know if that was part of it or I mean the split itself, like I could see it being a little bit more of a slower mover because of that. But this is totally different. This is totally different because this really doesn't seem like there's this massive sketchy short position that cyclically has to run every so many months and gets out of control.
I'm gonna say something here.
Yeah.
I think very soon. I think soon we will see a lawsuit coming out of GME's court.
A lawsuit
I think
from GME to what, the SEC or who?
I don't think the SEC actually. I think they're going to try and go after the DTCC because they're the ones. Yeah,
split?
Because that was an egregious error.
Yeah, that was pretty jacked up.
Because that is literally acting in bad faith with the company that is involved with your business. You already showed your ass by not properly processing this dividend split.
Right.
The fact that that they did the dividend split for U.S. based retailers and not even all of them, but U.S. based retailers, and more commonly ones who are with brokers who don't accept PFOF. That's problematic because like you're literally telling all of the other brokers around the world that they don't mean shit. That's what that says.
And GME going after them though, what do you think? You think that will cause some price action? Like I don't. How's that relevant though?
Because I think that may have also been something that Cohen was talking to Icon about. No one can confirm that, of course. That is some tinfoil. I'm gonna say that.
You think he was talking to him about the DTCC and how they messed up the dividend, the split?
Because Icon is one of the people who, I mean, he's been investing forever. Like he would know about it.
So you think Ryan Cohen did the split via dividend to squeeze the shorts?
I think that was the plan, yeah.
Yeah.
I think that was the plan, and the DTCC knew what was going to happen if they allowed that.
Yeah, I'm kind of under that same notion. I mean, when I hope, yeah, I guess I hope you don't mind the way I like to just ask questions and not like give a bias and just see what you kind of how people answer.
Oh, sure.
But yeah, I agree with a lot of stuff you're saying.
That's just being a good host.
Yeah, I agree with a lot of stuff you're saying. Yeah, as far as all that goes. I guess to me if there is this huge underlying issue with GME and shorts still, I guess the only way that them going after DTC that would cause something with the stock would be if then they went back and fixed it. So is that kind of what you're thinking, is that they're going to go back and fix it?
I don't think they can. I don't think they can allow it. That's like the whole thing. Like because if they allow going back to fix it and actually reprocessing it as a dividend instead of just a standard split,
right?
There are going to be a lot of systemic problems.
Well, how is it going to cause a squeeze then? I guess this lawsuit, or do you not think it will?
So I don't think that the lawsuit in and of itself is going to be the catalyst for the squeeze. I think that it's going to be the cause of the catalyst for the squeeze.
Okay.
Like the catalyst for the catalyst, you know what I mean?
Right. But so you're not speculating on a specific catalyst.
No, not right now at least, because there's too little information about this specific scenario.
Mm-hmm.
Too little information has been publicized, so it's too hard to come up with a reasonable train of thought.
All right, I'm going full port on GME. No, I'm with you, like, on all the stuff. Like, I guess I don't know. It's been I don't feel like any of the DDs necessarily changed. I guess my biggest tell to what was going on and what attracted me to it was honestly the price action and the cyclical nature and the somewhat predictability. Of course, always then having the option of this thing going crazy and having exposure to that. Once we kind of lost the price action and these signs to me that were like, okay, yeah, they're still there. Like, when the thing wakes up every so often, based on no news, based on nothing, and some people will say it's this FTD or this or that. It doesn't really matter to me. It's just the fact that it was happening and it was a great sign. So the fact that that's over now, I'm less certain of. I think the DD was right, but I've thought maybe at times that the last 2 years and the cyclical patterns, and all the crap that they've done behind the scenes, they were using each of those cyclical patterns basically to unwind, and it's basically there's still a short position, but not this crazy amount that's that they're having to fix, basic liquidity pumps like you're saying with seller box stocks and OTC, which I think GME's basically been seller box the last 2 years, just at a very high price because everyone was buying and holding.
And that would make sense based on the cyclical movements it's been making.
Right. Yeah. Even the chart itself, it looks like almost like an OTC stock with huge liquidity pumps. It's just on a much larger time frame. So yeah, I'm not. I don't know. I guess I feel like once we started to lose the cyclical price action and kind of this. All these telltales to me, is like I started to try and think what maybe happened, and that's where I started to think potentially on each of these pumps they were able to slowly unwind between the pumps and dumps that they had. But I'm not sure, and like if it starts going, I'm on it. But it's like because I've actually closed a lot of my position. I've been kind of basically swing trading at this point. Back and forth,
and that's reasonable. That's reasonable because it's at this point, like, it's just looking like a solid investment play. That's just what GME is looking like.
Yeah, I'm in a totally different position than I was a year or two ago when I was just putting gobs of money into it and YOLOing on options
and not seeing much return.
Yeah, so it's like different time for me too. So it's not to say it's not a good investment. I think long term it is a good investment. That's why to me it's a nice trade, even because you can go long on it and not be thinking, oh, it's going to have it's just going to get rug pull, it's going to go BK, it's going to whatever. So yeah, I don't know. I guess I haven't hung out on Superstock enough lately.
I haven't either, honestly.
I know, because all your DD's OG
Superstock most of the time. Yeah, well, because like most of the stuff you see on Superstock nowadays is just like it's just a bunch of purple circle pumping.
It's just purple circles.
And while that's cool and all, like what does this do? What does it matter? Like you're not actually teaching us anything. We're not learning anything here anymore. Like this is just circle jerking at this point, like purple circle jerking. That's what it is. They should just change the subreddit to r/purple circle jerking.
Yeah, no, I know. That's why I'm not.
And I'm saying this as someone who's heavily invested.
You're
in
a huge holder. I know. You're a huge DRS guy.
So like, man, you're not actually you're not being productive with it. So it's not good information. It's not a good place to learn anymore. Not with new content, at least.
No, GNS is ripping. He's up 35%. Have you followed the Graham story with GNS or whatever his name is?
I have not.
Oh, this is
Oh, I mean, I saw it a little bit, but
yeah.
I haven't like really delved in.
Yeah, basically he kind of started a movement of companies going after naked short selling.
Yeah.
On their stock. And
yeah, that's the part I heard about, and I was like, I like that guy for that.
Yeah, exactly. And you know, he got Wes Christian involved, or Christensen, or whatever his name is, Wes.
Yep.
Yeah,
I remember that.
And then like I guess they hired,
and that dude's like the short seller hammer.
Yeah. So it's been multiple companies now that have been done, like basically followed this kind of game plan of getting naked shorts out of your stock. And the CEO of GNS is kind of the leader of it, more or less, because he was kind of the first one, I guess, to at least publicize it. So you had like lots of other stocks, and it was crazy because you would see them pump after they even talked about it. So right. So if like the CEO or whatever of the company would even just talk about, oh, we're gonna fight naked shorts or whatever, the stock would just pump. So there was probably some companies that were doing it just to get a little rally on their stock. They weren't necessarily going to follow through, but
yeah, like I think Funware was one of those companies. PHUN.
Did Fun do it too? Yeah, there's a lot of random ones.
Yeah, dude, like that CEO was complaining about naked shorts all the time on Twitter. Like I had to stop following because it was so annoying.
Yeah.
Like, I get it, dude. You're mad about shorts, but you got to do something with your company instead of just complain.
Yep. Blink twice if you're in danger.
Okay, so I was reading through chat. It's me, BK. So like, what's your take on the DTCC having handled the splividend properly? Like, why do you think that they handled it properly? I think they didn't handle it properly because it wasn't paid out as a dividend to foreign brokers, and even not to all U.S. brokers. The only reason that would be is because there weren't enough shares to issue as a dividend. Logically speaking.
Like SPY's set up an engulfing candle here. Yeah, that's a good question. I mean, from what I saw, it definitely seemed like they just did a normal forward split without getting the authorized shares.
And then Holding Gang, since I am part of DRS Gang, I do want to talk about that. I don't think it's a nothing burger, but I also don't think that DRS is going to be the catalyst for a squeeze. I think DRS is going to be the linchpin for a lawsuit. That's my take on DRS. That's why DRS is important, is because it will help fix the game for everyone. That's why it's important to register your shares and show that we own more shares than exist. Because it's about the lawsuit. It's about changing the system. It's not about the play. That's not what DRS is about. It's not about GameStop. That's my take.
Yeah, no, I agree with that. I've never thought it was going to cause a squeeze. I was always curious what would happen once they could report, you know, the whole float as DRS or whatever. So yeah, more information like what Dink's saying.
And BK, so GME would have to allow it, because if they don't have evidence to show that it was mishandled, and they don't have evidence to show that's the whole thing. Like, you have, in order to accuse someone, the burden of proof is on you. You have to show how they did wrong, and you have to show the reasoning behind it. So they have to sit silently because they have to build a case.
Well, they're also,
and the difference,
they're going up against the superpowers of the world too, so it's
exactly
it's
yeah. They're
you're literally
going
going
against
up
central banking. Like,
you're competing with the sun for the center of the universe.
Exactly, yeah. And so like the other thing, so the difference between just a regular split, like I can clearly articulate the difference between a split versus dividend split for you. The dividend split is an issuance of new shares. So those shares are paid out as a dividend, and they did not previously exist. Whenever you split the shares, just a regular split, that's just dividing your position by 4. So like your money value still won't change either way. In either case, your money value in the position doesn't change. But the difference is the way that the split is performed. Since you have it as a dividend, you have to issue new shares. If you cannot issue new shares, you don't have the capacity for it. When you do a split, you're not issuing new shares. You're just taking those shares and dividing them. Does that make sense?
Yeah, it is weird that AST and both Computershare are down. I picked up more BY shares. I don't know if you guys heard them, but I picked up some here and then a little bit on that break. So I'm not gonna sell them today. I'll probably sell them tomorrow if we get another liquidity pump. So yeah, but yeah, I don't know why Computershare, and that seems really sketchy. Also, what if you want to sell what's in Computershare? What do you do? Relocate?
You can call them.
Will they answer and do it?
Yeah, absolutely.
So it's just their website that's down or something?
Yeah, you can still call them.
Okay.
So like the thing is, what they'll do is they'll like what their whole thing to make it easier on their systems, because their systems are still kind of old. They haven't reinvested much back into the company, which is kind of why Computershare is like a boomer interface. But like you can still call them. They'll do a batch order, and that is a little problematic, especially for buying, because you may not actually get, or well, it's problematic for them from a business standpoint, because they may not get the best price whenever you put in your buy order, but you're still gonna get those shares for the price that you paid. So I don't think that the way they're doing it is the best, but also they're a transfer agent, so they don't really have to fuck with Seed and Co. Which I think is kind of great.
Yeah.
But yeah, you don't have to use the web interface. You can call them. I know that's like bad juju for millennials, because we don't like phone calls.
Buying more GME batteries now. You're killing it, man.
It's not that they didn't expect GME to notice. It's that they, okay. So, BK says that's technically a difference, yes, but what difference does it make to us? It's the same thing. Why would they fraudulently switch it up and expect GME not to notice? It's not that they didn't expect GME to notice. It's that they are so confident that they could get away with it. They didn't care whether or not GME noticed.
GNS is kind of squeezy here right now. I don't know if you guys are playing this at all. It's up 46%. It's got a gap fill at $1.40. It still hasn't
moved.
Still hasn't filled the gap on the bottom though. I was looking to go long on the gap fill, so I'm still waiting on this one. But pretty big move today. It seems jumpy for sure.
Oh, yeah.
I don't think as far as them not knowing, I don't think it was like a malicious, oh, we're gonna give a forward split in this, but instead of a divvy split. They probably didn't care and weren't thinking, and it was all automated, and it was like they weren't shares, so just forward split. And I don't think GME's necessarily an outlier at all. They probably do this all the time with stocks. Like there's stocks all the time that do split via dividend, and they don't have shares, whatever. They'll just do a normal forward split and just copy it. It wasn't some planned thing on their side, I would imagine. I think it was just, that's nothing to them. That's nothing. So it just was an automatic thing and it goes through, and there it is, and wipe their hands, no big deal, we're all done.
Yeah, because Seed & Co even lied to the foreign brokers, because they told them it was just a regular forward split. They didn't tell them it was a dividend split.
Crazy.
Yeah, like because Seed & Co knew they were going to run out of shares before they could even get to the foreign brokers. So they couldn't allow a dividend to be paid out to everybody, because that would mean they'd have to repurchase more shares than they could. Especially, so that's also part of the significance of DRS, because whenever you take them out of seed and code, that removes ammunition for DTCC. So like you're doing things on multiple fronts with DRS, and that's why it was a little frustrating for me to see all this FUD be spread about it, because the system in and of itself is extremely basic. Like you're literally just taking the share out of the DTCC and you're putting it in your name, and you own it. It is yours. No one can change that except for you. That's part of the significance for it. That share then becomes earmarked with your name. It's just yours. Like the ownership is so massive. It's so important, because that is how we push decentralization. That's how we combat the system, is through proof of ownership. That's why I'm a proponent for DRS.
So small. You're staring at it now. It's good. Yeah, man. I guess you win. You can be the center of the universe.
Yeah.
Spy's coming down here. Down to VWAP maybe. I've been chopping around on my trade. It's not very good. I should just chill. GNS literally hit right at our line there. $1.30 as a resistance.
Yeah, like, dude, and that was the thing. That's happened to me a couple times where it's just like touched the resistance, and then it's like, you were right, that's the resistance.
It's like nailed it. Yep, right on it. So yeah. It could still keep. I've got like $1.40 still a gap fill, so it might just be taking a little breather. But I don't know what. Yeah, there's a catalyst.
It's probably got to cool off, because like, look at that RSI, man.
It's up there, but you know.
Yeah.
This thing's crazy.
Yeah, that's true. And you know, runs don't care about overbought. Like squeezes don't care about overbought.
Not really. They just like to go. Neither does a spy.
Yeah, that's
Spy
true.
Loves to rip.
Spy really doesn't care about overbought.
With nothing else. Wheel and GME net me 10K so far. Well done, Noel. That's crazy, because the IV on it's low also. So you're
that's really good.
I quit. I quit doing covered call, and that's actually when I sold my shares, because the premiums on the IV on calls were so cheap. I was like, I'm gonna sell shares and just buy calls, because it's so cheap now.
So BK, that was kind of the point I was trying to get at when there's with the difference between a forward split versus a dividend split. So a forward split, they do not have to provide the shares. All they do is tell the broker, hey, divide everyone's positions by 4, because they're supposed to get a forward split. With a dividend split, Seed & Co has to issue the shares to the broker. They have to already have the shares from the transfer agent, and the transfer agent is first going to pay out the shares to their book holders. They're going to first take care of the people who, like, transfer agents have everyone who owns shares listed on their platform. You can't see this information. They see it on the back end, is what I'm saying there. But
yeah, I guess you kind of need to understand the split and a dividend or how they work fundamentally is different.
Yeah.
A dividend, if you think about it just with a normal stock like AT&T, they pay a dividend. They pay shareholders a certain amount per share, so they're paying it out. A split is normally just a normal forward split, where it has nothing to do with a dividend. Nothing comes from one entity to another. You're not receiving anything. They're literally just changing numbers on your screen from 1 to 4, 4 to 1, and changing the ticker number. It's as simple as that. The split via dividend, they're actually taking shares from their outstanding shares or treasury, whatever it is, and using those to push out to brokerages for the split.
Yeah, and so this it ties back into one of the more recent shareholder meetings, whenever GME wanted to increase their cap of shares that they could issue up to $1 billion, which is the most you could issue. So when they did that right there was showing that they were planning to do a dividend split. That was the telling move.
Yeah, they increased their outstanding shares.
Yeah.
So I still don't have an answer to why companies do split via dividends. I maybe learned it at some point, but I forgot if I did.
I'm sure.
What's the point of that?
There's got to be a couple of reasons. Like one of them would be one of the obvious ones is to combat short sellers.
Yeah, but
But even then, all that does is make it a little bit more expensive for them to buy their shares back. Like, it's not a big deal. But the biggest reason I think would be for tax benefits, because when they issue a dividend, that counts as a payout to their shareholders.
No, I mean not for us. It doesn't affect our taxes, from what I.
Yeah, it doesn't affect ours. It affects the business's taxes.
That's a write-off for them?
I believe it would be, because I think any dividend payout is a write-off, isn't it?
Well, why wouldn't they all do that then? That doesn't. I don't know if that's right.
Yeah, let me hold on.
Because at one point I think somebody told me different reasons, and I think I just forgot because that.
Oh, no. Okay, so no, it is for the shareholders. The dividend, that's what it is. It's tax benefits for shareholders. That's the reason to pay it as a dividend versus doing a forward split.
How is it a tax benefit?
Because whenever you're paid a dividend via shares, there's some weird tax ruling with dividends versus splits.
Okay.
Hold on.
Yeah, no, that could be.
Because there's a specific dividends received deduction in federal taxes. Let's see.
Does you regret buying calls on GME out the money moon range? Yep, for sure. Cut it up. There's more cake. Yep.
No, BK. The difference between the dividend split versus a forward split. The dividends. Okay. The company provides the shares. They have to issue the shares through their transfer agent to everyone who is listed as a shareholder by the transfer agent. So that means brokers, that means hedge funds, that means people who have purchased shares through their plan holdings account on ComputerShare and transfer them over to book, or not transfer them over to book and keep them in plan. It's the same thing. Once you are a registered shareholder, you are entitled to a dividend. Well, they didn't do it right. That's the whole point. Like, they just told foreign brokers to do a forward split instead of paying out a dividend to those brokers, because those foreign brokers would still be owed the shares that Seed & Co. was issued, because Seed & Co. is the beneficiary of the accounts of the foreign brokers.
Yeah,
so Seed & Co.'s responsibility at that point is to issue the shares to the people who are supposed to have them, or the brokers that are supposed to have them, to pay out to their shareholders. But they didn't, because they didn't have the shares to do that.
Yeah, so figure the company has 100 shares to give out as a dividend for the split. They give the 100 shares to the brokerages and say, here are the shares for the split. They realize that the people holding the stock, they need more than 100. They need 500. So they give out the 100, and then the other 400 they just make up. It was crime in basically broad daylight. But it's not, because people it's such small intricate things that no one knows about, that it's not something that is talked about, of course. Like, even the people that at the SEC that run this thing, they don't even understand this stuff. It's like they maybe studied at one point, but it's not like, oh yeah, this is something we talk about all the time. It's like a lot of the stuff of the DD on Superstock over the years is like, it's just all these different tools that they can use to manipulate, and that they can use just to manipulate. It's pretty yeah. But
and there is proof, BK, that it did happen that way, because if you look at screenshots from foreign traders, like anybody overseas, their platform will show that they just were issued a forward split instead of a dividend split.
Yeah, there were so many conversations from people sharing what they were having with their brokerages and back and forth. I remember that was like months of people going back and forth with their brokerages, and like just so much confusion, and brokerages didn't even understand what a dividend split was. It's like, what?
Yeah, because it's uncommon. It's not common for people to do dividend splits.
It's true, it is a little more uncommon.
It takes more effort on the company's part to do a dividend split versus to do just a forward split.
You had a great analogy, Kitty Daddy. You're right. Relocate, dude. Thanks for coming on, man. It was a good chat with you. It's been like a year. I don't know.
Yeah, it's been a hot minute.
Yeah, it's been a while, but you're welcome anytime. We're gonna probably probably keep looking at the market here, and feel free to jump back anytime. If you want to go chat with, it's me, BK. Jump on Discord if you're not. You guys can continue to discuss this divvy matter.
That's true. Yeah, I don't want to take up the entire airtime for that.
Yeah.
BK, are you on the Discord? We can just chat there.
I mean, you can chat Discord or in chat, and get back to spewing the nonsense I do about the market.
Yeah. Actually, it might be better to do it in chat, so it's more instructive for everybody who wants to watch.
Sure, yeah. But yeah, thanks for cruising by, Relocate. Cruise back. If you want to chat whenever, just let me know. I'd be happy to grab you.
Oh yeah, we'll do. I'm gonna go ahead and bounce out. I'll probably go play some video games.
Yeah, man.
And then watch the stream.
Sounds good, Relocate. Thanks, buddy. I'll talk to you soon, man.
Sounds good, Happy. All right, y'all, take it easy.
I was Relocate, so he's OG member of Happy Crew on Discord, on the stream. Yeah, he helped me even he helps set up even the Discord. I think he's still like a mod on there, so better behave. No, yeah, he's been around for a long time supporting us. So appreciate the words. Relocate, thanks, man. Yeah, fun chat with you, dude. Pulling us back to GME. Yeah. No, I know it's like the chart's boring. We'll just go talk about all the old DD and just hash it back out. That's great. Too much fun for Yeah. But yeah, I did. You guys heard me blink. I did actually get some more BBY there. It might just stay flat into delisting. Honestly, I'm not sure. I'm hoping it at least doesn't drop, but maybe I can get a little pump here on liquidity on one of these days. Maybe tomorrow, or I'm not gonna day trade it, so it'll have to be tomorrow, I guess. I don't know the catalyst on GNS, but fully rejected that that level there, back down to VWAP. I'd like to get a position on here, but it's just, yeah, just still not there. So I'm gonna wait. I don't think this is like a reversal on it necessarily. So we've got a position in Fubo, which is looking good. This thing started to run today, 9%. That ain't bad. Nice little cup and handle, maybe building on the hourly. Just let my cover calls expired. No. Oh, you're talking about on GME? Cover calls on what? Yeah, Fubo's chart looks nice still. Upstart, I'm hoping bounces on that 1070 level. A little, yeah, that was a lot of intellectual conversation by a smart bloke to cool my mind off. Running hot. Go. Yeah, I shouldn't trade in chat. Did some poor trades through here. Only my fault. But this price action is also kind of, it's choppy. Like, it's bullish, but it's, yeah, I don't like trades like that. You know what? No, you want to get out of those. Buy to close them. I don't know what's gonna, if it delists, I don't even know, that might be a mess. You should be able to close them for a minimum for just a penny. It's always a good idea to close them anyways, just in case it goes crazy after hours. If it opens up at $1, you're gonna be pissed. Yeah, it's not intraday, it's all the time. Yeah, I wouldn't hold cover calls into potential delisting on Wednesday. Any options, if you had any options on BBY, I would close them out before then. That is if it goes through. Like, maybe it's not gonna delist, I don't know. But I would think I wouldn't have any reason to believe it's not at this point until they come out and say something. But yeah, cover any options on it, I would be closing out of. Freaking bullish chart, man. Got a divergence on the MACD here on the 5-minute. Have to weigh that with the price action. The RSI divergence went away here, but it is on the MACD. VWAP's so high though. This is just a small grind up chop day. VNS bouncing on VWAP too. On semiconductor with a rip up. Thanks guys for your support today. Appreciate it. We've got 29 likes. Thanks guys. Relocate's on our Discord, and if you guys want to chat, you're welcome to. Also, I've always been down. If you're disrespectful or anything like that, I'm gonna kick you. But yeah, if you want to chat, jump on our Discord and let me know in chat. Be in the YouTube strat, and then come hit me up. Stock reorganization. Your July. You guys hear me? That was weird. Did it reset? No, we're still good. Whew. Don't know what happened there. Dropped out for a second. Yeah, if it's still broken, we get some crazy move to like 35.40 with speed. The cover calls are gonna just get wrecked because the IV is so low on them. The premium you're getting, 50% IV. This thing can get back up to the thousands. Like we've seen it. Haven't we seen 1,000? I don't know. I'm just saying to roll a cover call from where it's at now, if it does get insane, would be very, very difficult. If the cover calls you're opening up are 150, 200% IV, like that's one thing you can usually roll those pretty easily. But if you're going from a 50 IV cover call and then the IV pumps up to 150, 200%, rolling that, you're looking at a year of time. That said, Holjing, typically an acquisition would be bearish for the company acquiring. And if you guys have another thought on that, let me know. But that's what I've seen. And that actually, there was actually a recent case of it not being bearish, which was Express, which kind of surprised me. But Express is buying Bonogo or whatever from Walmart, and it actually caused it to rally. So not quite sure why it did that, but my experience with other stocks, when they're acquiring, it's usually bearish just because it's basically taking on more liability. It's a cost to the company. Maybe not in the long term it wouldn't be bad, like it could be good in the long term, but I think typically the reaction from the stock price is bearish. So could be an outlier. Depends on who they're acquiring, of course, and the terms, but yeah. Thanks. Yeah, Ryan Cohen's a real talker. Yeah, I mean, you have to think about it. Like, it adds a bunch of liability. It adds on whatever debt they have. Shareholders don't know if it's going to actually bring value. Like, how do I know it's going to benefit the company I'm invested in? I don't know. You could look. I'm looking at more historical data, but for the company that's being acquired, it's usually bullish, but that's depending on what they're being acquired at. But typically, it's a little higher. There's a bit of a premium. So say if GME was going to buy BBY, it would probably be bearish for GME, right? Wouldn't you be pissed? I probably would be. I'm like, what the heck? They can't afford all that. They can't afford all that debt. Like, they don't need all those write-offs. But for BY, it'd probably be bullish because they'd say we're going to buy it for, $1 or $2 a share, whatever market cap that puts it at. So the company being acquired, it's usually bullish. The company acquiring is usually bearish. Your opening strikes break even. Well, yeah, and since you've been wheeling anyways, it's not I guess it's not a huge deal. Like you've made your premium. Yeah, you can always just let them go at that price, or try and roll it. Yeah. Mullen down 5%. So actually, I got more shares of BBY this time around. Might have been early. No, it's almost 2. Hoping for a liquidity pump, and then actually tomorrow I could short it. I don't want to short it into OTC, but we gotta move like this again tomorrow. Ace, I don't know if it was you, if you were asking about this ticker, but yeah, this is one that's this is AVYA. This is one we used to actually trade. It's AVYAQ now. Thanks, Mark Tank. Appreciate it, buddy. Thanks for your dono, dude. I don't even. Is Mark the Shark? Who's Mark Tank? Just a rando dropping in with the dono. Appreciate it, man.
Let's get nuts!
Let's get nuts! BBY Cowboy? Thanks, Relocate. RC pulling up PetSmart? With GME, or what do you mean? Anyways, yeah, this AVYAQ. Yeah, it had a huge move. I mean, I don't even. It's a time in sales. So look how illiquid this thing is. This is all the time in sales. Can you see this? This is the whole day. I don't think BY will be this illiquid, but this is what caused that huge move. It's the last price that it was traded at. So it was trading at 0.0012 this morning, and there was a few trades down here. 0029, 0029. Okay, yeah, that was it. So 0012, and then the next trades are all at 0029. And there you have it. 1,300%. But is there even enough liquidity for you to get in and out of positions with that? Like, no, it'll be fun. It'll be fun. I don't really follow OTC stocks that much. I mean, Sears was the last one I followed, and I barely followed that one, so.
Let's get nuts!
BY actually gets in there. What's going on here? Ace? Thanks, man. Appreciate it, Ace. Sorry we talked about GME so much, and you're not even a GME holder. I had to. Must be GME Chuck. Old Jing, you're pushing. It's the same. It's all the same. Like, it was awesome having Relocate on, but there's nothing, like he said, there's nothing on Supersonic to even like to look at, because there's nothing new with it. Like Relocate had some tin, and yeah, that was cool. But yeah, unless we're just gonna like look through the Teddy books and try and connect the dots, and there's not much to talk about GME. I've said my piece. I think it's gonna fill this gap, and then if it keeps going, I think it's gonna bounce down here like $16. If there's a market crash going on, I think it will go probably to $10. Here, I'll put a line. How about this? This is the number one YouTube GME content right here. Boom. Put a line at $10. Go like the stream. Renzel's back? I gotta see, what's he doing? Math says 5. The fib math? Okay, I'll put a line at 5 too for Dink. If it breaks 10, yeah, I would say 5's the next level. I would agree with that. Oh wait, sorry. You're saying math from, what's his name? What was that guy's name? Mark? Mark? But yeah, I would say if 10 breaks, 5's next. Another 50% haircut. No big deal. I can't imagine GME gets down there. Not anytime soon, at least. Maybe Frank Cohen drops off the board and goes all in on BBY. GNS is consolidating nice up here. Oh, Bob, that's right. Bob. He's at 132. There's no news on this. This is giving me like GME vibes, where it just pumps out of nowhere. The options on here still suck though, it's huge spreads. Which is kind of interesting. Why are the spreads so big? Has volume, has open interest. NNOX. Consolidating up here. Yeah, finger motion still looking good too, Ace. FNGR. Consolidate the highs. Yeah, a scale in at least if you're gonna buy on a day when it's up 20%. Just buying slowly. What's top doing? It's still flat. Wow. So strange. There's not like more profit taking. This thing isn't plummeting. Dude, Chinese stocks, man. Where's Sarah FL? Yeah, we looked at eBet. Is that thing rallying today? 2% down. I've traded this before, I believe. Pretty barcodey though, huh? Bye-bye. I'm gonna go long on GME. Yeah, that gap fill, 15, 16. Heck yeah, I'm gonna go probably 6 months out. Calls, like 3 strikes out. Full port. Maybe not full port, but I'll go heavy if capital's not tied up somewhere else. Heck yeah. It's not even about the percentage, it's just about the probability, like high probability. Even if it's 20-30%, just put a bunch of capital in and that's great. That's it, BBY. Look at that. This little flushy can't wick below support, and now it's holding above it. Beautiful. Dude, is this really 7%? Say that. The other China stocks. Crazy how these Chinese stocks are all just kind of staying flat, consolidating. Both still looking nice. Buys coming down. Oh, that was an engulfing candle, wasn't it? No, not really. I don't like this choppy day. I'm gonna wait. Might make an entry for a move like last 10 minutes or something. Play the 10 minutes of Fugazi. I had a little bounce out of the bottom. Oh yeah, what was it? SoFi. Looking at cash secured puts on SoFi, but maybe we should wait. They just had earnings and they were good, but it sold off. We'll see. This week might have a continuation though. 520, 480. Why it's a little ways to go down. Moving down a little bit. We haven't even gotten Gen I.
Sachs call, no doubt, right? So to a neutral from a buy. Thank you for that, Renee Tian. Good to see you. Thank you.
This is the way.
Now let's take a look at the bigger picture. Timothy Chubb is with us, CIO at Girard Division of Univest Wealth. Thoughts on First Republic? Let's start there. It is the third failure of this year, and we had SVB, Signature, and now FRC. What are you thinking here? Is that the last domino to fall, or are there more?
Well, I think I agree with Jamie's Diamond's comments that we're getting very close to the end of the bank stress, and especially with some of these regionals. Ultimately, this is the consequence of the cumulative tightening and $80 variable lags of
a lot of slippage,
monetary policy decisions in the last.
That's like
year.
Robinhood, but you just
stress the system
you just don't see it.
Had and raising rates so quickly. Not to say that it wasn't necessarily needed, given the inflation backdrop. But you ultimately are going to start to see, some of this impacting economic activity and inflation. And I think, looking at, banks moving forward, they're certainly going to be a lot more restrictive with their lending and having to pay out higher deposits, higher rates on deposits, And so ultimately that'll be difficult for bank earnings, but, more
bouncing off that level.
I think it'll be a headwind for the U.S. economy and doing a lot of the job of the Fed.
Yeah, I mean,
a
lot
until
of this obviously on the heels of a few things that have happened. I mean, we've had a Fed that's been raising rates aggressively, caught some off guard with that. Also, the crypto deposits, and that was something that has been scrutinized. And just, that was at SVB. But, the truth is, when you look at what's been going on and the oversight on these, and the possible run on a bank, and social media, too, has been criticized for what's been going on here. So it looks like FRC goes to JP Morgan, and that story has a happy ending, I guess we could say. I don't know. I won't even say that because there's a lot of people who get lost in that. In the meantime, let's talk about the Federal Market Committee. And so with that, we have the Fed on Wednesday. Are you thinking 25 basis points? And at this point, people are saying, don't even talk about it. Who cares? I mean, it's 25 basis points, but what's next?
Yeah, exactly. It's really about what's next. I mean, I think 25 basis points is to be expected, and I expect that we'll see, the Fed ultimately borrow some language from a prior cycle.
That's a good question,
really talking about how the committee expects that the stance of monetary policy will most likely be sufficiently restrictive in returning inflation to their 2% long-run target. But obviously, the Fed will remain data dependent, closely monitoring the inflation data and other economic data to assess implications on future policy decisions. And so,
what are you talking about?
I think as we look past May, we expect the Fed to at least
did you get in on this?
Hold rates steady. And while I'm not necessarily
agree with this, the sleeper plays
and what the bond market has been pricing in as far as cuts.
Why would you buy this on Friday?
There's a
There's
little bit of an issue
no
with
signs of anything on Friday,
and just how quickly we're likely to see the Fed pivot to outright cuts as opposed to just keeping policy rates in restrictive territory.
But, you did mention this on Friday, though, didn't you?
Strong U.S. data in the first and second quarter. The U.S. still appears to be headed towards a slowdown later this year. And a lot of the longer horizon leading economic indicators are definitely showing us that. And so, while again, I expect the Fed
198 million on
IDX restrictive territory here moving forward before they cut. We
look at that
see
bull flag breakout.
That rate cut come through later this year as we start to get some more visibility and just the severity of the economic decline.
Right, understood.
They're fighting shorts,
when we see
these
what
guys.
goes on there, the labor market is such a big picture here. Now, the labor market, we're not going to hear from the Bureau of Labor Statistics until Friday. This will be after the Fed meeting. Of course, we will get JOLTS and ADP and weekly jobless claims as well on jobs this week. But the labor picture has been tightening, and I think wage growth is obviously front and center, right?
I think the market's pricing in that. So if we do get 25,
inflation at this point.
It could be a trigger for a sell-off.
Reason why I think a lot of folks have been, really cautious on corporate earnings. Ultimately, we haven't seen those wage pressures really flow through into corporate earnings just yet. But the rate in which wage
buy the rumor,
growth is
sell the
actually,
news type thing,
flowing through is starting to slow, and so we have seen some softness within the labor market in some of those longer, leading economic indicators that we're looking for. And so, many of them likely we won't see, coming through the numbers. In some cases it takes 3 months.
Okay, Ace, don't worry, you'll get another play just like it in a year and a half.
Considering the amount and speed and magnitude of the Fed tightening that we saw
last
year,
that's this little cup
I
here.
wouldn't be surprised if we, continue to see somewhat of this deterioration, especially in light of the mounting evidence of, the economic slowdown beyond the unemployment claims. I mean, looking at small and medium-sized businesses being impacted by the regional bank stress in particular.
Right, I understand. So at this
what
point
is the cows on this though?
as we see what's going on here, what are your thoughts on international stocks? When you advise folks, or you tell them what you think they should be doing here in a volatile
up here at
environment,
57 cents.
where are the winners?
Yeah, well, on the international side of things, you've got a pretty interesting story with better than expected data out of Europe, but ultimately the rebound in China. I think we've got questions around just how and how strong that follow through will look like. And we saw some somewhat weaker data than expected on the growth side of things. Again, still growth,
facilitating the adoption of commercial electric
later
vehicles
than expected, but. The next 3 to 6 months are really going to be critical for resolving this sort of bull-bear debate that we've had in the market. And if you take a step back, and just look at the gains year to date, or even coming off the October lows, 85% of them in the S&P 500, those gains has been driven by tech. And so it's been really concentrated. Breadth has been extremely low.
hype play.
We've seen liquidity really drying up, and we just think the markets are vulnerable. The VIX is at a 17-month low, and ultimately the market's been rallying around this Goldilocks scenario of the Fed pausing rate hikes and corporate profits dropping, and obviously they've been better than expected. But they're still expecting a 12% EPS growth next year from consensus estimates, and ultimately I think not looking and considering that a lot of this corporate cost cutting may impact the top line. So
probably just ran up with all the EVs.
Equities. We think certainly there's more idiosyncratic opportunities out there, and we're positioned defensively from a sector standpoint. Currently underweight international relative to
only the last
domestic,
3 weeks,
but
though.
with a higher beta focus and some of these longer term secular growth stories that experience so much value, valuation or multiple re-rating. Last year more pronounced than maybe what we experience here in some of the areas within the U.S. market. So the last point I'd make, and this is not necessarily true for international companies.
Under $1.
Earnings quality has been really poor recently. The difference between
averaging down on this
accounting earnings, it's been the worst since 2008. And so I guess I'm a bit of a skeptic when it comes to the margin.
Hey, once you start getting into options, 1,000%.
Like it was a low bar.
It's still really good, but it's much more feasible.
And so, we expect earnings will likely trough later this year.
The stocks, it's very, very difficult to find 1,000% with the options.
So you favor longer duration, looking abroad, seeing growth, and even some fixed income. It's great to see you. Timothy Chubb, thank you so much. CIO, Gerard, Division of Univest Wealth. Thanks. All right, later this hour.
Thank you, Kitty Daddy, for your sacrifice and your service. You thought this stream cannot go down without me? Give a thumbs up.
Electrical vehicle charging. Then we'll find out why some parts of the real estate sector are more attractive than others. And our panel is ready to take a look at the
I'm surprised how these Chinese stocks really are holding though.
MGM earnings. And up next,
I'll hold my one share.
On set, and that is David Dietz.
All the way
here
to
at the New York Stock Exchange. He'll have his latest stock picks, and he's looking at a few that you'll want to hear
moving down
about.
here a
Stay
little
with
bit.
us.
VWAP it's destined. Sell more, Micro probably happy. Long-term SPY? Yeah. I think it's headed down. It's very, very strange though how much of this rally we've had since October. I guess not that strange, but pretty strange. This is like a straight reflection of just the money printing from COVID to then propping up the banks. So I guess that's why we're seeing the chart just not dying. It's continuing to just push on. I think COVID highs probably the next stop. Or rather pre-COVID highs right here, 322 on SPY, around there. I don't know if it's gonna stop there though. You can see 2008 highs. No, 2018 rather. There's that 2008 double top of 2001. Yeah. I mean, I don't know. Could even get back down here under 200. I just don't think they'll let it fall that much when they have access to infinite liquidity. I mean, look at this. It doesn't even bounce off that 50 moving average perfectly on the monthly. Jedi Last Order. That's just like a single player tops moving campaign. Or is there PvP and multiplayer stuff on there? I don't know. GNS just ripped out of nowhere. It definitely gives me GME vibes. Just shorts turning it. Just, I don't know. Weird. I don't. What's his name? The GNS guy? It's Graham or something? Stephen Graham? Check his Twitter, see if he said something. I don't. Roger. Is it Hamilton? Roger Hamilton, yes. Is it Bethany Hamilton? Is that the ice skater? Or no, Bethany Hamilton's a surfer. No tweets today. Yeah, I don't know what he's doing. I don't know what the stock's doing. SPY bounced on VWAP. IDX broke out. Well done. Tiny little handle on that cup. $300. Yeah. 300 on SPY. Yeah, the 200 ranges. Yeah. Yeah, look at their website. It's pretty goofy. EV everything, and you nailed it. Yep, IDX too, Tony. Hopefully you guys have this. My sketchy EV play right now is Mullen. Because they're fighting shorts. And because we've got this RSI divergence. But yeah, not too great today. Had the gap up and now it's negative. I mean, for a quick scalp, you could trade IDEX. Breaking out of that level, I mean, has a gap fill. Yeah, this is like right at the resistance too. If you want to front run it, you can buy in now, hope it goes up, have a tight stop, or wait for it to break. Have a looser stop. Take profits around that gap fill at 58 cents. Or sorry, 587. But it kind of moved right up to this support right here. Buy bouncing on VWAP there. So might be late on it. The whole move might be from here to here. See if it consolidates up here, and if it kind of finds support back on 46. There's a red candle. Starts to consolidate up here, then it could be good for another move. Good volume. BBBY, we suck again. Oh, Ace Ventura said matching marks don't know. Thanks, Ace. I didn't see your message. Venus bouncing back up to VWAP. Be like finger motion. This one might be good. Ace keeps mentioning. Rich Smith.
e-commerce. Everyone wants to just click on their phone and have the product or service delivered to them. Amazon's #1 in both. Let's look at cloud. It's like a 37% market share. The next one is Microsoft. They're more than double.
That's not bad.
And we know that's a business that's going to be growing anywhere from 10 to 25% per year for as long as you can see out there. E-commerce, of course, the economies of scale. And of course, they're also able to sell third-party products.
Yeah,
and
UAVs was
too,
definitely a hype stock for a period.
And on top of that, your subscription.
I remember some of those.
This Prime, it makes it so sticky. I went to a Whole Foods the other day. They said, we can give you another discount if you can show us our Prime card. What? For buying groceries? And so, of course, everyone wants that Prime card.
I do that. I'll spend
maybe by end of day.
I'll get like 10 cents off. It's great. It's
really
you're
talking about that specific chart, UAVs.
No,
there was a whole hype
really
run of
Of course, the advertising is one of the highest margin
like
businesses,
drones?
growing fast.
Yeah.
In fact, growing even faster than Alphabet, Google, and growing even faster than the Meta Platforms advertising business.
You didn't mention anything else for shopping. You didn't say
Yep, this is when it was. It was like at least 5 that take those.
I mean, Amazon, you just like the whole
like
ecosystem of Amazon, right?
It was Jack Welch, my hero at General Electric, said always want to be in #1 or #2 player in every business.
Holding
They're the
companies
ones that make all the profits. Everyone else is just
carve-outs
getting
and all
scratched
sorts
off
of
the
weird
table.
stuff.
Oh, right. And Alexandria Real Estate. Now, are you saying real estate?
I don't know. We will show charts weird
Real
sometimes.
estate is way down in the dumps, but why is it down in the dumps? We know that interest rates have gone up dramatically, but we also know we're probably in the eighth and a half, first half of the 9th inning on these interest rate increases. So I think real estate could be a good place to be. Now, everyone has shunned Alexandria Real Estate Equities. It's down about 45% from its high because it's involved in commercial office properties, but it's got its own niche.
Yeah, it got its hype, just like AI.
And science properties,
just
which I think
gains media traction, stocks go crazy, and they'll just run sympathy.
And
just
accountants and lawyers and stuff like that. I also like the fact that they have a venture capital fund, and they actually help finance some of the projects of their tenants. They've got 100 tenants. They focus on some of the best properties there, so-called AAA properties, in some of the key life science destinations like Boston, New York, Washington.
So do you have year-end targets? Do you do anything like that, or get a sense of where you think the S&P 500 is headed? Because, you know, it's almost like 4,200 is a stone's throw, but we have not been there. You know, we've been 3,800 to 4,100 has really been our
back
range,
to BWAP.
right?
So we think it's worthwhile putting money to work.
Breaking down here
right today, and here's why. We are down about 16% of the S&P 500.
Yeah.
Now, why are we down? Because inflation's been such a problem. We know inflation last summer was about 9% year over year. Now it's about 5%
bankruptcy
year over year.
photo?
So the broader direction
What does that even
is
mean,
down.
bankruptcy photo?
Federal Reserve, of course, has kicked us hard.
Yeah.
But we also know they're
AMC pumping
very
on it probably,
near
right?
the end of their hiking cycle. Debt cap. It's very nerve-wracking. But I guess what? A year from now, we won't be remembering it. We will have paid our bills. That is not an option. And so I think, you know, it's always good to buy first-class merchandise when, you know, overall market's down 16%. Finally, valuations are tricky, but if you strip out the top 10 of those global mega caps, you have a very reasonably priced 490 other stocks in that S&P 500.
Yeah, as you're always looking for value, and you say we won't remember it too. You're not wrong. I understand what you're saying. It's sort of tongue-in-cheek because we remember everything. But, you know, a lot of people came in during the pandemic and were new investors, right? They saw GameStop flying. They got excited. They didn't know from what happened in 2008, you know, from 2007 to 2009 was a crazy time. And so, you know, now they got a taste of that last year. So we will see. And, you know, as you said, baby out with the bathwater. Maybe there's some goodies here. Nice to see you, David Dietz, PPAC Private Wealth Management. All right, coming up next, the CEO of EMG Advisors. We'll chat about the broader economy, and we'll dive into a lot more coming up.
Whether
pins, yeah, I kind of like pins actually for a long term. Oh, I didn't like that earnings. I don't think the sell-off is over. You'll probably get a bounce. Overreaction bounce, but I would wait on that. Earnings with a reaction like that, that could last till the next earnings, honestly. Probably wait for the lows down here again. Gap fill maybe. Depends on your time frame, your plan. Trying to trade it, trying to invest in it. Yeah, this is pretty awful. Down 6,500% on operating income this quarter. Wait on that one. Breaking through VWAP here. Maybe. 3 billion? Oh. Yeah, I mean, so you can see where this thing was being priced before his bankruptcy. It made it all the way down to $4 or $5. But I actually think, when we talk about some relocate to, and I think some of the reason that it made it that cheap even was because of Ryan Cohen. Because this, if you look at the levels, like, I don't know, I could be wrong, but this thing wasn't like, it never came down. This was a solid support. It built around 14, and then Ryan Cohen bought in, and it ripped, and then it came down. But I think they intentionally were trying to crush this stock after he was in it. But we saw these levels, 438. So to me, like, fair value is, I don't know. I think $4 is definitely a fair value on it. But that's with the 128 million market cap. So if you basically have that, it's like $1 now. We 4x that market cap. So yeah. But that's just looking at the chart, so it could be $4 now, 4x that, 16 bucks, where that was kind of the range it traded in. That was even a low. This wasn't like that long ago. It wasn't even like, here was this COVID right here. So bye baby. It's gaining popularity. COVID, a lot of people had babies. China, that was part of the hype. China changing its rules on the kids you can have. Like, you might see a lot of babies coming into the world, especially in China. And so, yeah, something's worth as much as someone's willing to pay for it. As far as market cap to share price, I'm not sure. I'd have to do the math. What that was at. I think 3 to 5 billion is definitely fair. Even in this market. We'll see what if we get any bidders, what they're bidding it at. That's not heavy. You guys just angry because it's not Jenny.
So this is a geopolitical issue of our next decade. I think it's the biggest macroeconomic investment opportunity of the decade.
You have to
because
summon
of the China
Jenny.
concentration
She doesn't
risk,
just appear.
because of Chile, Panama, they've all frozen and or nationalized assets in the
Gina's giving
space.
it back here.
You're correct. We do not have enough of these metals, and we have way
just see like a
underappreciated
gap
these
fill and
It's amazing how
more of
the
a
government,
floor being built.
offers subsidies.
These little
and-
pumps are just,
I mean, not just here,
I don't know what
but
they are, but
abroad, to
they're
try
not
and
sustainable.
promote
They haven't been.
purchasing EVs. I guess we're not at the point that we're so saturated that we're running out of these materials. But at some point we would be if we were like,
GNS.
what
How's
countries
GME doing?
over 50%? Sweden, Norway, they have over 50% of their vehicles are
I know.
EVs,
Look kind of
right?
consolidated.
They're way ahead of us,
Buys
as is
coming down
China,
here.
by the way.
Actually
and
did
that's
grab
E
further risk.
some shorts there
is
at
what
BWAP.
happens when these countries start self-consuming and saying we need to satiate our own demands before we start to export to countries like the United States. If you look at a list of the countries that do have these metals, that are processing these metals, and then you correlate that with a list of those with friendly relations with the United States, it ain't pretty.
Right, exactly. We've had so much tension with China. I mean, that would be a perfect example. You said copper. Copper is a commodity that is really undervalued. Where do you think copper's headed? I mean, do you see it doubling or something?
We think copper should, I shouldn't say that on live TV, but I'm very confident that copper will be priced well higher than it is today.
And a big
and
candle.
we made a big bet on that. We have almost 75% of our portfolio in copper futures right now.
Wow.
Yeah.
It's a pretty big candle.
Now, when you say your portfolio, are you saying this Charge ETF or the whole portfolio?
No, in the Charge ETF, we actively manage allocations across those 4 commodities based on pricing. You know, we have over 1,000 data inputs that show us Ford Lightning has a different type of battery than a Tesla Model X. And so that has different chemical compositions with different demands on the underlyings. And we assess all of those things in weighting our portfolios to make sure that investors just get pure, clean exposure to those without any of the execution risk of these startup car companies and startup miners.
So for you, it's in your best interest to know which manufacturers are
No, you got a perfect exit on it.
Are likely to do better, so you
GME.
can position based on the materials
big
that
candle
they may
still.
need the most.
So the Energy Mineral
that was a
Group,
great exit. Wolfing candle the day of the next
$13 billion
one, and
private equity firm that
it's been
invests
selling
in the
off.
supply
Just been
chain
slow.
of these metals, and so we have unique perspective on which of these are coming
That's
online
a much
and
bigger
when, if
candle.
ever.
And
So
accelerating.
we level that into our portfolio as well. It's a very key component.
All right, so you must be fully immersed in the world of EVs. I mean, give me your thoughts on EVs. Are there winners that you like? Are there certain vehicles that are the standout to you? Are there ones that you stay away from because you just don't think they're ready?
You know, we have a bunch of them reporting earnings this week. Sadly,
inventory just come out? No.
You know, they're public earlier than they should be.
Not sure what
And
this
then
drop
full
is from.
circle
This
to
is
our comment around
this
the
is
banking,
big though.
they're not going to have access to debt like they used to with some of this consolidation. So I think we're going to have some really hard years ahead of us for some of these startup car companies. And by the way, they don't necessarily have competitive edge if you were to look at what their IP is. It's just badges on fancy cars. It's not like their battery technology is better. It's not like they go faster or charge, longer. They're all using the same core battery technology, and so that leads me to believe that the winners are going to more so be the Fords and the GMs and the Teslas. I'd put Tesla in that. You and I discussed that last time I was on. I think Tesla is going to be a great company over the next decade. I don't care about the next 10 days. I care about the next 10 years. And if I can zoom out and look at Tesla in that way, I'm quite confident that they'll do really well. Some of these startups, Lucid, Rivian, they make cool-looking cars, but do they have staying power?
Burned
I
yesterday
wouldn't
and it's got
necessarily
me
bet the farm on that. And a lot of the ETFs that retail investors
nice
use
gain
to play
here,
this
and then
are just baskets of these startups, and I think that's more risky than they understand.
I see. So you like names like General Motors and Ford and Tesla that have a bigger footprint and a bigger backing.
Yeah.
And a bigger timeline and ability to sort of
power.
get through it. So they have the staying power. And they've showed us so far that they have that.
Hopefully
Tesla's down.
fell.
It's one of the big losers in the major averages.
Yeah,
down
I might
20% over
hold.
the last month. But
just hold it. I get some overnight exposure.
Well, look what just happened with the consolidation of the
entry.
banking world. Flight to quality,
set up
flight to the big players
candle
that
like
have
that.
staying power. I think
Inverted
that
hammer on the daily.
perfect. They have staying power.
Nice,
Tesla's
nice
got
topping.
staying power. They're looking at this in a 10-year view. Ford's looking at this in a 10-year view.
I think a 416 short
Rivian
entry.
and
That's
Lucid
not
are
bad.
trying to stay alive for the next 10
basically
months.
the high from
Even
over
though
here.
people love that pickup truck from Rivian.
Yeah, it's cute, but I mean,
Probably close before Powell though, because
I don't know if you want to put your money there, right? I see what you're saying. William McDonough,
Don't hold through announcements.
EMG Advisors. Thanks for being here with us in person. Appreciate it. All right, still ahead in the second half of our show.
Trust hasn't been broken into.
Trends to put
Well, now
on
it will.
the radar. So our panel will preview also MGM. Okay, we're going to look at some of these casinos. As we head to break, take a look at winners and losers in the S&P 500.
Nuclear bomber fleet from the 50s and 60s. Happens over here too, Ace. Zero day on the move would have been dope. Yeah, that would have been fun to have options exposure instead of futures. I'm trading the SPY. I feel like I might as well just have futures, not wasting day trades. So that makes. Okay, I trust you. Oh, back over around. Yep, Detroit's pretty bad for that for sure. That Bath Baby even got some push from that. Maybe it wasn't from that, but we come down here. Feels stupid not to take profits. Yeah. I mean, this is looking like a good longer term short play though. That hourly's engulfing. Got another inverted hammer on the hourly, as well as this daily might be setting up. We're of course at the high. I'm good, I'm gonna chill. That's right, yeah, cats have been stolen a lot more. That's become a problem again. Theft in general. Zukov, here you go. No, there's no bad news. No bad news. Oh, Top is a meme stock, guys. We should have bought it, I didn't even realize. What were we thinking? This Top is a meme stock. I only buy meme stocks. Why would I buy Top?
For the most part, considering the headwinds that the market woke up to this morning and some of the uncertainty regarding regional banks, which continues, well, you know, I think down on the day by
predicting. Stop it with those
not
predictions.
even a 1/10% here right now is still a win. If we take out today's lows and see some energy, maybe a different story, but still hanging out near the highs from Friday, basically.
Stores.
Yeah, we're now negative on the day again, but this is where we started off the cast session here this morning.
I like how you use an emoji for bombs.
Earlier today, the manufacturing numbers, which showed employment continues to remain very
Let's
strong.
get nuts.
Prices, we're seeing some pressures there ultimately, and Nicole, I think, again, with the regional banks, the week ahead in terms of earnings and eco data, this is a reflection of investors trying to come to grips, again, with potential
little bear flag set up maybe here on the 5 minute.
There's a handful of them this week.
Break this level at 414.80.
Every day I say 101, Ben.
That could still be a big day.
Really,
20 minutes
I'd like
to
it to go to 102
power
or
hour.
100, just so I can change what I say. I mean,
Just
I say
trying
that sort of tongue in
hype
cheek. We
myself
had a very
up for a
strong
big sell-off.
dollar. Obviously, people didn't necessarily love that strong of a dollar. Tell me what you're watching at 101 and change.
Well, there's no guarantees, obviously, in this business, Nicole, but I would think with the week that we're going to see here, not only in terms of, as I mentioned, for indices traders, but also for financial markets, that we're going to move away from this 101 handle at some point.
They want to move back to
I would imagine. We've got a lot going on. Everything from the Fed to the jobs report on Friday, ECB, Bank of England next week. This all is dust settles from the BOJ last week. The dollar hanging out around, as you put it, in the 101 handle, still just below 102 last week's high, up to 102.4. And for the most part, there you can see it. I mean, a trend lower off the highs that we saw last fall, but hanging in there after posting new lows for the year last week or the week before, kind of limited in terms of follow through. But you know, I'm keeping a close eye on the dollar in relationship to rates, right? Because rates have been kind of in this range, and
short on oil
a
up
mirror
here.
image of what we're seeing here in terms of the run up, how they've held. Actually, they've basically the 10-year up around 3.5%. We've got the 2-year up around 4% here, but you know, the dollar's weakened, and I look for some of the other, you know, contributing factors to that. One being the euro currency would strengthen. We've seen the British pound firm up. I mentioned to keep an eye on them this week as well. But again, in addition to that, we've got a situation where the dollar should be watched, the impact it has on commodities. You know, if we were to see some movement here to the upside, ultimately, you know, that tends to weigh on gold, for example. But definitely with the central bank activity this week, Nicole, lots to keep an eye on in terms of treasuries, in terms of, as I mentioned before,
maybe get some
and
more
obviously currencies as well.
Yeah, and the 2-year back above that 4% line, also key, as you mentioned.
What's it doing?
Ben, glad you were here for an important moment in this trading day in Liechtenstein. Thank you.
Chart looks pretty bullish. Bull flag in here today.
Joining me right now on set, a special guest, Tom
Tried to break out,
with
failed.
us, CEO of Ballast
But it's finding buying
Group.
support just
Thank you for
right
being
back here on the 50.
Nicole, for having me.
Not even
So tell
GWAP,
us a
so
little bit about the company.
looking strong.
Absolutely. We are an asset
Hard to
manager
buy into a stock that's
and
already
an
up 85%
independent
though.
advisor. And on the asset
Good time to
management
sell it
side,
right
we
away.
specialize in multifamily housing in the southeast of the US.
All right, so what you're doing is you really have a lot of focus on real estate, right? You have private clients, wealthy clients, and you're making sure they keep their principal and make some money at the same time. You also launched an independent registered investment advisor last year. Why was that important?
That was important because we have historically funded ourselves with individual clients, and many of those clients have asked us for advice over the years that goes beyond our remit, specifically of private asset management. So we moved over to provide financial planning, tax planning, estate planning, the whole suite of strategies and advisory services necessary for many moderate to high net worth individual clients.
So what are you finding people are worried about at this point? I mean, they sort of, you know, they got a nice pop after the pandemic. They started to feel great, and then, you know, got walloped in 2022. What do you tell them now for 2023, which has shown a lot of volatility and some uncertainty, and even the word recession, right?
Absolutely. We certainly hear it more than
surprised these stocks haven't had share offerings yet.
Well, I think there's been a big shift on the advisory side from the traditional 60-40 model, which struggled a lot during 2022, was negative on both fronts and negative overall, to a more diversified model that includes a lot of private asset investments. That includes things like private real estate, venture capital, private equity, and private credit. And so we're shifting more away from that 60-40 model among advisors.
I mean, it's
towards
only
more of a 50-30-20 model with a significant allocation going towards alternative assets. When we talk about alternative assets, though, we're really talking about those four things.
Understood. Yeah, no, I got it. And so, I mean, you make a great point, because the truth of the matter was it was a triple bear market, right? Nothing did well. We saw cash.
I'm sure they
bonds,
have protection
stocks,
in the terms and conditions.
I mean, now it's different. You know, a lot of people are
say
looking
still
to
couldn't
fixed
sue.
income. And to your point, you're looking at real
Robinhood.
estate, venture capital, private equity, also private credit. At this point, what do you think
15
about
minutes,
what's
CNS
going on in
close.
real estate? You mentioned multifamily, and multifamily is one area that has really shown strength. Unlike, for example, office REITs, right?
Yes, absolutely. But even in multifamily, there is the potential in certain markets for cracks in the wall, and it all has to do with refinancing. Any industry where there's been short-term floating rate financing with an expectation of rolling into fixed rate financing, and there's a huge amount of that is going to be maturing in the next 24 months, there is highly likely to be distress in those markets and potential for opportunity.
Well, that's the whole thing, because I know you're launching another real estate fund, and I think that's very exciting, and I want to hear more about that. But are you nervous because lending has, you know, begun to tighten, right? We have credit tightening, particularly for real estate investing, and even all those loans that are out there that they have to go and refinance. They have to do those at a higher rate.
GNS getting flushed.
But as you said, there may be some opportunity.
They're taking a short up here.
Tell me
GNS
about
smart.
your real estate funds funds, I say, because you're launching
I'd be scared to hold a short overnight.
Right. Well, it is absolutely about opportunity. We believe the coming 12 months is going to be a unique window over the last 10 years in which there are real cracks in the wall, in which there are buyers that bought over the last few years floating financing that are now going to be forced to de-lever, to reduce the leverage in their acquisitions. That needs more equity, that needs fresh equity, that needs new investors and new operators.
Right.
And that's where we're able to step in and be opportunistic.
And these funds that you have, are we looking also, this would be venture capitalists, this is an alternative type fund. I mean, these are not funds filled with publicly traded companies, right?
Correct. None of our asset management funds have any publicly traded companies in them. Right. They're all private market funds, and because of that private nature of those funds, we're able to have a different level of access to information. Obviously, publicly traded, there's a lot of restrictions around information. It's just not the case in private markets in the same way.
As you go back to the
I might not get the bounce
the
you
wealth management side,
very curious
what are some of the biggest hurdles at this point? I mean, obviously you have to have diversification and long-term view, but it depends on the time horizon too for some of these folks, right?
It does, and Nicola, it depends also a lot on liquidity. So our advisors have to spend a lot of time understanding the nature of their clients' risk appetite, but also their liquidity situation. What are the things that are coming up? And then make sure that our investors are being adequately paid for the risks that they take.
Right, understood. It's great to see you. Tom Carroll, CEO of Vallis Rock Group. Thank you for being here.
Thank you, Nicole.
Still ahead, we'll bring in our panel to talk all about the casino and gaming space. MGM earnings are due out after the close.
Sweden's largest pension fund, Altecta, has lost $728 million on its First Republic position. Yikes. BBBY. Getting back down to the lows of the day. Got to TikTok, developing AI-generated video disclosures. Fed will hike interest rates Wednesday before pause, Malik says. FDIC signals support for narrow changes to deposit insurance. As targeted changes to deposit insurance could stem run risk in the banking system. Lawmakers could significantly increase deposit insurance for business accounts. All right, there's a little bounce, maybe coming on SPY. Yeah, I thought I saw that news. So yeah, Meta is planning to raise $7 billion in a second bond offering. Did we see a no reaction? This is an oxymoron statement. All depositors at First Republic Bank are protected. Taxpayers are not on the hook. Hi, bear flagging, man. Hope for a big move. As much hope as there was yesterday, I guess. I still would like to see. I haven't seen anything confirming Oh yeah, I don't know if you guys heard, but they pulled their S1. I don't know if we talked about that on Friday. I think they did after hours. So people that were estimating that the float was like close to 1 billion shares, I don't think it is. I think it's actually what we're seeing here, or maybe even lower potentially. Because the offerings that they've not had any filings saying they've completed any of them, I don't think. So potentially I think the float could even be smaller than this. The market cap could be even less than 47 million. There's a write-up on it actually. Someone's saying the real outstanding share count is this. Well, they say 428 million. HBC deal added only 323,000 shares to dilution, while the remainder of that dilution was later added via the BRS ATM shares being sold. Short sellers now have a lot less shares available to cover their likely hundreds of millions of open short positions anticipated earlier.
I'm glad y'all set it off. You bears used to be hard, now.
Big move down? Oh, on BBY. Would it be too obvious at all if it happened the day before? OTC.
Point, Chad, we're going to be hearing from Caesars as well. They're also reporting, as we said. So
33,000 shares would be $990. That's crazy.
Buy into MGM and Caesars ahead of the report.
You're talking about a move to 3 cents, dude?
Some good ratings here.
Yeah, maybe an OTC. I don't think that's going to happen on NASDAQ. Not tomorrow.
I buy into the print. I do think the size of the beat is very important here. We get a lot of public information in the casino space. All the read-throughs have been more positive than expected. We're looking for mid to high single-digit beats in Las Vegas in the first quarter for Caesars and MGM. So not a huge surprise versus what's out there in the public numbers. It'll be a huge surprise versus published consensus estimates. I do think that's enough to drive the stocks higher. And then the other thing, you got DraftKings almost a double year to date. MGM and Caesars do have a digital plan here, right? They have digital exposure. They haven't really received that same benefit in terms of kind of a high growth software segment re-rate. I think we'll learn more in terms of MGM and Caesars revenues and also profitability expectations for 23. And that could be kind of the second leg of the story in addition to Vegas and Macau, right? You're starting to get some of this high growth, higher valuation ascription to the story to move higher.
I mean, I think, obviously that we've seen a lot of positive comments pertaining to the Vegas Strip. I see in your report you even talked about slot machines on the rise and those gaining, right, year over year. When you think about Vegas, Macau, and what these companies present, and it's not just the casino, it's the whole experience, and we're seeing people spending more. Kevin?
Yeah, I completely agree with you there, especially when it comes to online gaming. I think it's an area of the marketplace that has not been perfected yet. There's definitely a lot of enthusiasm around it. And I think once these states continue to expand the operations or have the ability to have operations in these states, it'll provide greater growth opportunities for these names. But you're kind of right there. I mean, if you look at some of these other names, they're still drawing a loss for these online gaming operations. I think that's a little bit of a concern. But MGM, they're actually starting to close that gap here a little bit. overall, I would say from a slot machine standpoint, and so from some of the other games that are out there, I think the entertainment side of the business is going to be the key driver there, Nicole. What entertainment can you bring to these resorts and have individuals be able to bet, and then also spend on food and beverage? I mean, that's another key area of revenue for a lot of these resort names, MGM, Caesars, things of that nature. I think kind of goes
14,000 share to 7.
Right now, they've seen inflationary headwinds. And
you know how big of a move 7 cents is from here? It's huge.
Here for this year and the coming quarters here.
Like percentage-wise,
as you talk about online,
this
I
make
just
Majo
peeked at
10 cents to
DraftKings,
7.
which is hitting
Look
a
at this.
new high
How
today.
far that down this
Thank you
one
both
is on the
so
chart.
much. Chad Bainan of Macquarie,
Right
Kevin
here, it's
Green,
30%.
Senior Markets Correspondent here on the TD Ameritrade Network. Thank you.
I think you'll see a move like that maybe after
That's
OTC,
do it for us
but
here on the watch list.
not
I'm
tomorrow.
Nicole Petalides. Thanks for being with me.
I
Keep
sure
it right
hope not.
here. Oliver
There's a
Rennick,
new low
Market on
there,
Close.
by the way.
Next.
Oh boy. BBY gonna flush during Power Hour? I'm moving up a little bit. URGN. For sale following takeover offer. Up 14%. Had another wick down to 1001, the low from yesterday. The Fed and global counterparts will revert to fewer auctions for US dollar funding after financial market tensions in the wake of US bank failures subsided. Fed set to raise interest rates to 16-year high and debate a pause. Microsoft teams up with GoDaddy to enable payments over virtual meetings. Manhattan's office vacancy rate is at a record high. American Airlines pilots vote to authorize a strike. Uh-oh. Penn Center save Bobby. They got a push up there. It'll push from 10:01. Big Don IY. Guess I could have flipped to the long side. I don't think to do that often enough. MEGL just had a huge pump, so probably going to come back down from that. In fact, it's actually holding up, like these other Chinese stocks, better than I would have imagined. Meaning they might have another rally this week. Nano is ripping, breaking out, NNOX back to the high of the day. It's all GDC? GDC. Good one. No, you shouldn't sell it. Hold it. HODL gang, dog. Got that HODL gang. Exactly. Figuring it out, dude. Got the bounce on SPY? Is that it? The options on Fubo, like, oh, that's not bad. That's a pretty tight spread. Maybe selling some puts. 57% IV. TK had a pretty big move earlier. It's up 12.5%. Bounced off this support, 52-cent support. Classic support bounce. TXG. Yeah, pretty good, pretty good. Mr. Style, 42%, breaking out. Buy's coming down here. Quite the daily chart. What's going on here? Broken. This China. Bear flag in here. Probably do the same he did today. Little liquidity pump and then settle down at 10 cents or something. Some guy said it's close. Alright, thanks to Sick. Yeah, I'll definitely let that help me sleep good tonight. Give me sweet, sweet dreams.
Doing quite well throughout this. Look at the healthcare group as a reliable sector throughout the inflation of last year.
Is it still not on the delisting stick?
Group for investors if the tech power up stops. All that is to be determined. It's going to be a fun 5 days. We're going to start off here by talking about at least something that we can all agree on. It's that everybody wants to travel and revenge travel, perhaps. Norwegian's up 8%, and some of that reopen trade is actually working right now. So
that was me, don't worry.
That kind of makes sense. I got Renita Young and Kevin Hanks here with me. The Norwegian move is pretty big.
The list you're talking about?
Let's start there. Start this analysis on a positive tone because we also see some of the other reopen travel trades lifting today as well.
Companies?
Absolutely. So Norwegian is really bringing along a lot of its peers for the ride today. That's an 8% rise, just like you said, and it's on those better than expected results from the first quarter. Now, the company was able to narrow losses for this quarter and also saw a huge hike in revenue year over year, some more than 240%. Actually, it was about a 249% revenue increase year over year.
We don't belong anywhere.
the company was also
IDEX
able to
is
see
going
that
for it.
customers spent way more money. Now, while customers did start spending more money to book trips, they actually started booking trips farther in advance.
Dude, these
as
guys
well
are
as spent
coughing.
more money while they're on board, because gross onboard revenue per passenger was
All three
nearly
times
30% higher than it was in 2019. Now we can say that at least by that measure, the company has outpaced its pre-pandemic level.
Oh,
Now,
yeah, I see
executives
MO
say that
MOCM
they're
on
also
here.
starting to get their hands around the
COM.
expenses that surged last year. We know we saw expenses for fuel surge last year. Just one of them, labor, also surged, and the company says it's trying to get its hand around it better. And that will be interesting to find out how much the company has gotten its debt under control as well. As we know, a lot of these companies had to get bailed out during the pandemic in some way or another. And they're finding their way to
Mullins
chip
on
away at
here.
the debt that they had accumulated, right? And so looking ahead in this current quarter, the company is expecting to swing to a profit. They're expecting to see adjusted earnings for the second quarter to be about 25 cents. And then for the year,
Are
approximately
these maybe
75 cents.
delisting
So
notifications
everything
based
is
on
really
share
looking
price and
up
not
for this company
just
now,
because they're in Chapter
with
11
the
already?
exception of its debt load, which all of these things point to it maybe being able to chip away at it better.
First step to getting through that is more people on the ships,
Right.
And actually
Does Bed Bath
having
& Beyond have
activity,
some
'cause not
parent
only do they
company
take
that's
on debt,
actually
but their business now
under?
is also higher cost. It's a little bit lower margin. Some of the measures that they have to take now for healthcare reasons, et cetera. But
Doesn't
the
look
fact
like
that we're finally getting a nice rally here, these companies always seem to let us down, even though we look around and we see all the travel happening. The airlines have been a bit of a
It doesn't
mess
even
to
show that
invest
it's been
in as well.
given notice.
Cruise lines too. The one seemingly clear winner
we
of the
saw it.
reopened trade are the casino stocks, gambling companies. MGM's not even waiting around
Not on
for earnings
issues
this afternoon.
pending suspension or
It's up
delisting.
2.5%. It's at a new
Didn't we
year
see the
high.
filing
And
for
it's
them
usually
getting the delisting
muted
warning
at around this
or
time, right
notice?
before earnings. Many of these companies are just very muted, but today you see that jump happening, possibly because of this reopening trade. It's spilling over into it, the excitement, but also because this company is also expected to do pretty well. Analysts are projecting adjusted earnings
BBY bouncing off of that
4 cents
a little
on
bit.
revenue of $3.5 billion. And here's what they'll be closely watching. First of all, activity in its Asia properties. So we know China opened back up. Macau and Singapore saw strong numbers when it
Okay,
came
we can look
to
at some
one of their
delisted stocks. This will be
competitors,
good.
Las Vegas Sands. Now,
All right,
Las
once
Vegas
this
Sands saw
segment's
a
over.
surge in gambling revenue, so we can look to see if
Just to compare to see what's
MGM
gonna
will
happen.
see the same. Now, keep in mind that MGM had seen about a 47% decline in its Chinese
I might make
business
this
revenue
the video
in
today
the
too.
fourth quarter. So we're going to
Just
keep
about
an eye on that to find out
delisting stocks.
if it'll get that and more back. But really, all conditions are pointing to a possible increase, something better, right? Investors are also watching for any news on any buybacks or dividend announcements, because in February, MGM suspended its quarterly dividend and instead opted to authorize a $20 billion or a $2 billion stock buyback program, still managing to give some of the value back to its shareholders, but in a different way.
Yeah, and in a less regular and reliable way to some extent.
Thanks, guys, for your likes. Appreciate it.
Maybe if things are,
We're at
firing off on all
37
cylinders
likes.
again, Vegas to China,
Wait,
maybe they
Ace,
can
did
get that
you
dividend back.
gift
But
5 members?
time will tell. This afternoon will give us a nice glance into these companies, though. All right, nice setup here on what's working. Let's talk about where there's a few hang-ups here today, Kevin Hinks. It seems like this market
Just 5 new members.
saw this morning's ISM print,
thanks, guys.
and that definitely left a mark. We got bonds selling off, we got the dollar up, and it's a pretty sizable day for the dollar given how weak generally it's been throughout this year.
Yeah, I think when you look at what has happened to interest rates, what has happened to the U.S. dollar today,
I don't see it on my notifications,
it's gonna be a tough
but
day for stocks to rally off those numbers. That's a pretty big move in
The
yields.
stream,
And how did it happen?
that's 5 new members, but
some of the economic data that we're seeing
think so.
isn't showing the
weird.
slowdown that Jerome Powell and the Federal Reserve would
Bottom
like
is
to
10
see,
cents.
especially
Pretty close.
going into a meeting where
Or maybe
the
right
market
on.
is making
Yeah.
assumptions that he's going to be one
Bottom
more and done.
on
And
NASDAQ.
the data just
Maybe.
isn't showing the progress that Jerome Powell needs. And I think that is what's driving yield, at least yields higher. And then if you take the dollar, it's, well, if Jerome Powell has to remain hawkish and continue to be hawkish, that favors the U.S. dollar to rally. So remember, the dollar has been drifting lower on the assumption that Europe, UK is going to have to be more hawkish than the United States. Well, if that flips and Jerome Powell has to remain hawkish on the U.S. Economy, then the dollar is going to firm up.
10 cents
and
above
that's what
Nasdaq.
you're seeing today with the dollar. That's what
Looks
you're
like it
seeing
might be.
today in yields. The rest of the market, you've got 4 indices, Oliver. Only the Russell is up more than 0.1%, and it just moved in the last few
We
minutes.
don't delist
You've got
on Wednesday.
Sectors
Then we'll see. Maybe
of
we'll
the
have a new
S&P
low.
500 up and 5 down. Very little.
Or
Only 2
people
of
move
those
that decimal
sectors
place
are,
over.
are down more than
Have
1%.
a high.
This is a day where you're waiting for
Dollar-
more
dollar
information,
high.
Oliver. But you're right. I mean, yields and the dollar, they've made a move already. They've already started their move. And this might be a little bit of thin markets ahead of a Fed meeting, ahead of a bunch of data later in the week. But that's a big move in yields, Oliver. I mean, if you're looking for lower yields and higher stocks, you did not get the price action you were looking for here today.
Okay. Well said. All right. Appreciate it, guys. 2 sides of the coin here.
Yep.
As markets are divided, the S&P 500 is still slightly positive on the day, and the declines on the indexes are not large, but there is some notable selling in some of these big tech companies as a result. As you might expect, yields up, one sector here struggling. Appreciate Renita Young and Kevin Hanks. Let's bring in Stephen Moore, senior economist of Freedom Works. And Stephen, welcome back to the show. We got a very busy week. As you know, we generally try not to get too bogged down in politics here, but there is something in D.C. also lingering besides the Fed. It's the debt ceiling. We're not actually going to bump our heads on this, are we?
Oh, I would say the odds are very low. I think in the end of the day, Joe Biden is going to negotiate with the Republicans. Now, of course, he's been saying that he's not going to negotiate, but even this weekend, the big thing that happened was now you've got division among the Democrats, many Democrats saying, hey, we got to negotiate this. So I think in the end of the day, there will be a settlement and there will be no default. By the way, the chances of a default on a national debt, maybe I put it but 0.01%.
Let's hope so. We don't need any further complications right now. In your mind, is there anything in particular hanging up this particular passage right now of this one? I mean, we do always kind of do this. We like asymptote closer and closer to the ceiling than a deal gets done. But you know, is there something that we should be looking for as to the indicator of, you know, when it does happen?
Well, look, the Republicans have passed a debt ceiling increase with some substantial spending cuts, which I happen to think is extraordinarily important. I think the greater, you know, we always talk about the debt ceiling and the debt default. The much, much, much bigger risk to the economy is that we continue to run these $2 trillion annual deficits. You know, the Congressional Budget Office just reported about a week ago that in the first half of this year, you know, the first half of the fiscal year ended on March 31st, the national debt was up by another $1.1 trillion. That doesn't sound like we're making a lot of progress here. And so the Republicans say, look, we got to have some spending discipline, some other measures to bring the spending down. Democrats say they don't want to negotiate, but as I said before, I think the odds are very high. At the end of the day, Democrats will sit down with the Republicans, Kevin McCarthy and Joe Biden, and I think they'll reach a deal. What that deal looks like, I don't know.
Is there any connection, you think, between what's happening on the debt ceiling front, Jay Powell's decision at the central bank on whether or not to hike rates, and then seemingly this financial sector fallout that, at least in some degree, was hastened or exacerbated by the Fed's behavior? Is there a thread that connects these things?
I don't think they're really connected. I will say this, having lived in this town and been a fiscal policy expert.
Let's look at some examples of delisted stocks and see what happened. So let's see, what should I take over here? We'll probably do our BBY. It'll bounce at 10 cents if nothing. I'm hoping. Pure BB. This is the most recently delisted one. Does this have a gap up? Wait, this is delisted. This isn't. OTC just delisted. happened here actually? No-Fi's rebuild and acquisition of GRVB got bought out and taken private, maybe. Okay. Or changes. We can look at acquisitions too and see how that affects stocks. SPY's come down here a little bit. I'm scared to take a short though. It just looks kind of choppy. I don't want to go long into that power hour last 10-minute rally. Good NESR. One says it was delisted on April 27th. I don't know. What? Oh, it's relisted. Yay. I'm not understanding how they're using the term delisted. CSS. I guess I'll just look for the with Qs, right? I'm assuming BY, if it got delisted on Wednesday, it's going to have a Q and it's going to be trading OTC. Is that not correct? Is there an alternative? So this is pair Q. This was delisted on April 18th. Oh, right here. Right here. Oh, right here. So not a big gap down on this one. As you see, it can kind of continue to sell off. Huge sell-offs into it. But to the actual delisting the next day, wasn't all that massive. 13%. So yeah, not very big, but from where it delisted to now is 80%. Look at KAL. Wait, KL. WQ? This one delisted on the 14th of April. Right here. On the day, 80% move. Okay. Virgin Orbit finally went to the Qs. Okay, Virgin Orbit is on OTC on April 12th. Yeah, not all of these have 80% day of. Some of them it takes a week. All of them so far we've seen a gap down. This one didn't actually have a gap down. It says April 12th. This one just traded more or less flat. Down a bit, but I don't know what this gap is from. Date. Oh, there's one that didn't drop. PLXPQ. OTC starts on Wednesday, pre-market, so Tuesday after hours is the last time on NASDAQ. April 12th, so this is this one. This had a move from The 50% move of the day. And now a couple weeks later, it's down 92%. Like, yeah, I mean, this is different. This is a pharma company. The day before, though, look how big red candles almost all of them have. That makes more sketching to hold until tomorrow. I wonder if we won't hold this into the delisting. CDAKQ. I think we can guess April 4th. No, it wasn't there. It's here. So I guess some technical analysis does come into play, because these were all selling off into it and then just kind of continued. BBY, it broke the low on Friday, which is bearish for sure. Now we have 10 cents for support. This one sold off 20%. I guess from the low to the high, overall it was 50%. Where it is now, 90%. I'm trying to give the benefit of the doubt on all, or not benefit of the doubt, but yeah, basically to where you could close it if you wanted to wait. Best case scenario. And of course, box D we looked at. SIVPQ. The bank, yeah. So this was on March 28th. It wasn't here. Yeah, it was here, never mind. That was a pretty big move. 95%. 89 to 95%. Now it's at 93, so I'm traded flat after. So I would expect at least some gap down. Some of these, the day before is super red, which is scaring me for tomorrow. 26% from the low to the high, and 98%. Oh wait, I'll see. Might get a liquidity pump tomorrow. Pattern might keep playing out, but I've seen a lot of big red candles on the day of. Yeah, a lot of them drop in anticipation coming up to it, and then I think 95% of what we just saw dropped the day it started trading on OTC. Probably on average like 50%. And then just the first day, and then 2 weeks later it was like 85% on average. So no stocks that we looked at squeezed coming into OTC, or once it was on OTC, at least not for the first couple weeks. SPY calls? I don't know. Yeah, and this daily candle looks quite bearish to me. I think I'm gonna try and get some short positions overnight. MACD never flipped bullish either. We're out of resistance. We've got an inverted hammer. Got an inverted hammer even on the hourly, and that engulfing candle. I think the market's gonna be kind of choppy until Wednesday, anyways. But you know, the range I think we have until 410 at least for support. So quite a ways down from here. Kind of find a range before this direction's decided. Dang. I should have looked at that chart before I got more shares. Because the day before even looks like a big sell-off usually. I guess I'm just kind of wanting exposure for after hours if there's news. I think I need to open a short here. This is definitely looking like a bear flag. Yeah, MEGL, some profit taken.
There is
this
a
guy.
financial risk in
Like the
their
monopoly man.
assets. They didn't do it. So as I say, there is so many ramifications that come out of this thing. It is amazing. The bottom line is, it's going to cause the banking system to contract a little bit. It's going to cause the economy to be weakened a little bit, and I think that is not at all good.
Dick, to the point of the
You could miss your style though, because we usually get that end of day pump on SPY, so
regulators maybe
could
should
close
be
them
keeping a
today
better
or 15
eye
minutes
on,
after hours.
Assets, to your point. On the liability side, where does this panic or crisis or problem differ in the sense that the unrealized losses and I guess arguably liabilities are contributing to some of the fears around these banks? Does that change the way we should be concerned about how it spreads?
Well, I think it's already spread. In other words, this is not something. I mean, we just had, more than $500 billion in banking assets go under. The banking system went under for $500 billion, close to $600 billion in assets, and it happened in a 2 month.
This is what I was saying. People are saying, "Oh, when will we know if
concerning? That is
it going to become systemic?"
But the fact is that the
we had three out of the 4 biggest banks fail. What do you mean?
As long as interest rates continue to rise. On the liability side, the issue is, where can you find money to fund the economy? Where can you find money to fund your balance sheet? And if, JP Morgan sends out the message, you, Mr. Investor, Mrs. Investor, if you intend to lend money to a bank by buying their debt securities, don't do it, because they're not going to be protected. If you intend to invest in the preferred stock of these smaller banks, don't do it, because they're not going to be protected. So that gives JP Morgan a tremendous, Bank of America and Wells Fargo, a tremendous advantage in the marketplace vis-a-vis small banks. But on the liability side, you're correct in focusing on that. Banks have got to take in more money. And they can only take in more money if they can pay higher interest rates for that money, or interest rates which are competitive with a money market fund, or with treasury bills, or with the borrowings of the United States Federal Reserve. And they can't do it. They can't do it because their assets are locked in to in many cases to fixed income securities, and they can't raise the they cannot raise the yield on a fixed income security. They can't raise the yield on a 30-year fixed rate mortgage. They can't raise the yield on a 5-year fixed rate auto loan, or on a student loan. So if they can't raise the yields on the stuff that they own, they can't pay more for deposits. If they can't pay more for deposits, they can't lend more in the economy. If they can't go out and borrow money because, as JP Morgan clearly said, we ain't going to cover you if you borrow this money, then it's going to be difficult for them to get funds. So what the regulators have got to figure out is, how are we going to get the liability side of these banks into a position where they can be competitive with, the market rates which are out there for all other investors.
Dick, the companies that are appealing to you right now, I know last time you mentioned Wells Fargo should be a company that could benefit from this. Is it strictly just a size game at this point, or are there smaller banks that look good to you? We've got about 45 seconds. Curious which stocks you like.
Yeah, well, I just upgraded JP Morgan to a buy because I like them very much as a result of this. I think, the bigger banks look more attractive, but what I'm more interested in now is, people have made a fortune shorting bank stocks, right? They made a fortune driving banks out of business, so why not look for more? I think these investors are going to say, why not look for more things to sell than worrying about things that you want to buy? And the way you look is, how much do they have in fixed rate mortgages? How much do they have in commercial real estate? How much have they overstated the value of their assets? And when you find one of those, you short it.
All right. Thank you, Dick, for the catch up. Appreciate it.
Thank you.
Dick Beauvais, financial strategist at Odeon Capital Group. Tom's got some trades when we come back. We're going to continue that discussion about reopened strength with a bunch of call buyers in Uber ahead of their report. We'll look at some of the response to Snap's crash from last week and revisit the chips with Marvell. Be right back.
Okay, looks like SPY might want to rally. Closed BBY. Paid off on some Chinese stocks. Nice, well done. Ones with covering the short position. Was it automatically expired? It's not like there's a timeline on shorts, anyways. Short shares, there's no time frame. But yeah, the lack of liquidity in OTC, it's basically one way they kill stocks. They just seller box them, turn them into zombie stocks, and let them sit on OTC, and they have this huge unrealized profit that they can, or huge or small, whatever it is, they can use for collateral and margin. So theoretically, they never have to close. But that's always on their balance sheet then. So 150% on GDC, nice. Dude, how did you know? Oh, halted down. We took profits. Oh, pre-market pumper. How you knew? 300% pre-market. Why couldn't it do 1,000% during the day? Jeez, that's more than 1,000, isn't it? I would like to have an explanation for why they would buy BBBY. Doesn't seem bullish for GME. Fine. Therapeutic company. Careful with these. Reverse split. Got a rally into it. A couple weeks later, split. A couple months later, rally. Is what I was looking for. Something similar with BBY. I might add to my shorts. I'm scared though. You come in that last 10 minutes and this thing could just rip. BBY never did the reverse split. Worth tons of money. Yeah, it's worth its market cap from like a couple months ago. That was the tons of money he's talking about. 3-4 billion. That was Bye Bye Baby, and but yeah, there's value. I mean, it's underpriced. It's priced for bankruptcy. Being delisted tomorrow, day after tomorrow. There's value. There should be bidders. We should hear about them. People that want it. 47 million market cap. A company that does like $1.5 billion quarter in revenue. Call it $5 billion a year. Have to fix things around, and that's a ton of money. And right now, where the bonds are at, they're paying off the debt at like crazy good rates, like 4-to-1 or 5-to-1 or something. What is it? 800 million worth of the debt has been paid off. High's coming down. Do we need more shorts? A little flushy here. Minimum price before end of day tomorrow? Like the lowest price? Maybe this 10 cents. 6 cents. It's a huge drop from here. That's almost 50% drop. Perhaps. I don't know. Yeah, I mean, we just looked at all those ones going OTC. They did drop the day before, a lot of them, so maybe. Not all of them, though. And it does look like TA kind of still plays a factor. Well, before we hit 6 cents, I'd like another liquidity pump, please. This stock's so manipulated, though. Like, individual investors, young or old, not moving the stock. It's completely controlled.
If they will start to push their weight around a little bit.
Yeah, I think I'm gonna close my shorts here and go long. Double bottom.
Market share away from Lyft at this point that company's had as they try to reorganize, cut a bunch of jobs. They expect job growth to be flat over the year. So pretty lean operation at Uber. But if you just look at the scale and the size of the daily active riders and the number of trips booked through the past quarter, is that going to ramp up? You've got all the airlines, the cruise lines up. People are out there going out to dinner. They're traveling. Airport pickups are a big revenue generator for this company also. But yeah, everybody, it seems like, is tilting to the upside in here, including on that 39 strike call out in the May options. Now, it's an earnings play, but you still have 2.5 weeks until expiration for this trader. But yeah, somebody's
off
expecting
exchanges,
a big blowout quarter
super
where maybe
high.
this stock gets back
Higher than it ever was, I think.
Okay.
This
How
last
about,
I looked at it.
the move in Snap? Let's go to the other end after a big crash, but still, you found call buyers, put sellers. What do you got?
Yeah,
GDC
broadly negative report that we had out of Snap last week fell pretty significantly, and it's down.
Maybe
still
it'll do something
down about
after hours.
69% from
fine,
year
breaking
ago
through that
levels.
level. Should have added the
but
shorts.
I think somebody in this name taking a shot too, because we saw some unusual option activity out in the June cycle. So to give themselves a month and a half, you can see this chart over here. It just seems to get worse and worse. The company. Last Q1 report was negative, mixture of disappointing revenue trends in North America, pressure on gross margins. They're trying to reassess their advertising business, but the monetization has always been a problem for Snap, even though they've got 383 million daily active users. That's a 15% gain year over year, but we're seeing some slower trends. But somebody's taken a shot here to the upside. Look at the size on this June 10 calls. Over 125,000 of these calls were bought today, Oliver, on that strike. Average debit of about 40 cents, so that break even of $10.40 over the next 46 days. That's 20% above the current share price in there. Now, on a dollar basis, it's not that big of a move, but on a percentage basis, it's pretty significant. But yeah, somebody's flowing into these June 10s, expecting that we're going to see a rebound here in Snap shares.
Okay. All right, Bold. Let's see if it works out.
Sell off into close
right now,
pretty
just,
unlikely with the SPY to ever happen.
The year-to-date low, or the one-year low rather. So I mean, we're just really on the brink here. This thing gets back below $8.
Yeah.
Oof, gonna be brutal. All right, last one you got, Marvell.
Yeah.
Chips are okay today, so I guess I can see this one catching a little bit of attention.
Yeah, and you've got AMD earnings tomorrow, Qualcomm on Wednesday. I think those are going to be catalysts. And maybe somebody playing those results without actually playing them by using Marvell. I mean, this stock is down or up about 8% this year. It's lagged the sector pretty significantly, up over 1% today, but off 31% from year ago levels. You see that just above $40 a share now. And they saw weaker demand through their last quarter due to customer inventory correction cycles. So that supply chain issues was initially, in 2022 a problem. Now it's an inventory glut. That's been the story with this one. But I think somebody's setting up for maybe an earnings beat in AMD, Qualcomm, some of the other chip names that report this week, because Marvell doesn't report until the 25th of May. Saw traders buying really short-term May 5th weekly options, 7,500 of the 41 strike calls, average debit of only 45 cents on those. So that break even of 41.45 over the next 4 days. It's only about 3% above the current share price in there. So maybe somebody using Marvell, because if we see good results out of AMD,
out of Qualcomm.
Whoa, look at that candle on BBY.
Chip names take off. Marvell's probably going to be in
Wow.
that discussion here.
Little VWAP candle
so
there,
somebody
okay.
buying some cheap calls to the upside into the end of the week,
I like that.
hoping that it gets above 41.50.
All right. Okay. Pretty decent follow through here to the tech stuff.
We're just waiting for SPY to turn
bounce
around.
again at the low end of the range. So they're still just kind of going back and forth. All right. Thank you, Tom. Well, I appreciate it. We'll get an update here on some more of the airline space from Jenny in a moment.
Look, and it's
Then
kind
we're
of
gonna do
holding
some
too.
trading. Stick around. We got 20 minutes until the bell. Stocks turn red. A little sell-off in Bitcoin, but some solid news for investors of American. Shares rallying up 2% today. We'll tell you about the pilot situation when we come back.
Watchlist can help you keep track of securities you're interested in. To add a watch list to the left
Well,
sidebar,
here's our squeeze. Hope you guys are enjoying it. Puts on tinfoil hat. And that's it. I like my flip on the ES there. Have a little RSI divergence here on the 5-minute. Cross my fingers for that last 10 minutes of pump. BBY is playing along. We've got volume there too. I got 40 to get more. Squeezed where we started the day. Alright, you don't like it tainted? Nah. I say what I've always thought of that. It's like buy on close or sell on close orders. So, you know, people have orders or funds or firms or whatever that just buy or sell on close. So you see a lot of those kind of facilitate in the last, whatever, 10 minutes, last minute, last second. The jinxing. Don't worry, I didn't buy here. with the U copy T8. There's not like, I mean, yeah, with TA I try and keep it very, very simple. I don't go crazy on stuff, so I mean, there's not a whole lot of TA until we have some upside momentum. Without upside momentum, I'm not seeing anything. You can look at fib levels and retracements, but it's all kind of worthless until we have the stock is heavily manipulated and it's just moving on the manipulation and then algos with news that comes out. So, but actually I have been on there. uCopy wasn't on, but yeah, I can go on again. It was kind of I was on when Mooncake or someone was on and he just wanted to keep talking, so it was kind of just I was just talking with him, which was fine. But yeah, they didn't quite understand options. I was kind of explaining it a little bit. He was just so convinced we're gonna have a gamma squeeze like last OPEX. I'm like, probably not. It's most likely we're gonna stay below that 50 cents because of all the open interest and the potential for a gamma squeeze. But yeah, that's what got some of our Discord into there. I know some of you guys watched it anyways, but there's definitely some migration of the Happy Money crew over to PP. I think from that. Pretty funny. Reveal yourself! We're getting that last 10 minute pump on SPY. This is beautiful, I guess. I need to play it more often. OTC heavily manipulated? No, actually, not necessarily. I'm not too sure, but I know on OTC, I think there's a lot less regulation, and I don't know if there's like dark pools and all that kind of trading on there. I think it's all basically lit, for lack of a better term. But I really don't know a whole lot about OTC, so I just see stocks on there that'll go up, 1,300% or 10,000%. But that's because they're trading at fractions of a penny, and so if they move the decimal place over one, it's 1,000%. Want to get wild? Some would say, gonna get nuts. 25 and 50 areas of peaked interest when reversing. Yeah, his show is entertaining. Yeah, I know Ace. I've watched some of the recaps. You're well known around these parts.
Look at the potential relationship between bonds and crude. I guess you would argue then if
all right, there's 10 minutes for Gazi to see it.
Slows this economy down, crude pays the price for it.
That little poppy pop there. BBY is holding up here, actually. Got a bull flag and got close to VWAP. Not bad. Look at that. It's only down actually 2%. I think I'll move just over VWAP and we would actually have a green day on Bed Bath. Huh. Let go, SPY. Where'd that go? We've got RSI divergences here on the hourly. You want to see some bullish TA. But that
peanut butter on my shirt.
Oh, peanut butter. But that's, price action, outweighs that, and so, I mean, I like divergences, but as it just sells off, it's a whole lot. Dang, SPY, come on. That's not the way. Get on. Okay, I put a stop limit. I'm not going to take a loss on this display, so hopefully it doesn't hit my trigger. It's about to, maybe. Looking for a move to VWAP at least. Oh, it triggered it. I'm out. Wow. I think it could still happen, but I'll just watch it. Data from the Goonies. Yeah, see, just totally triggered it. Oh well. Last 10 minutes is so volatile. Faith for tomorrow and it'll break your soul. One-day short squeeze. We've seen it. Rocket did like a day short squeeze pretty much.
A modest blip up.
HKD does those like every
in
month.
Employment and prices, which could raise some concerns, but I think this is pretty minor given everything else that's coming up later in the week between the Fed meeting and the unemployment report. Those are going to be the primary reports that I think the market watches.
When we get the top line sub 50 for ISM, but then prices paid above 50, should we be starting to embrace the stagflation word here, Kevin Gordon? I saw it in the headline of a Bloomberg article today, and I know for a fact they don't like to use that word over there.
Well, it depends on how you define stagflation. I mean, if you're going to go with the, maybe traditional definition that was kind of born in the 70s and the 80s of high unemployment combined with high inflation, I think it's pretty clear that we're, at least for now, pretty far from that. If you're going to maybe talk about a slower growth scenario with a little bit elevated inflation, I don't know if 1 month of an ISM survey is gonna give the tell. But I think the other thing that's important to keep in mind with the ISM data this morning is that you still had a continued downtrend in supplier deliveries. So you're not getting that same stress that you had seen in the depths of the pandemic and the goods and the shipping crisis, where prices paid and supplier deliveries were both out of control. So I think that divergence for now is healthy.
We did see a lot of short squeezes all happening around GME.
Come back up to a level, at which the Fed is uncomfortable. But at the same time, we came down from around 90 and change to close to 55. So I still call that an improvement, barring some kind of major surprise back up to the upside again.
5 minutes.
Okay. The tone from Mr. Powell and team, do you think, Kathy, the breakdown in First Republic Bank changes their priorities at all, or how will they balance addressing the financial sector with the economic situation?
That's a great question, and I think we'll have to wait and see. So, it seems as if another rate hike is a foregone
a week,
conclusion,
10 minutes of bounce.
And they haven't signaled
Nothing
anything
like
to
yesterday's.
the contrary,
Holy
so I
smokes.
guess we'll accept
That was 0.3% we
the
had.
goal of getting the Fed funds rate above 5% will be reached at this meeting. The bigger question is, what will they signal going forward? Will they signal that they're on hold for the time being, or will they signal that there's still further tightening that needs to be done? And that's going to be very crucial. I'm also watching to see if there'll be any dissenting votes. There's a there's a good chance that at least one or two members are going
We're looking
to
for
say,
BY's
we're
news
in the midst
between
of a bit of a
now
financial meltdown here
8
in the
o'clock
banking
tomorrow
sector.
night.
Maybe we should pause a
Some
moment
kind of news.
instead of moving quickly. But
The price action
that
and chart
remains to
will
be
follow.
seen. And then I think they do
A
have
move
to digest
without news.
the instability in the financial markets, and not just the markets, but the
doesn't mean a whole
financial
lot.
system. That's a result of the rapid rise in rates that they've put in place to date, and all the different measures, QT, et cetera. This is really tightening credit conditions, and I think that at some stage of the game, presumably sooner rather than later, the Fed has to acknowledge that this is a risk to the economy.
When you look at risk assets right now, Kevin, obviously we're in the index level, pretty elevated on the year to date on the 1 year basis. But a lot of that happening from some heavy lifting. Where do earnings fit into this conversation as far as the health of the economy? What do those data tell us?
For you.
Well, for us, I mean, you just look at the
now.
earnings data in aggregate, and path of least resistance still looks to be to the downside. I think the more concerning, not really from a Q1 perspective, which it's still good to as we get the results in, earnings have generally been better than expected. That's not to say that they're not in negative territory, which they still are. But I think forward looking, the fact that you still have consensus now looking for an uptick in earnings for calendar year 2023 relative to 2022, and then even within that, in the sectors that have been dominating this year, one of them being tech. 6 months ago, the estimate for 2023 for the tech sector's earnings were closer to 10%. As of today, that estimate is now in negative territory. It's down 1%. So I think you have to start to look at some of the divergences that we're seeing between fundamentals and actual price change, and the fact that a very small number of companies, as you were mentioning, Oliver, have been driving the gains this year. So I don't think an environment like that, where you have what's being driven at the top line headline index level is just a few names, and then even after that, the better breadth statistics have been in traditional defensives like staples. I don't think that combination can kind of last for that long. I think at some point you get to thin air.
Okay, interesting. And we still got a lot of earnings coming up here, so some of the giants behind us, but should be a pretty busy week. Kathy, thought real fast, kind of for maybe a little short term, but just kind of thinking about how this bond market is going to weigh risk of something breaking versus sticky inflation. If there's something more hawkish than expected tomorrow on the long end of the Treasury curve, would that make yields go up, or does it make them go down? Because after this bank scare, does that complicate the analysis at all?
Yeah, I think what we've seen is the stronger the Fed reaction function, the more we've seen the yield curve invert, and the more it tends to cap long-term rates. So I had a big sell-off in the bond market today, as I think some of the concerns were eased about the measures that were taken on the banking sector.
My calls.
And we're also going to have a lot of supply. We've got the debt ceiling situation holding back on Treasury issuance at the long end, and we know that that's going to just get pushed forward into the third quarter. So I think the market's setting up for that. But it is a push-pull between sticky inflation and, the Fed, the risk of recession. I think that that's going to keep us in a pretty volatile range here for the time being.
All right. Thank you very much, guys. Great chat and excellent setup here for the major themes this week on earnings and the Fed. And, of course, a little debt ceiling drama, too. Kevin Gordon, Kathy Jones. Coming up, we'll get to some earnings this afternoon.
You've got 10 seconds of order book.
Aristonet and XPI.
Ready?
Important companies, maybe not the biggest, but key players in their respective
industries. Sorry.
Stocks
I was just
on the
going to
day
close
effectively.
it. That's the bell. Thank you guys for the support. Thank you for joining today. Give you some hang out for a minute, but appreciate the support regardless. Thank you for your thumbs up. Got 41 of them. Well done. Thank you, Ace Ventura, for your dono, as well as you, Mark Tank. And someone gifted me memberships today. Thank you for those as well. Didn't see him. Didn't hear him. I don't think you did. Fake. Got after hours there. I just leave stream on 24/7 on BBBY with the order book. Time now. Yep, we'll see what tomorrow brings. Looking for news after hours. But it is strange. I mean, we looked over this list, like, so there's different, this is what, stock analysis? Stockanalysis.com. There's a couple different sites. There's a NASDAQ one too. NASDAQ one didn't show it. Actions. acquisition. Maybe it's under bankruptcy. Oh, it's even the ticker. Not even showing up on this one at all. So this covers everything. His actions, acquisitions, bankruptcy, delisting. I guess we have other pages. Alphabetical. Bees in here? Yeah, we have bees. Oh. I do? Yeah, it's not even in here. So not showing up anywhere on there. And then on the NASDAQ one, this is listingcenter.nasdaq.com. Non-compliant companies. So you would think just BY being under a share for, I guess, has it not been under $1 for 90 days? Let me look at the guidelines. Match requirements 10 million, market cap, market value standard 50 million. We're over that, I think, still. I think all of this is still good. So bid price is where we fall below, under $1. You have to have 4 market makers. Interesting. Okay, now if you fall out of it, a little bit, yeah, come on there. These are all the fees that Ryan Cohen's talking about that BBY can get rid of, all the fees that are incurred when you're a publicly traded company. It is expensive. I don't know if we're gonna see it on here. I think it's 90 days, maybe it's 180 days, but I think it's 90 days under $1 to get a notice. But anyways, it's not on here at all for non-compliant, so I don't know how BY would not be non-compliant. Let me check the days. Going into chapter 11. Yes, I thought that made it non-compliant though. It broke $1, right? Yeah, when they announced reverse split. So no, yeah, we're well within the time frame of that. As far as a notice though, they could have sent a notice. Trading days or calendar? 42 days, 29 trading days. WWE. Sorry. Ding ding ding. You probably should put headphones on, mate. Yeah, notice to chapter 11. What I'm thinking, but it's not anywhere. Even them being out of compliance. So if it's the share price, I don't know if they get notified before the 90 days. Or if they have 90 days. They have time. So what's happening on Wednesday? And why is it happening? Is this a voluntary delisting? Just like their chapter 11? Are they pulling themselves off of the market? Off of NASDAQ? There's the S1. Where do we see that they are being delisted? Did they file something that said that? Is it somewhere in here? I don't think where I even saw that. What? Let me look at the chart. That's how I look at everything. That was the last bit of catalyst for news drop. That was this one. This was the out of compliance. 425, 426. Is it AK? Notice of delisting or failure to satisfy a continued listing rule for listing. As previously disclosed on April 23rd, BBBY, a certain of its direct and indirect subsidiaries, filed a voluntary petition. Okay, yeah, voluntary Chapter 11 under Chapter 11 of the Bankruptcy Code, the U.S. Bankruptcy Code for District Attorney. The caption: Chapter 11 cases are being jointly administered under the caption in re Bed Bath et al. Cases. Yes, that's where we listened to it. On April 24th, the company received written notice, the delisting notice, the day after, from the Listing Qualifications Department of the NASDAQ stock, notifying the company that as a result of the Chapter 11 cases and in accordance with NASDAQ listing rules, NASDAQ has determined that the company common stock will be delisted from NASDAQ. The company does not intend to appeal this determination. Trading of the company's common stock will be suspended at the opening business of May 3rd. Okay. But we're not seeing that. They say they got it, but we... What the heck? They say they received it, but... Isn't it public somewhere? I don't know. Yeah, not sure. Weird. But if you guys know, we'll see you on Discord. I don't have it linked, but if you're not on Discord, here is the link. Free to join, free to chat, come hang out. The balloon. There's another balloon? The Chinese balloon? National Bay Day? What the heck? This is so sus. I mean, yeah, this says non-compliant companies. Or is this not showing me notification date here? Oh, I think when I drop it down, maybe. Ah, XXII, not compliant, man. Yeah, I mean, this is from way back. Maybe it's not been enough time. That's probably what it is. It won't show up on the... Wait, what? That doesn't make sense. I don't know. Really don't know, but if you guys have any answers, Twitter, Discord is a place to find me and the rest of the community. I'd love it the project launch anytime soon. Delisting list. I mean, this is the official one from NASDAQ. So listingcenter.nasdaq. I did look at some third-party ones like this stock analysis. Stockanalysis.com. You can see delisted, listed, action. You look under action, so any stock doing any action that requires a filing, I think, more or less. And BBBY is not even under here. Like, they don't even. There's nothing. So, kind of strange. I don't. Yeah. If they have several for different things. Maybe. I mean, I've looked at NASDAQ delisting list, and this is the non-compliant companies. So that's literally what they fall under according to the 8K from Bed Bath & Beyond. Have we received written notice, the delisting notice from the listing qualifications department. So they're not compliant. When you look at the listing qualifications department, right, several different reasons. So that's why I looked at that other website, and it doesn't matter the reason that they're being delisted. This would show everything. And what we have on here are stocks that are getting delisted for all sorts of reasons. Acquisition, delisted, stock splits under here, simple change, bankruptcy. You know, this covers everything. Any sort of action. And I'll go alphabetical. There's nothing for BBBY. Yours in here. I mean, I recognize half these stocks. I'm invested in half of these. Not really. BBIG spinoff. OCTO spun off from BBIG. Stock split. They have 90 days. That's just for the under the dollar rule. So they have to be over $1 for at least one day in the 90 days, or they're out of compliance. They're getting delisted because they filed for Chapter 11. Right here. April 24th, the company received written notice from the Delisting Qualifications Department of the NASDAQ stock market, notifying the company that as a result of the Chapter 11 cases and in accordance with NASDAQ listing rules, NASDAQ has determined that the company's common stock will be delisted from NASDAQ. The company does not intend to appeal this determination. So, if it was because it was under $1 and they wanted to appeal it, they could appeal it and probably get an extension, but it's nothing like that. It's from Chapter 11, and the 90 days doesn't apply at all. They got that notice a day after they filed. They filed on 23rd, Chapter 11. 24th, they got the notice. Unless this is fake. Like, this is from their website. Yeah, Bed Bath & Beyond's website, so I don't know. Weird, but anyways, thanks guys. We will see you on Discord. With that, sub up, like up, comment down. Happy money sticks around. Follow us on Twitter at Happy Money YT. And up on our Discord. Did I put that in there? There it is. There's our Discord. Let's look at post market hours. Move in. EFI. Thanks, Christopher. Thanks, Jan. Thanks, Tainted. Thanks, Dink. Mister. We will see you guys later.